Thank you. Yes, guys, happy morning. How are you all? Fine? Okay. How was your Sunday? Sir, what Sunday? You only died with us for half a day? Yes. Okay, guys, let's quickly revise what we did yesterday. We started off with actual cost. So, actual cost is an interesting concept, 43.1. In that we saw purchase price. In that I have to add, what all should I subtract? GST if ITC is availed. Then subsidy. Then cash or other mode if it is more than 10,000. Then forex, decrease in liability. Then add forex, increase in liability. Then other things to be added is interest on loan till the date it is put to use. Freight, insurance, installation expenses, everything to be added. So ultimately what you get is the actual cost. So we saw all these things. And GST, if ITC is availed only, you should subtract, otherwise no. Subsidy, cash, forex, all that we saw. Cash payment, if it is more than 10,000, if it is revenue expenditure, it is disallowed. Capital expenditure is subtract from the cost of asset. Revenue expenditure disallowed under 40A3. When we see 40A3, we will come to know. So any cash which is more than 10,000 will not come even in the asset, it will not come even in a revenue expenditure, 40A3. Then we saw what do you mean by otherwise than account pay check. Means even if it is a cross check, it is not allowed. Interest on loan only till the date it is put to use. Then we saw various explanations. One of the explanations was, it's not explanation 1, explanation number is different, but you need not remember the explanation number. But what we did first was, if I sell an asset to one person at a enhanced cost, so that I will convert black money to white money, that is the main intention, that's why I will sell it at enhanced cost. Then the lawmaker says, what will be the actual cost is not exactly what you bought it for, it will be according to the assessing officer, along with the permission of the joint commissioner. Second golmaal item we saw was your asset, you repurchase it after a series of transactions. It goes through so many people and anyway comes back to you. So when it comes back to you, what is the thing? So it says actual cost would be what? WDV of the asset at the time of transfer and or price paid for reacquisition, whichever is less. Third one, pollution control equipment, that case we saw, whereby you have sold the asset and then leased back. So basically I have purchased the asset and leased back to the same company at a whatever cost. So there they say that whatever you purchased it for, in this example WDV, whatever you purchased it for, that purchase price is immaterial. The WDV of that company, whatever that asset in that company, that will be relevant. So in this case it was nil. So even though you repurchased it for 2 crore, what should you take? Nil. Then we saw stock in trade converted to capital asset. When stock in trade is converted to capital asset, what will happen? The FMV as on the date of conversion will be the PGBP, and the actual cost also will be the same. But the tax will be paid on the amount PGBP, that is the amount FMV minus the cost. But ultimately in the actual cost, how much depreciation you will claim? You will claim on the FMV. Yeah, that's what we saw. Then building is used for any other purpose. Mind you, not any other asset, only building. Building is used for other purpose. Today you are bringing it into business. So they say that the cost of the building less notional depreciation. Means it is the depreciation assuming that asset was already there with me from the beginning in business. But at what rate? Rate in force on that date. Which date? The date I am bringing it into business. That's what it comes. Rate as on the date of bringing it into business, or is it the relevant assessment year date? No, rate of bringing it into business. Asset acquired by way of will, gift or inheritance. So cost to previous owner would be what is taken if previous owner is used for personal purposes. If previous owner is used for business purposes, then cost to previous owner minus depreciation actually allowed to him. If asset is previously used for scientific research on which 100% deduction is already allowed, then actual cost when it is brought into normal business, that will be nil, because it's already fully deduction is taken there. Asset brought into India by a non-resident, in these cases only you will take any asset by the way, Purchase price minus notional depreciation at the rates in force. On that date and all is not there. At the rates in force. Rates in force means what? It is the relevant assessment year dates. It is not on that date. You need not take the date of bringing it into business. So next we saw holding subsidiary relationship. Two important conditions must be there. Transferee only must be an Indian company, and there should be a 100% wholly owned subsidiary. Then only it will come. The company in India may be holding or subsidiary, I don't care. I just said the transferee must be an Indian company. Transferee can be an holding or subsidiary, I don't care. But either way, if the subsidiary company is involved, that should be a 100% subsidiary. Which means that whatever WDV was in the other transferor company, same WDV will come in the transferee company. That will be the actual cost. WDV of the transferor company will be the actual cost of the transferee company. Right? That is what we saw. Same concept with amalgamation, demerger, amalgamation, merger, absorption, demerger, everything same concept. WDV of the amalgamating company or the transferor company will be the actual cost of the amalgamated company, but the amalgamated company must be an Indian company. This is what we saw. Similarly, demerged company also, same thing. WDV of the demerged company must be the actual cost of the resulting company. Actual cost of resulting company. So these are the things that we have been seeing in this particular thing. So it's very simple. So now we can check the sale of asset, which is a very easy one. All this we have seen, no problem. Amalgamation. We saw a couple of questions also to make you understand that amalgamation thing. Right. Now the concept of sale of asset. Now, guys, in the entire block, no, we have the entire block of assets. Yeah. So let us say in the block sum, 10 assets will be there in the block. You will add 2 more assets. 10 assets worth 10 lakh rupees. You will add 2 more assets worth 1 lakh rupees. Now totally 12 assets are there, 11 lakh is the scene. Now my question is, if we sell off around 10 assets for 10 lakh 50,000, what will be left is 50,000 rupees and 2 assets. Can I still claim WDV on this next year? Obviously yes. WDV is not nil, thankfully. But what would your answer be if in this example 10 assets are sold for 11 lakh 50,000? It is possible that you can sell 10 assets, definitely, but you can sell it for 11 lakh 50,000. It is also possible. Unfortunately, can WDV be negative? No, WDV can never be negative. So WDV at best should be nil. WDV should be nil. So can you claim depreciation next year? No. But guys, here the asset value was 11 lakh. You sold it for 11 lakh 50,000. 50,000 is the extra amount that you are taking. Is this capital gain or is this PGBP? Yes. So guys, basically, if you want to claim WDV, okay, so in this example, 50,000 is extra that I have earned. Nirmala madam will tax this for sure. She will tax this under income from capital gain. One more example, on the other hand, instead of 10 assets, 12 assets, 10 assets, 12 also is sold. So here it will be 0. Asset, number of asset is also 0, asset value is also negative, then also it will come capital gain. One more thing may happen. 12 assets may be sold, but it may be sold for, I'll make you right, don't worry, it may be sold for 10 lakh 50,000. What value is remaining? 50,000 asset is still remaining, but the assets only are not there. Will the block exist or the block will not exist? Block will not exist. So basically what I'm trying to tell is, if the block has to exist, two conditions must be there. Both the conditions should be fulfilled. Condition number one, at least one asset should be there here. Second condition, some value must be there. If no asset is there, no value is there, or if asset is there, no value is there, value is there, asset is not there, then will the block exist or block not exist? Block will not exist. For a block to exist, there should be an asset as well as value. There should be an asset as well as value. If both the conditions are satisfied, only then you can say that the block exists. Yes or no? So what are the two conditions for me to say that the block will exist? Yes, the amount must be positive and there should be at least one asset. If you think about it, see here, it is 50,000 is remaining here. What will I charge? Depreciation also I can't charge. Asset only is not there. So that will be a loss, direct loss. On the other hand, in this example, if there is a capital, there is a 50,000 extra, then that will be charged under income from capital gain. Income from capital gain, right? So I'll show you examples. You can write that down. So write down the next heading, guys. Section 50, sale of assets. Section 50, sale of asset. Section 50, sale of asset. So three scenarios. Full block is sold, by the way. Three scenarios. In this, full block is sold. Here block is not sold. Here value is all the three. I'll show you. See, three columns you can make. Opening WDV 6 lakh, 2 lakh. Actual cost added is 2 lakh. Total is 8 lakh. Then sale is 8 lakh. What is the WDV of depreciation? Nil. And it is eventually, here it is sold for 9 lakh. Selling price, everywhere, no, selling price is 9 lakh 50. Selling price is 9 lakh. In the first case, selling price is 9 lakh 50. I have written it already. Selling price of the asset is 9 lakh 50. Here also selling price is 9 lakh 50. Here selling price is 7 lakh. So explain, then you can copy. See, opening WDV 6 lakh. How many assets are there? 5. Actual cost of asset added 2 lakh. How many assets were added? 2. Overall 8 lakh. How many assets are there? 7. Now all 7 assets were sold for 8 lakh, for 9 lakh 50,000 rupees. So I told you block can never be negative. So I can only take to what extent? To the extent of the WDV. So 8 lakh I should take and make it nil and make it nil. That extra 1 lakh 50,000 is what? Capital gain. That extra 1 lakh 50,000, that 1 lakh 50,000 will be a capital gain. Second example, 6 lakh is there, number of assets 5. Addition 2 lakh, number of assets 2. Totally 8 lakh, number of assets 7. 7 assets were sold, but for how much money? 7 lakh. What was the balance left? 1 lakh. What are the assets left? 0. So selling price will be what? 7 lakh. Selling price I told you, no, 7 lakh. So this 1 lakh asset, what will you do? It is a dead loss. Nothing can be done. It's very, very stupid. How do I tax plan for this, guys? 1 lakh asset is there, 0 assets, but 1 lakh value is there. How do I do tax planning so that depreciation can continue? How do I do tax planning so that depreciation can continue? Yes, I can add one more asset. 5,000 rupees asset I can add. Think about it. I can add an asset for 100 rupees, yes or no? Yes, I can add. Or 5,000 rupees, 10,000 rupees, one small asset you add, the value will now become 1,10,000. That's the beauty of block concept. There is no single asset method. I will add one asset in the block, it will become like the entire block. So even though I added only 5,000 rupees worth of asset, the block value will now be 1,05,000. Can I claim depreciation on that? Yes. Simple. So in the second example, 1 lakh, nil. Selling price 7 lakh. Third one, 6 lakh, 5 assets, 2 lakh added, 2 assets, totally 8 lakh, 7 assets. 8 lakh is reduced. And because I sold it for 9 lakh 50. 4 assets, gone. So ultimately what is it? 0. And 3 assets are still remaining. What is the selling price? 9,50,000. So in this case, guys, assets are remaining. And of course, for 1,50,000, it is a capital gain, that nothing can be done. But assets are remaining, nothing can be done. There will be no depreciation from the future. So basically, in the first and the last one, I mean, all the three sections, the block will cease to exist. So if the block has to continue, two conditions have to be satisfied. What are the two conditions? There has to be some value and there has to be at least one asset, because block can never be negative. If sale value is greater than the block, then block has to be nil. Block will continue if, as I told you, two conditions. There should be some value in the WDV plus at least one asset in the block. Understood? One asset in the block. Copy, guys. Everyone understood, guys, this concept? Yes. This is called section 50, sale of asset. Section 50, sale of asset. I explained the concept. You can just copy and revise. While writing down, please revise again. The reason why I will not make you dictate in some cases, make you write in some cases, you can revise off now only while writing. So while writing blindly, don't copy. Please revise and copy. Are we done writing? Okay. Block can never be negative. If sale value is greater than block, block will always be nil. And block will continue if two conditions are there. One, some value should be there in WDV and at least one asset in the block. Done. So basically in the first case, WDV is also not there, asset is also not there. So there is no, what do you say, depreciation. In the second case, WDV is there, but what is not there? Asset is not there. In the third case, asset is there, WDV is not there. So when will actually there will be depreciation? Asset also should be there, WDV also should be there. So basically this is the scene. All the three put together, write down. In the first case, asset not there, WDV not there, depreciation won't come. Capital gain will come. Second case, asset is not there, WDV is there, depreciation will not come, capital gain. CG means capital gain. Third case, asset is there, WDV is not there, depreciation not there, CG will come. So in all the cases, ultimately, in the first case, capital gain. Second case, that 1 lakh is a dead loss, nothing can be done. Third case, again capital gain. What doubt? Do you have a doubt? Which one? Second case? Sale consideration, guys. Sale consideration. Sorry, it is called sale consideration. Sir, how it is consideration? Don't ask those questions. It is consideration. Correct? My handwriting is amazing. CONS, short form. It is called sale consideration. When I sell something, no, it's always called consideration. Sale consideration. Which one? Yes, I'll tell you that later. Last whatever is given no below, it's called STCG or STCL, short term capital gain or short term capital loss. Short term capital gain or short-term capital loss. So whenever from now if I tell STCG or STCL, it's always called short-term capital gain, short-term capital loss. Now guys, always no, if there is an extra amount like 1,50,000, it is always a short-term capital gain. Guys, I want to tell you one thing. There are two types of capital gain. One is called long-term, one is called short-term. If the asset is there for more than 2 years, generally it is long-term. If the asset is there for more than 1 year, it is called, less than 1 year, it is called short-term. In some cases 1 year, some cases 2 years. Like less than 2 years short-term, more than 2 years long-term. Less than 1 year short-term, more than 1 year long-term. Depends on what type of asset. So all these assets, let us assume, simply for the argument's sake, 2 years. If it is less than 2 years, short term, more than 2 years, long term. My question to you is, these assets are there for 15 years, 20 years, 10 years, 8 years, etc. There are some assets also which are just bought 6 months ago and all those things. In a block of asset, I already told you, asset will lose its significance. There is no asset which came first, which came later, I don't know. Only when you are selling it, you will check all those things. My question to you is, in the block, there will be a mixture of long-term assets and short-term assets. When you are selling it like this, 1,50,000, will it be short-term or will it be long-term is the question. What should I see? Should I see the asset which is being sold, how long it was held for, or should I just make it either long-term or either short-term? What should I do? This was a very important question because some assets are there, 8 years old, it is sold now. Some asset was just about 6 months old. So should I do asset by asset or should I do block? Obviously I should do block. So this was a question which was raised to the Finance Ministry. Ma'am, what should I take as the period of holding of these assets? Should I take it as 1 year, more than 2 years, long term, short term? And if there is a gain, is it long term gain or short term gain? What should I do? This was a valid question raised to the department. They came out with a very wonderful logic. Long term capital gain rate is 12.5%. Long term capital gain rate is 12.5%. Short-term capital gain rate is 20%. Correct? In some cases 30% also. That is your normal rates. Some cases 20%, some cases normal 30%. Now tell me, Nirmala madam wants you to pay high tax or low tax? High tax. And she gave a logic. You have already claimed depreciation all these years. You have taken super benefit. Now when you are selling it and making some extra profit, there also if you want 12.5%, then it is not fair. So she came out with one dialogue. In the sale of assets concept section 50, the assets may be held for long term, short term, I don't care. But when the assets are being sold like this, there's 1,50,000 and there's 1,50,000, it will always be deemed to be short term or long term? Short term. Deemed. She made one assumption. It's always deemed to be short term. What was the logic behind that? Because you have already claimed depreciation. Hence, I will tax high or tax low? Tax high. That's the only logic of that. Otherwise, it doesn't make any sense. You can come to me and say, sir, all the assets were purchased 5 years ago, sir. Isn't it long term? There was no asset which was bought new. Everything was 5 years old. Then your logic is valid. I should say, yeah, correct, it is long term. But Nirmala madam says, no, deemed to be short term. So under section 50, whatever goes, no, section 50 is this only, sale of assets. Sale of assets in what? Sale of assets in PGBP. Section 50 is not even a PGBP question because section 50 comes under capital gain. PGBP ends in section 44, ADA, 44 DDB, there only it ends. But I am seeing section 50 now, I am seeing capital gain chapter, this one section alone. It is deemed to be short term or long term? Short term. Logic I told you already. So write down, if WDV creates a capital gain or capital loss, for example, in example number 1 and 3, it is capital gain. Example 2, it is loss. It is always short term irrespective of the period of holding. I explained the logic already. It is always short term. It is always short term. Right down. It is always short term irrespective of the period of holding. Are we done? Yes, it's always short term. So that is regarding sale of assets, section 50. Next, write down heading, guys. Assets partly used for business, partly used for personal purposes. It is also possible, no? Assets partly used for business, partly used for personal purpose. For example, car. Car I sometimes use for personal purpose, sometimes use for business purpose. So should I sit and track how much percentage, or will the assessing officer decide? Yeah, if he feels that you are using it a lot for personal purposes, he will decide a proportionate amount to be debited as a depreciation. Write down next one. Assets partly used for business, partly used for personal purpose. Asset partly used for business, partly used for personal purpose. You can say proportionate depreciation is allowed. Proportionate depreciation is allowed. Proportionate depreciation is allowed as per assessing officer. Proportionate depreciation is allowed as per assessing officer. Proportionate depreciation is allowed as per whom? AO. As per assessing, he will decide the rate and all those things. So if you see the notes, guys, we have done all these things. Types of depreciation was done. Did you read the notes? Yeah, okay. So actual cost also we did, everything is easy. Once you read, study the class, whatever we have done, then you read, it becomes very easy. Then, yeah, additional depreciation, we saw proportionate, that's what's the proportionate depreciation. In case of amalgamation, demerger, etc. Then partly used for business, partly used for personal purpose also, the assessing officer will decide what part should be for remuneration, what part should be for other thing. This you read now. 7.21 Sale of assets by power sector undertaking. Guys, in power sector undertaking, which is using which method? Straight line method. Which is using WDV method, already we saw, section 50. Anything that uses WDV, section 50 we just saw. For the block to exist, there should be one asset at least, and there should be some value. But if it's a straight line method, asset by asset getting purchased, asset by asset getting sold. Guys, we have already discussed this in the single asset method. If the asset is sold at a loss, it is called terminal depreciation. If asset is sold at a profit, it is called balancing charge. I told you that day there is a reason why I am doing it. That is because to understand sale of asset by power generating unit. Sale of asset by power generating unit. You see now, first one. Sale of asset under different scenarios. Do one thing, you read it and then see the example. And then you ask me if you have any doubt. Because I have already done this, please read, no problem. 7.21, fully you read this full chart. And the example also I have given. Any doubt, even if it is 0.0001% doubt also, you ask me. But first try and read it. It's very easy. We have already done this, that's why. With examples is there below. So read the example along with the case. Case 1, case 2, case 3. Any doubt, please feel free to ask me, guys. No hesitation. But please read. Take 2-3 minutes, finish it off. This is done. Page 7.22 you go. Read this 7.21 only you read. Sale of asset with all the examples. It takes 3 minutes, that's all. Along with the summary. Summary, there is some mistake here. Wherever there is R, make it into cross. Wherever there is A, make it into tick. It is that font style was not changed, so that's why it is coming like that. Wherever it is red R, make it into cross. Wherever there is green A, make it into tick. That's all. Till here, you finish it off. Take 2-3 minutes, finish it off. Then we will start off with brand new scientific research and all those things now. So that is the concept. Already we have done it in different examples. Here also different. That's all. Just to give you an example. So ultimately, number of assets is what you need to check. Both the conditions must be satisfied. There should be number of assets, should be there at least one, and there should be some value. Both the conditions are there means then block will exist. Otherwise, block will no longer be there. Then it will become capital gain. And it is always short-term capital gain. Cool. So now let's go to these areas. Now the specialized areas comes. We have done 29, 30, 31, 32, 33, 34 anyway is not there in your syllabus, so you can leave it. Little bit here and there will come later, it's fine. Then 35. 35 is what? Scientific research. I was telling you, scientific research asset if you buy, full you can debit it to P&L account. Then there you have 35 AD. That is your specified business. Then you have 35D, that is preliminary expenses, like that. Then it will go to 36. 36 is your other expenses, like, insurance, bad debts, all those things. Then 37 is all general expenses. After that, 38, 39 and all is not there. Then 40 will come. In that 40 small a, then 40 capital A, 40 capital A2, 40 capital A3. 40 capital A3 already we have done. Expenses more than 10,000 rupees in cash if you give, it is disallowed. That one. Then 40 A4, small sections. And then you have your deemed profit under 41. And then your tax audit, 44 AB. And then presumptive taxation, 44 ADA. Although that's it, over. That's all. PGBP is done. It's so easy. It's just that volume. I mean, all these things also will take definitely 10-15 hours. The next 2-3 days you have to finish it. It will take a lot of time. 15-20 hours it will take. It's not some, I can finish it off now only. I don't want to simply go fast. I'll never do that. Whatever it is, you should do it properly. But it's very easy, guys. It's very, very simple. Its volume is there, but you can easily understand. Okay, done? Yes, moving on. Write down the next heading, guys. Section 35, Scientific Research Expenditure. Section 35. Section 35. Scientific Research. Scientific research. So guys, there are 3 types. What is scientific research? Simple, I'll tell you, and then we can draw the chart, and then we can see the chart here also. This is a very important chart which I've given here. In this, very, very important, we'll see this in page 7.24. So what do you mean by scientific research? Basically anything which is in the knowledge extend the knowledge in the field of applied science, including agriculture, animal husbandry, fishery, or anything relating to scientific research. For example, Reliance can go with polyester research, cotton research, research in food also, whatever, anything which involves use of applied sciences is called scientific research. My question to you is, should you be a scientific research company to get this deduction? No. You can either be a scientific research company and do some in-house research, or you can actually donate it to a company which is doing scientific research. For example, Indian Institute of Science, Bangalore. Can you donate it to that? Yes. Can I donate it to the Indian Institute of Technology, which has their own research and development wing? Yes. The beauty of this section is you can actually do it on your own, or you can give it to somebody else. Will you get a deduction? Yes. If you are giving money to somebody else, then that donation, entire amount will be allowed to be debited to P&L account. But if you are doing in-house research, you have your scientists, you have your own asset, you have your building. Building is a capital asset, but still will you get the full amount to be debited to P&L account? Yes. Then the next question will come, sir, research has not begun yet. Research has begun yet, but the business has not started, because after research only business will happen. For example, AstraZeneca vaccine, COVID vaccine. COVID came, then the research began, 2-3 months. We had no clue what was happening. So 2-3 months there was research. Can you claim when the research only is happening but the business has not started, can you claim the expense? No. You can keep on adding up the expense. But when the sales begin, when the business begins, all those accumulated 3 years, can I use it now? Yes. Apart from that, it's an ongoing research. Ongoing research, can I keep on adding it? Yes. So there are 3 types of research here. One is in-house research. One more is donating to somebody. And third one is specifically for biotechnology companies and other manufacturing companies, their research. So 3 types of research is covered. One is in-house research, one is specific research for biotech and manufacturing companies, and third one is any company if they want to donate it to any research. KSA Advait, if they donate some money to any research also, we can claim that in our P&L account as debit to P&L account, any donation. But that is revenue expenditure. But what about capital? If I am doing in-house research, if I buy a building for scientific research worth 1 crore, that full 1 crore can be directly debited to P&L account. But that depends whether we have done started the business or not started the business. So there are 3 types, guys. Here, I'll just again, so you see, I'll give the gist of the story and then we can write down we can see the chart later. But what's the gist? First is what? In-house research. Second is what? Research by a specified company, that is called 35(2)(ab). What is specified company? I told you, that is manufacturing and biotech. Third one, KSA Advait, normal companies donating to research. So that contribution 100% allowed. Specified company 100% allowed. In-house research 100% allowed. You may ask me a question, sir, why all these 3? Everything you can combine and make it 100%. No. But there are some here and there differences, but most importantly it is given 3 separately, because when I was writing CA in 2012, they had different rates for different contribution. This section was the worst section to remember. I had skipped it and gone. Because in some cases it was 75% allowed, some cases 110% allowed, some cases 120% allowed, some cases 175% allowed, some cases 200% allowed. Means you spend 200 rupees, they will give deduction. Because they wanted more and more people to invest in scientific research. But in 2017-18, they removed everything. They made everything 100%. So no tension now. So that way you don't have to remember any rates. Everything, how much is allowed? 100%. Some cases 120, 130, 150, 200 and all was allowed. You spend 1 crore, they will give you 2 crore reduction. Crazy. But now everything is how much? 100%. But there are some minute differences between the two, you see. For in-house research, no. If you buy land, land is not covered. Only building is. Land is a non-depreciable asset, right? So if you buy land, there is no deduction. But if you buy building, deduction. All SECs are covered in in-house research. All SEC means what? Partnership firm, individual, HUF, company, trust, AOP, BOI, everything. And guys, pre-commencement expenses are also allowed. That chart is there in 7.24. What is pre-commencement expenses? I told you, before the business begins. AstraZeneca vaccine, some 5 months they did research. So before it begins, so if you see 2020, the vaccine came only towards the end. 2020, we didn't know what happened. Can you believe it's been almost half a decade? COVID, it feels like yesterday. It's been 5 years, crazy. So we did not even know what was it. Some virus, it seems, I will go out, will enjoy. Who knew, correct? So you think anyway, we didn't even take it seriously, right? But yeah, it turned the entire world around. So pre-commencement expenses is allowed but later. Now you see specified company. Guys, in specified company, no, land and building is not covered. It's the most important thing. What is specified company? It is only for a company, not for any other SSE. Which company? Two types of companies, biotech and manufacturing. A small secret, it was only available for biotech. That only made sense. Why will manufacturing company need this? That is anyway there in point number 1, no? Correct? But manufacturing fellows also wanted there to be included, so they inserted it later. All revenue expenditure is allowed. All capex means capital expenditure. Capital expenditure means what? If I buy a car, fully debited to P&L account. If I buy a machine, 1 crore, fully debited to P&L account. Except land and building. Land and building is not covered under 35 2AB. And what's the main difference? Here only company is covered. Here all SSEs are covered. Pre-commencement expenses here are allowed or not allowed? Not allowed. Pre-commencement expenses are not allowed. Lastly, contribution to others. This is KSA Advait or any company donating money to one more company who is doing scientific research. All SSEs are covered. It is only the approved associations. That association should have taken a approval from the government. For example, Indian Institute of Technology, some social and statistical research organizations, some hospital who is doing research, then Indian Institute of Technology, Indian Institute of Science. All these can be examples of what? Donation to others. Now it should be approved. So if I am donating to that people, no, I have to ensure that they are approved. Now one question they asked in the exam. I gave the donation on 1st April. But at the end of the year, 31st March of next year, that approval was withdrawn. I had already given to an organization which was approved as on 1st April. But next year, 31st March, the approval was removed. I have already donated 10 lakh rupees. Will I get the deduction or not? Nirmala madam will ask on the date of donation, was it approved or should it be approved throughout the year? Reverse question. On the day I gave the donation, it was not approved. But at the end of the year, they got approval. This was an exam question. So it went to the court also. They decided one thing. On the date of donation, that thing should be approved. By end of the year, if it is disapproved, no problem. You will get the donation because it should be which date? It should be on the date of donation. So if you see, approval to be checked only at the time of contribution, not later. At the time of contribution. This is one more question that they can ask, right? So we still haven't done what do you mean by pre-commencement expenses, and we still haven't done this chart. That is which chart? In-house research chart. For that I have to see page number 7.24. This we will see, but before that you can just copy this chart down. Important chart. What type of assets are covered? 1 second. Scientific research. Scientific research. 3 things are covered, guys. Here in 35, I will also scroll down later. Then we will see the chart together, 7.24. After you copy this down, we will see the chart. Write down, guys. Write down the chart. Section 35, scientific research. For in-house research, special chart of 7.24 we can see later. 7.24 chart we can see later. Copy. You can say see chart 7.24, which we will see immediately after you copy. When you are copying, please ensure you are studying and copying. That's the reason why I am allowing you time to do it. Because if you are writing along with me, you will not be concentrating on that. Now that you know it, please concentrate on that. That's a technique. That's why if you see, I mix it up. Some I dictate, some I write, some I show you, so that you can, these things once you write, it will be in your brains. You will not forget it. Understand and copy, not blind copying. Check the differences. In-house research, all SSEs. Specified company, only company. Contribution to others, all SSEs. Only approved institutions. And in in-house research, we have to see the chart whether capital expenditure and revenue expenditure is allowed. But specified company, only land and building not covered. All other things will be covered. Done? All of you? Yes. So guys, this is the scientific research part. Now here you write down, still further it is there, you see. One more point is there which you can write down. One is all revenue expenditure, all capex except land and building, last one. Pre-commencement expenses are not allowed. Pre-commencement expenses are not allowed. In the first case, pre-commencement expenses are allowed. In this case, pre-commencement expenses are not allowed. If you remember unabsorbed depreciation, how long can I carry it forward? Unabsorbed depreciation indefinitely. Okay. Normal loss, business loss 8 years. Unabsorbed depreciation indefinite. Similarly, you see here profit before capital expenditure 1000 crore. Capital expenditure 100%, that is in scientific research 1200 crore. Right? So profit before capital expenditure reduction, that is your scientific research reduction, is 1000 crore. Because of the capital expenditure, which is building, for example, 1200 crore I had spent. Unabsorbed capital expenditure 200 crore. Profit is there, but then I have to absorb the capital also. This treatment of, what do you say, unabsorbed capital expenditure is similar to unabsorbed depreciation. It can be carried forward indefinitely. And it be set off again, same like unabsorbed depreciation. It can be set off against anything except salary. It can be set off against anything except salary. So write this down, guys. You can make a full flower bracket here for entire thing and write this. Profit before capital expenditure. Sorry. Profit before capex 1000 crore, capex 100% 1200 crore, unabsorbed capex 200 crore, similar to unabsorbed depreciation, carried forward indefinitely. Done. So now guys, let's see that chart, 7.24 chart. Come back here, 7.2. This is for which one? In-house research. Did you write here? Unabsorbed depreciation, carried forward indefinitely, set off except salary. Means you can set it off against any other income except salary. Business loss is there, business income is there, or income from other sources there. Everything you can set off. No problem. Except what? Salary. Right? Similar to unabsorbed depreciation. So now let's see that chart under 7.24, guys. This chart is only for in-house research. And in this, what you will get? Pre-commencement expenditure also you will get. That's why we are doing this. In 35(2)(ab), that is your company, you will not get pre-commencement expense. Here you will get pre-commencement expense also. Check it out. Research prior to 3 years of commencement of business. So guys, you will get 3 years pre-commencement expenses. Before the business commenced, whatever research you do for 3 years, that you can claim deduction. But you will claim from which year? from the year in which the business commenced. You will accumulate everything. So let us say vaccine for example, in 2020 COVID broke out, in 2021 vaccine came. So 1 year they would be doing the research, and 2021 they started selling the vaccine. This 1 year, or maybe let's say they started in 2019 only, 2 years. Whatever they did the research for 2 years, they would have constructed buildings, they would have had some capital expenditure, revenue expenditure, everything you can add, and then it is allowed from which year though? From the year you commence business, that is 2021. Sir, but what about other expenses in 2021? Yeah, that also is taken. You see, research during business means AstraZeneca after 2021. Revenue expenditure, all expenses 100% deduction. Capital expenditure, land obviously no deduction. I told you land will not be covered under in-house research. Others, building, car, machinery, anything 100% deduction. That is research during business. But will you get all expenses when the business has not commenced only? AstraZeneca did scientific research in 2019 and 2020 when the business had not commenced. You are the finance minister. You are asking AstraZeneca to add all the revenue and capital expenditure. What all capital expenditure will you give? Will you give anything? Yes, capital expenditure, land anyway you will not give. Others, yeah, building is needed, machinery, everything is needed for the research, no? Yes. What about revenue expenditure? Will you give pizza party expenses? No. Correct. Will you give trip? 2019 they went for a trip. Will you take that? No. What will you take? Obviously only salary to employees. You will hire scientists, no? Only that you can take. And then guys, you will need some raw materials for your research. Only that you can accumulate and take, nothing else. So, purchase of raw materials, 100% deduction. Salary to employees, 100% deduction. Others, no deduction. This is one which case? Only in 2019 and 2020, pre-commencement expense. After the business began, party expenses allowed. Correct? Now, in which year is it allowed, guys? As I told you, it is allowed as a deduction in the year of commencement. So, 2019 and 2020 expenses I will accumulate and debit to P&L account in which year? 2021. So, in 2021-22, two types of expenses are debited. One is that current year's expense. Current year's revenue expense, current year's capital expense. Plus accumulated revenue expense, accumulated capital expense. Crazy. 4 types of expenses are added there. That is why in the first year, even though there is profit, the capital expenditure only is so huge that it will be unabsorbed capital expenditure. Now that also I can easily give across many years. So it's a benefit or not? Yes. This is only for in-house research. The other two are fine. Other is a specified company. Third one is I am donating to somebody. Can I donate some capital expenditure? Now, whatever money I give, that only will be debited to my P&L account. You see, for example, where SSE commences business on 28/11/2020 and all the scientific research related revenue capital incurred on or after 18/11/2020 as discussed above. Sorry, this should be 28 only. 28/11/2020 as discussed above shall be allowed as deduction. Further, any such expenditure incurred from 28/11/2017 to 27/11/2020, 3 years, shall also be allowed as a deduction in the year 2021. Capital expenditure means what, guys? Plant and machinery, building, vehicle, everything. I want to buy some vehicle for my scientists. That is also covered. Yes. Then you see the other things, you don't have to remember any of this. This is contribution to somebody else. I can contribute to Indian Institute of Technology, I can contribute to any research organization, scientific research, everything is 100%. So no need to study that, easiest. Done? Simple. Now, one more type of question that they'll ask in the exam is, before that, see. See, question number 22. Concept capsule. Montreal and Company donated amount of 5 lakh to Josephine University approved by central government. The university undertakes detailed statistical survey in the state of Tamil Nadu. Are they entitled? Yes. Donation to another entity? Yes. We'll answer to one above. In case Josephine undertakes scientific research notified by central government, you see, approved by central government under 35. Detailed statistical survey, yes. If statistical survey is not there, if it's doing other scientific research also, answer is yes. Ray and Sons, basically everything guys, scientific research, statistical research, social research, for everything you will get the deduction. Ray and Sons partnership firm contributes an amount of 20,000 for scientific research to Beyblade Limited, having main objects as scientific research approved by prescribed authority. Yes, any SSE can contribute. Donation of 2.5 lakh to approved research organ carrying on social science research unconnected with the company's business. I don't care. Where did I ever say it should be connected to company's business? Can be anything. 3 lakhs to recognized university for statistical research. Yes, covered. Drake and Company purchased machinery for in-house scientific research, 35 lakh. Yes, in-house research. Yes, capital expenditure except land, anything is allowed. Salaries were paid by Drake and Company to research staff for in-house research after commencement of business. Yes, after also allowed, before also allowed. Amount of 15 lakh paid to IIT Delhi for an approved scientific research, allowed. Capital expenditure including cost of acquisition of land, 5 lakh on scientific research by Alumelo and Company. In that land is not allowed. If it's some 20 lakhs which includes 5 lakh you subtract, 15 lakh is allowed. Simple, no? Yes, this is the scientific research part. This is another interesting question we will see. See this question 23. Following are the details furnished by Bingo Limited, engaged in the business of chemical products manufacturing. This will come under chemical products manufacturing, 35(2)(ab). In 35(2)(ab), land and building not covered. And it's only for company. Company is there. In-house training also. Tell me one thing guys, if the full amount is debited to P&L account, will you get depreciation? No. So you see in this, manufacturing and admin expenses is 105, of which 5 lakh is depreciation on research equipment. So it's not to be taken. So should I take 100 or 105? 100. I should take 100. Sales is 500 minus 100 I should do. I should not do 105. Then minus research and development in-house training. Research acquired during the year, yes. Remuneration to scientists, yes. Expenses for scientific research and development, yes. Then this is contribution to approved scientific research institution, yes, everything is covered. So 500 minus 100 minus 60 minus 10 minus 30 minus 10, that will be my income. What is the income? 290 is my income. How to present this answer? I mean, I just told you the basic how to do, but how to present, if they ask in the exam how to present this, how will you take? So here you should say, see there are 3 sections. Now you can just make it separate. One is sales for the year, then manufacturing and administration expenses, you can make it 100. And for that you can say, check note number 1. You should write a note. I always told you should write a note. You can take 100 and later you write a note. Less deduction for in-house training, these 3 you can say. Then one more deduction for contribution to approved scientific institution, 810. Overall, you will get how much? 290. And as a note, what will you write? In-house research, everything is covered except land, right? And then since you are in a manufacturing company, 35 to AB will come, except land and building, everything else is covered. And such company, if it is contributing to another organization also, 100% of that will be allowed. So ultimately answer will be 290. You just need to write the notes, that's all. Got it? Simple. One other type of, last type of question that can come in this exam for scientific research would be, what if a vehicle was bought for scientific research? Okay. Now vehicle, if it is bought for scientific research, let's say a vehicle worth 20 lakhs is bought. What will be the treatment? Full amount will be debited to P&L account. Next they will say one thing. If you shift it to non-scientific business, what will be the treatment? Second, without shifting, you will directly sell it off. What will be the treatment? The other one is easy. 20 lakh full I have debited to P&L account. Today I am selling that scientific research asset for 5 lakh in the market. Will 5 lakh be credited to P&L account as profit? Guys, when I buy the scientific research asset, what is the treatment? I will debit the full amount to P&L account. My question is, after 4-5 years of using it, I am discarding the asset. I am selling it off for 5 lakh. Question to you is 5 lakh my income? Yes, since I have debited the full 20 lakh, 5 lakh will be my income. So how much will I offer to income in that year? 5 lakh. Second question, instead of selling it off, I bring it into business now, non-scientific research business. Yes, very good. WDV will be nil. We just saw now in actual cost, WDV will be nil. So will it be added to the block of asset? Yes, then it will be forming part of the block, very simple. Tomorrow when the block ceases to exist, we just did now, section 50. As long as that asset is added in the block has some value, asset is there, then no problem, it will continue in the block. But if all the assets are sold, then it will be capital gain. Or if the assets are sold, but then when assets are still remaining, but it is sold for a higher amount, it will be again capital gain. Simple. So that is one more question. I'll show you here, you see, and you can copy it down later. Coolly see, I'll explain everything now one by one. After that you can write down. Scientific research, motor vehicle. Motor vehicle, first one. I will explain everything, please see. Used it for business later, that's fine. One more is what, guys? Sold off directly. Used for business later, what is the concept, guys? If it is used for business later, what is the concept? What will you do? Sorry, there's some problem. If it is used for business later, what will be the WDV, friends? Nil. Why? Already we have used for the business purpose, so WDV will be nil. You are 100% correct. I have already used, fully debited to P&L account, so yes. So if you see, if it is used for business later, means what? Non-scientific reason. What should I do? I will add it to the block. Yes or no? I'll add it to the block. What will be the WDV? Nil. I'll add it to the block. What will be the WDV? Nil. Later, after adding to the block, I will sell the asset. So guys, if at least one other asset is present in the block plus value is already existing in the block, then no capital gain. Depreciation to continue on the block of assets. Simple. But if all assets are sold along with scientific research asset, or if the value of the block becomes nil, if selling price is more than the WDV, in that example 8 lakh was the WDV, 9 lakh 50 I sold it for, 1 lakh 50 will be called what? Capital gain. Short term or long term? Short term. Isn't this clear? If you convert from scientific business to non-scientific business. But another example, instead of converting, I will sell it fully into outside, full outside. For example, cost of motor vehicle was 20 lakh. Deduction already allowed under section 35, 100%, 20 lakh. After use in the scientific research asset, I want to sell. Now you tell me, if it is sold for 5 lakh, what will be credited to P&L account? 5 lakh. If it is sold for 10 lakh, what will be credited to P&L account? 10 lakh. If it is sold for 15 lakh, 15 lakh. What if it is sold for 21 lakh? Yes, 20 lakh will be P&L account because 20 lakh has been debited, 20 lakh is credited. 1 lakh will be capital gain. Isn't it pure common sense? Whatever you only told, lawmaker has written it, that's all. It's very, I have debited my cost 20, I have recovered 21. How can 21 be PGBP? 20 only is PGBP. Whatever I have debited, I have credited. 1 is extra, that is called capital gain. That is capital gain, very simple. So, lawmaker, no, simply to confirm, not to confuse, but they have given one formula. What is the PGBP? Selling price or deduction allowed, whichever is less will be PGBP. I gave you an example, 20 lakh first, 5 lakh it is sold for. Deduction allowed, 20 lakh. Selling price, 5 lakh, whichever is less is PGBP. Next example I gave you, 10 lakh. Deduction allowed, 20 lakh. Amount that I received from the selling the scientific research asset, 10 lakh. 20 or 10, whichever is less. Which one? 10. Third example I gave you, deduction already allowed, 20 lakh. Asset is sold for 21 lakh. Deduction allowed, 20 lakh. Then selling price, 21 lakh. Whichever is less or more? Whichever is less. So how much will be PGBP? 20 lakh. Extra 1 lakh will be what? Capital gain. Extra 1 lakh will be capital gain. So simple provision. If the same example you see here, if an cost of motor vehicle was 20 lakh, deduction already allowed is 100% 20 lakh. If it is being sold for 15 lakh, that entire 15 lakh will be PGBP. But if it is sold for 25 lakh, 20 lakh will be PGBP, 25 minus 20, 5 lakh will be what? Capital gain. Understood? Everyone understood this? That's all. This they have not asked in the exam so much, but they can ask you in MCQ and all those things. So one is asset is directly sold, one more is asset is put in the block. Both are the same. And there is one small amendment with respect to 35, we will see that later. Come on guys, copy this full chart. I will make it full screen. So copy scientific research asset, revise and write, don't blindly copy, please revise and write. And there is one amendment we will see, small amendment is there which we will see. Copy it down. Try to revise and write down guys, it becomes very easy for you. Moving on. So in this scientific research, no, I told you there is one amendment. What is that amendment? There is no change in scientific research, but there are two regimes. One is old regime, one is new regime. Which is the new regime? The default regime. Now, if you are in the default regime, will you get the deduction under 35 is the question. That is the only amendment. Will you get the deduction under section 35 if you are in the default regime? That is the big question that we need to ask. So basically what they have done is, guys, they have told that is 35, 35 2AA, 35 2AB. What is these three sections? 35 is in-house research, 2A, 2AB is your contribution to others, and then the manufacturing company. All type of expenditure allowed under these sections are fully deductible under old tax regime. But in the new tax regime, interesting to note, that is the default regime, expenses, revenue and capital relating to business is allowed. But guys, if you make a contribution to any organization, research association, IIT, national laboratory, will you get deduction? No. So what is it? If you opt for 115 BAC, deduction under 35 AD cannot be, sorry, 35 AD, no, 35 D, 35 AD will come later. Let's just stick to this. So if you opt for 115 BAC, that is your default regime. Contribution to any research association, IIT, national laboratory, that deduction, no, you cannot claim. So that is one problem with the default regime. Some things are not allowed, some things are allowed. This is the big amendment. Okay, so you can write down amendment in section 35 with respect to default tax regime, and you can copy this. So guys, there are three types of thing. No, one is in-house research. In-house research is allowed for both old regime, new regime. Second one, manufacturing company, biotech company, that one, it is available for both new regime, old regime. Contribution, I told you, case that is contributing to some company, that is not allowed if for new regime. And mind you guys, interesting to know, default regime is only for individual and HF, no? So only if individual or HF is giving to somebody, then that is not allowed. In my example, I told KSA that is giving. Can they claim that? Yes. Because default regime is for whom? Individual and HF, that's all. It's not for companies, correct? So only for individual and HF. So you can say, write down, amendment in section 35 with respect to default regime, within bracket, here only we'll write individual and HF, not other SSEs. Copy, not other SSEs. So you should be careful. If they are asking new regime, no, this third point will not come. Right? Copy. Guys, are you understanding, all of you? We are going as slow as possible so that it will be easier for you. If there is any problem, please let me know. Every step I am asking, please feel free and ask any doubt. Ultimate clarity we should get. National Laboratory. National Laboratory. Research Association, Indian Institute of Technology, National Laboratory. Yes. Contribution to any ANY. Sir, what handwriting, sir? Yes, thank you. Yeah. Contribution to any ANY. Vomit inducing handwriting. Yes. Contribution to any. This only proves no that with this handwriting also we can clear exam. Hence proved. So you just have to study properly and write little legibly, that's fine. Done guys, copied? Oh. Now that is regarding this section. So 35 done guys. So you see finished off the entire section. 35. Research Association, all these things are there. So same, if you sell off the asset also, same thing happens. We have already seen everything, so no tension. So this is regarding the scientific research, very simple. And as already told you, see this is what is given. In the default tax regime, any contribution to notified association, it will not come. For normal tax it will come, this default regime it will not come. Next, write down guys, 35D. This 35AD will come to it in a while. 35D. 35D, that is preliminary expenses. We'll finish off that. Amortization of preliminary expenses. So it is preliminary expenses. They have used the word called amortization. What is that? We will see. 35D, amortization of preliminary expenses. Amortization of preliminary expenses. So guys, whenever you want to start a business, you have to do some analysis that is called feasibility study. And for that it will cost a lot. You need to do a survey. For example, if you want to open a hotel right here, the closest, will you open a dosa hotel or will you open a hotel with idli, sambar, vade, everything, or everything? So the thing is, now, just down this road if you go, there is a hotel called CTR. It's called Sri Sagar. It is there since 1960s. It is considered to be the best dosa in Bangalore. Out of the top 5, actually it's horrible, but I don't like it, but people love it. If you see, you should see the queues there. On Saturday, Sunday and all, queue for almost 200 meters, 300 meters, 500 meters queue and all I have seen with my own eyes. And it became more famous because 2 years ago, Virat Kohli came. I was actually there. My office is also opposite. I was having coffee. I saw that fellow going inside. But of course, these fellows will not leave them now when they come. So it was too much rush today. That day I was like, why? I didn't understand. Then I knew it was Virat Kohli. After that, it has become more famous, honestly. Now the thing is, if you want to start a company which has dosa also, you may feel that it may not sell because already CTR is there. So we'll look into other areas. So it's an actual case study. Right opposite that CTR hotel, there is something called Buy 2 Coffee. That hotel name is called Buy 2 Coffee. So there they started off with coffee, and because I spoke to the manager also, I've been speaking to him for many years. I told him, sir, why you didn't start dosa? He said, no, because CTR is right opposite. It's stupid for us to start dosa. They started with idli and chutney and other items. It started running nicely. Then they went and spoke to the people. Like in CTR, you have to stand in line for 15-20 minutes, half an hour. Then dosa you have to order. Then it will come 10 minutes later. Then you have to eat. To eat one dosa, 1 hour. Correct? On a normal day. On weekend, though, God only knows. Recently, I saw a story where one fellow was waiting for 40 minutes for a dosa in CTR. He was very smart. What he did then, after waiting for 40 minutes, he ordered it on Swiggy, Zomato. The Zomato fellow came right there. He said, bro, I'm here only. Give me the dosa. Standing in queue, he ate dosa. It actually became viral. Standing in the queue, he ate off dosa. And imagine, Swiggy was faster than standing in queue and getting. So guys, for one dosa, will you spend 2 hours? I swear I will never spend on any food item. You want, okay, so much build up and all, it's bad. It's good. I mean, if you want to stand. But I personally will never stand for any food item for 2 hours. However good it is, I don't care. Right? So like that, like me, many other fellows were there. They said, I want to eat dosa, but I will never eat in CTR. All these years I have had only twice or something. That too when some other people have come. They have already seen in Bangalore, which is the best. They would have seen CTR. Now Rameshwaram cafe craze is going on. Like that time CTR craze was there. So for those stupid fellows, I have to take them, unfortunately. So weekend and all, I'll tell, I'll not come. Weekday you come, then I'll take. Weekend means we'll order. I'm not standing in line for that dosa. So in my entire life, I only had once or twice. Nothing against the dosa, I am like that. Maybe it's good for others, I didn't like it. But anyway, each one can have their own opinion. No? Anyway, now coming to this discussion, which is relevant to our section. So this guy understood there are many people like me who don't want to waste time eating food. Food must be 10 minutes, 15 minutes. So because I don't sort of, what do you say, live to eat. Some people live only to eat. They are foodies. I am not a foodie. I eat to live. It's good if you live to eat. Some people, all these food bloggers and all that, they love eating. And it's good. That's a good hobby. They keep going everywhere. For me, I can live on idli under 365 days a year. You give me idli for morning, evenings, night. I don't care. I'm not a foodie, honestly speaking. Whatever is there, I eat. So anyway, so now for me, like there are so many people like me, Buy 2 Coffee understood. And I said, sir, they said, why don't we start dosa also? After 1 year, they started dosa. They said, what is the problem with CTR? Waiting time and too costly, 80 rupees, 90 rupees, all those things. So what if I do a dosa at 30, 35, 40 rupees and give you the same quality, similar quality, and I'll give you in 5 minutes. They started dosa because they had done this feasibility study. First year they tried without dosa, it clicked. Then feasibility study they did. There are many people like me, then they did that dosa also. Later, CTR closes off by 11:30, 12 o'clock. And this Buy 2 Coffee also closes off by 11:30, 12 o'clock. So in and around that area, that is, nobody will come this side. If it is 7th, 8th cross, they'll stick around there only. They went and told there is no place for lunch. CTR also I cannot go, and other place also I cannot go. There is no lunch. There is non-veg place, but vegetarian place is not there. So this guy again did a feasibility study whereby they understood that lunch was not there. So I introduced lunch also. Quick lunch. All these rice items and all, quickly you can eat and go. Then some people again came and told during this feasibility study, he said, I want a proper banana leaf meal. Because morning I don't have breakfast, afternoon I'll belt nice full batting. Correct? So they started that also. They started a new company called Temple Meals on the first floor. I'm just analyzing one place, that's it. And people said you should subtract the, you should, what do you say? People said you should also, what do you say, should not close on any weekend. Because they were closing on Monday. They said don't close on Monday. Weekend you open, Monday also you open. They were closing on, first initially they started closing on Sunday, then that's so stupid. Then they said Sunday you open, Monday you close. And then they said Monday also don't close. So guys, listening to this again and again and again, they actually made an entire process now. It works all days a week. It caters to all types of customers. The ones who want quick food, very quick, everything is ready already. Those are also 5-10 minutes. And if you want proper meals, there is one more on top floor called Temple Meals. You can go eat there also. Everything at a reasonable rate. So it is doing more business than CTR in terms of footfall. CTR people will come, but at 12 o'clock they close. But these fellows, throughout the day, people will keep on coming. You will never see so much rush in buy to coffee. Because people are running crowd. They'll come, eat and go. Come eat. CTR, because people have to sit there, order, that's why the rush will be there. It looks like that, that's all. So if you see, that is called preliminary feasibility study. For this it costs money, right? Obviously. So like that, if you see, there was one guy called Mr. Kamath who was in Mangalore, that is the coastal belt of Karnataka. He was there in Mangalore. Mangalore already had an ice cream called Ideal Ice Cream. So it's a very famous ice cream place called Ideal Ice Cream. So this guy, this Mr. Kamath, felt that anyway already one big player is there, why should I start here? He did a feasibility study. People were craving for other types of fruits, fruit ice cream, like tender coconut, jackfruit, mango, like that. But he knew that in Mangalore there would be no market for that. He thought there would be market in Maharashtra. So he shifted to Mumbai and he started something called as Naturals Ice Cream. Have you heard? There's a company called Naturals Ice Cream. It has come to Karnataka back some 10 years ago, but it was there in Mumbai for 15, 20, 25, 30 years. It was started by a Kannadiga only from Mangalore. So again, see feasibility study. What works, what does not work depends on so many things. We have our center in the prime location on the main road. Now after we build our full name here, even if we open it in some small gully inside, people will come. But initially you should show it because it is there in, Advait is very well known for online classes, as in all your recorded classes, but KSA is known for face-to-face class in Tamil Nadu, not in Karnataka until now obviously. So now it came in Karnataka and you cannot keep it in some small gully where nobody can see. It should be right in your face. That is a logic feasibility study we did. We actually did a feasibility study. Is it good enough to do here, etc. There are options to do it in South Bangalore and North Bangalore. But South Bangalore, of course, again searching for place, all that will take time. North Bangalore place was already ready, directly on the main road, overseeing everything. So which is better? Is only better. So what I am trying to tell is, before starting any business, there will be lot of legal expenses. Starting the business, MOA, AOA, drafting, chartered accountant will be there. You have to pay company secretary, chartered accountant, and more importantly, feasibility study. So for this feasibility study, will Income Tax Act, which I am spending lot of money before the company comes into force, will I allow that once the company starts? What do you think? Will I allow that? What do you think? AC is there now already? What happened? That AC is there now. This is the AC. Why did you switch that on? You want this also? Okay. Right? What do you think, guys? What do you think? Sorry? I was saying that this expenses which I spent 1 or 2 years before the company came into force, should I, or even few months before the company came into force, it's coming up to, let's say, 10 lakh rupees I spent on all this. The company is not yet started. Now it started now. Will I allow that expenditure from the year of commencement? Just like scientific research expenditure. 3 years before, I use it in which year? In the year of commencement I allow. Here also, they did not say 3 years. All preliminary expenses, they gave a list of preliminary expenses. Those preliminary expenses will be for which one? Will be used or not used? Will be allowed or not allowed? Allowed. So if you see, that is this section, it says it will be allowed, and for how many years, guys? You see here first. Guys, it is used for, is it allowed for in the year in which the company does business? Yes. But how much amount is allowed? They said you should spread this across 5 years. So if I spend, for example, all the preliminary expenses, I started my business in 2025. Here 1 year you spent lot of money, let's say 20 lakh you spent. They say this will be allowed for how many years? 5 years. This will be allowed for 5 years. 1/5. Every year it will be allowed. Since it is used like that 1/5, that concept is called as amortization. Any amount spread across many years is called as amortization. That's why 35D is called as amortization of preliminary expenses. Amortization of preliminary expenses. So now tell me, guys, it is for which all companies, what all? You can, I'll explain this and you can copy. First of all, eligibility, it is for new businesses, guys, or extension of existing business also. KSA is in Chennai, now they opened in Bangalore. Extension, feasibility study is needed. Yes, I can use it. And then before commencement of business also, obviously it is taken. It is for Indian company and resident non-corporate assessees. Limit, what is the limit? Indian company, preliminary expenses, 5% of capital employed, 5% of project, whichever is higher. Others, preliminary expenses are 5% of the project. So 1 or 2, whichever is less. So here for others, preliminary expenses are 5% of project. What is project? We'll see. What is preliminary expenses? We'll see. For Indian company, it is preliminary expenses 1 or 2, whichever is less, but in 2, you should see whichever is higher. 5% of capital employed or 5% of project, whichever is higher. What is capital employed? We will see. What is a project? We will see. So project means total fixed asset on the last date of the previous year. So our previous year is 1st April 24 to 31st March 25. So 31st March 25. Yes, 31st March 25. Today, for example, today's, if 31st March 25 is today, today's what should you take? Fixed assets. Because previous year for my assessment year 25-26 is what? 31st March 25. Project, total fixed on the last of the previous year. Capital employed is what? Shares, debentures and long-term loans. Reserves and surplus are not covered. This is the overall capital employed in the company. Shares, debentures, long-term loans. All the long-term funds it is. Shares, debentures, long-term loans. So they will give you everything in the question. They will give you shares, they will give you debentures, they will give you long-term loans. So you add everything and take 5% of that. 5% of capital employed. Then they'll give you project details. Project is what? Fixed assets as on the last day. On that you take 5%. So this 5% or this 5%, whichever is higher. And then that or they'll give you preliminary expenses also. That or that, whichever is less. That is the amount which is allowed. And that is allowed for how many years? 5 years. It is allowed for 5 years. When we solve a sum, you will understand, don't worry. But this is the formula. What is the formula? Preliminary expenses or point number 2, whichever is less. But in point number 2, you should see whichever is high. What is high? 5% of capital employed, 5% of project, whichever is higher. Indian company, others. And capital employed, shares, debentures, long-term loans. And what is allowed? 1/5 of 3 from year of commencement of business. Come on, guys. Write down. Now, what are preliminary expenses? You see the list here. All these things, guys. Legal charges, feasibility report, registration fee, public issue of shares and debentures. No need to remember everything, but just these are basic. To start the business, what all is needed? That one. Right? It is for all types of business, and the same thing is given here also. No tension. So you see here, right. It is for Indian company and resident, non-corporate assets. So write down and then scroll down later. Preliminary expenses. New business, extension of existing business, then after commencement of business it will come. Before commencement of business also it will come anyway. Indian company and resident, non-corporate assessees. Done. Then this one. Is it done? First two? Third one, guys. Write down. This is the limit. Project is total fixed assets. After you copy down, solve question number 26. Try. Then I'll show you the answer. Try. Question number 26 in concept capsule, PGBP. Question number 26, guys, all of you. Actual preliminary expense, how much they have given, guys? 5 lakh plus 3 lakh plus 1 lakh in the question they have given. 5% of capital employed. What is capital employed? That also they have given. 20 lakh, 10 lakh, 20 lakh. You see here, actual preliminary expenses, how much? You see, they have given. All this will come now. 5 lakh, 3 lakh, 1 lakh. Then cost of the project, this thing. Capital employed, 20, 10 and 20. Project, they have given 36. That project means what? Assets. 5% of this, 5% of this or this, whichever is higher. 1 or 4, whichever is lesser. Done guys, copied everyone. Everyone got the answer. What is amortization? Last point, amortization. 1/5 of 5. So that is 35D. So same thing is given here. Same 35D. 35AD we will see. That is little different. Yeah. Then you see next write down guys, 35DDA. 35DDA. Voluntary retirement expense. 35DDA. Voluntary retirement expense. Everybody understood preliminary expense? Yes. What is amortization? That full expense spread across 5 years is called amortization. This is voluntary retirement scheme. So guys, you would have seen, no, some people will take retirement at age 45, 50, 52. What is the actual age of retirement? Generally 60. Correct? So nowadays it's such that by 60 everyone will die anyway. We and all will not live beyond 60, 65 guys, to be honest, because the lifestyle is such that it's not possible. If you see your grandmother, all those things, their food also was good quality, exercise also they did, and they were very active, so they live by 85, 90 years. Parents now slowly started, no, generally 75, 80, and our generation will definitely 60, 65 out. Going forward it will become less because of the air that we breathe in. It's all horrible. Correct? If you see, if you go to Delhi and all that, you can't even breathe that air. Correct? So the air quality index is so bad, AQI. So what I'm trying to tell is, yeah, so now people will be like, let me retire at 50, 52 and enjoy the remaining part of my life, so they take VRS. So when I take VRS, the company has to pay a compensation, that is called VRS compensation, voluntary retirement scheme. Whatever they would have had some calculation, and that they will pay. They will take all those things, whatever leave they have taken, not taken, everything. They'll have a voluntary retirement scheme because they are exiting many years before only. Yes. Now, when the company pays huge amount like that, can they debit entire thing in the first year only? No. That also will be spread across 5 installments. So tell me, your dad goes for VRS, he gets around 10 lakh rupees amount. Is it exempt or not exempt for him? That we have to see separately. But for the company, when they are paying 10 lakh, will they debit 10 lakh that year? His salary was, let's say, 80,000, but they are now debiting 10 lakh. Doesn't make sense. That also should be spread across many years. How many years will be spread across? Same, 5 years. So basically, guys, if you see, VRS for the employee, that is for your dad, 2 types of exemptions are there, 1010C or 89(1) relief. Only one is allowed. We will discuss it later. When I say TBD, which means to be discussed. In which chapter? Salary chapter. Am I talking from your dad's point of view or company's point of view? Company. Company will come under this section, 35DDA, PGBP. Company is paying what? Voluntary compensation. Your dad, for your dad, it is income. That we'll see in salary chapter. But that is actually exempt. But for me, will it be debited? Yes. 35 DDA, amortization for 5 years. Amortization for 5 years. Copy. Amortization for 5 years. (1010C) or 89(1). 2 sections are there in income from salary. When we come to salary, we'll discuss. I'm just giving you a broad picture. VRS, if you decide from employee point of view, what is it? Company point of view, what is it? Got it, guys? Now, you see question 27, you see 27. Banana Limited pays VRS compensation of 10 lakhs for 2 of its employees during the financial year 24-25. How much? 10 lakhs for 2 employees. Compute the deduction allowable. Very simple, guys. What? 24-25, it is allowable from the year you pay. How much? 1/5. 1/5 of 10 lakhs is how much? 2 lakh. 2 lakh each. That is very easy. But second question is interesting. In the above case, what if Banana Limited pays the same 10 lakh in 3 installments? 5 lakh in the year 24-25, 3 lakh in the year 25-26, and 2 lakh in the year 26-27. So what is happening? The year you pay from that year divided by 5 you should do. Which year you pay? 24-25 you pay 5 lakhs. So 24-25, 25-26, 26-27, 27-28, 28-29, 5 year, 5 divided by 3. How much? 5 divided by 5, 1 lakh each. Next, 3 lakh divided by 5, 60,000. Will spread across 5 years from which year? From 25-26. Are you getting me? And 26-27 onwards, 2 years, 26-27, 27-28, 28-29, 29-30, 30-31, 40,000 each. This is easy answer, but presentation is what we get stuck in. How to present this question? They are asking what is the deduction allowable? Every year they'll ask. Some years it will be overlapping, no? For example, this 24-25 will go till 24-25, 25-26, 26-27, 27-28, 28-29. But in 28-29, 2 other payments also will come. The 3 lakhs also will come, 2 lakhs also will come. So how to present this? Answer you know. Answer is easy. Divide by 5. That's all. Presentation is most important. So you should present it like this, guys. See? In 24-25, it was 5 lakhs. 25-26, 3 lakh. 26-27, 2 lakh. So from 24-25 onwards, 1, 2, 3, 4, 5 years it is amortized. 25-26, 3 lakh was paid. So in 24-25, there will be no amortization. Then again, 0.6, 0.6, 0.6, 0.6, 0.6. And lastly, 26-27, it starts from 26-27, 0.4, 0.4, 0.4, 0.4, 0.4, then add everything. This is how you should present. Answer you know, easy. Presentation is most important. Got it? Copy, guys. Copy. Take your time. Copy down. In income tax, no, you should present it properly. Examiner should say, okay, nice. This is a nice way of presenting. By practice, it will come. That's why I'm solving so many concept capsules. Every concept we are solving one capsule so that you are very, very clear on it. Then we will solve the question. It has gone for printing, it will come. Today only it went. 2 days it will come. You will get the notes. Don't worry. Q&A. Are we done? So we see that is regarding here 35 DDA. So we have 35 AD, 35 DDA, 35D, and we saw 35 also, all easy sections. Before that we had finished all those things. Now come to the main section, guys. 35 AD, specified business. So write down specified business 35 AD. AD, specified business. So guys, generally in the year, what do you say, 2008, before that only, the section had come long time ago. Always I want to attract people from outside coming to India, or I should attract our local businessman, or both? Both. Foreign investment is also good, local investment is also good. So there are two types of incentives that they told. One is, if you invest in India, if you make profit, then I'll give you exemption. No need to pay tax. Second one, forget about profit. If you invest in India only, I'll give you exemption. If you invest in capital expenditure, ideally you will have to you will have to take it as an asset and claim depreciation. I will not give you that. Instead, what I'll do, whatever amount you invest in India, capital expenditure, full amount you can assume it to be revenue expenditure and debit it to P&L account. Which means actually you will be making lot of cash profits, but because capital expenditure is debited in P&L account, you will still make a loss. Loss will be only on books, but cash reserves will be a lot. Don't worry, because you will consider building as a capital expenditure. You will not think of it as profit. That is your investment. But in the end, lot of cash flows will come. Let's say you will get 100 crore cash flows because of the business. But because your building only is 1000 crore, 900 crore is the loss on books. But actually how much reserves you have? 100 crore. You can reinvest. You can do whatever you want. Please come and invest in India. Two types of incentives were formed. One is called profit-linked incentive and one more is called investment-linked incentive. 35 AD has got nothing to do with profit. 35 AD is only investment. If you invest in the country, whether you are a foreigner or whether you are an Indian, no problem. I will give you lot of benefits. But foreigner, generally investment-linked incentive is not there so much. It is predominantly profit-linked incentive. So you come, you invest, you make profit, you can take return. But for Indians especially, I want to make it very attractive. That is why for Indians especially, they have introduced what? Investment-linked incentive. So 35 AD is the best example of investment-linked incentive. And predominantly Indians or residents must be covered here in this. Whereas profit-linked incentive, generally both residents and non-residents are there. Because for foreigners, they can invest anywhere in the world, but ultimately they want profit. So finance minister is telling you come, you make profit, full exempt, no need to pay tax. For how many years? Let's say 10 years, no need to pay tax. How awesome is that? Right? So if you see, 2 points, guys, interesting to note. This two. You see, incentive means what? Investment-linked incentive, profit-linked incentive. Profit-linked incentive is what? ATIA, ATIB, ATIAC, everything will study in CA final. These are the sections. But in investment-linked incentive, it is 35 AD, section 35 AD. Revenue expenditure is not covered under 35 AD, it's anyway covered under 32-37. Next section 36 is revenue expenditure, 37 is revenue expenditure, but capital expenditure is covered under 35 AD. It does not include land, it does not include goodwill, it does not include financial instrument. Barring that, everything else is included. Understood? This is the concept of what? 3580. What all is covered is in this particular chart, which we will do later. Now, right now, after you write down that chart, these are the only businesses covered under 3580. One by one, I will explain that quickly, right? But here you can copy this down. This is the basics. Sir, will they ask this in the exam? No. But should you know this part though? Yes. What is not covered? Land is not covered. Goodwill is not covered. Financial instrument is not covered. Any sort of capital expenditure is covered under 3580. My intention is to break down the entire section so that it becomes very easy for you. And you should know why that section is coming. Every section I am explaining why it has come. So you should know that, most important as a CA student, why that particular section is coming. Write down, guys. Done, guys? Right? Yeah. Cool. Now, one by one. So, guys, this list you need not remember at all, to be honest. But you should know what all is covered. Should you remember it exactly like this? No. You should just know what is covered. In the exam, they will only tell you it is covered under 35AD. If they don't tell you, they will give you one of these lines. You should only remember what all is covered. No need to remember exactly in the same sequence, or no need to remember that, okay, this is there, this is there, you should write like this. Only the keywords you need to remember. Very, very simple. So, basically during, during this 2008, especially this section came, to be honest. So there was something called as, in USA, subprime mortgage crisis. So what happened was, why did USA fall? USA is one of the most stupid countries in the world. They just portray themselves to be very great, but they're actually pretty stupid. If you see the current president also, you will know the two presidential candidates are also fools. One is Donald Trump, other one is Joe Biden. Joe Biden can't even speak properly, can't even sit properly. 80 plus, 70, 80 plus, right? And this guy is a joker, correct? So if you see, that only shows how foolish they are, the people of the country there. In 2008, what happened was, it's called subprime mortgage crisis. So USA fellows started giving loan to homeless people, believe it or not. You don't have a house, you will come to the bank. I'll ask you, where is your house? You will say, I'm sleeping on the street, correct? You will say, you go to this 18th cross Malleshwaram. Where is 18th cross Malleshwaram? Ammani temple. Where Ammani temple? Opposite Ammani temple, I am sitting on the ground. That is my house. I'm not even joking. To homeless people, USA fellows started giving loan. And guys, if you give loan to homeless fellows, will they repay? No. They started giving loans left, right, center, and let's say the receivable was around 1 lakh crore. Like that, many banks gave. What is the receivable? 1 lakh crore. Receivable is an asset or liability? Asset. These banks sold that 1 lakh crore to other investment companies. Have you heard of Morgan Stanley? Yes. Lehman Brothers? Yes. These people started buying these receivables, which means banks raised receivables and sold the receivables to other people. That is called as a derivative instrument. What is derivative instrument? Something that is relied on something else. For example, today you would have seen, have you seen this MCX market, that is the gold market? Guys, gold, if it increases, the value of gold in the gold market will increase. So basically what they did was, this receivable of 1 lakh crore, the bank sold this receivable to other investment companies. These investment companies, based on the strength of this 1 lakh crore, started selling various instruments, saying that, look, this is linked to the receivable that I have. If the receivable increases, this instrument also increases. This is called derivative instrument. This is called derivative instrument. It's like telling, I have 1 lakh rupees of money in my bank. I'll show you the bank account statement. See, 1 lakh is there. Based on the strength of that 1 lakh, I'm going to issue one coupon to you. That coupon also you can sell. It's a slightly higher concept, just for you to understand that based on the 1 lakh or crore that they had receivable, they started creating more and more instruments for selling. Now the best part is, if that 1 lakh receivable is not paid, directly that asset will become non-performing asset, and all the other instruments that I created, that also value will fall like crazy. Yes or no? Yes, that's what happened in 2008. Slowly, when the homeowner started defaulting on the payment of 1 lakh crore, value of this receivable started reducing. Once the value of the receivable started reducing, all the other banks which had bought this receivable, that also started coming down. Lehman Brothers was one of the famous investment bank companies. They had to shut down operations permanently. Economy went on a complete, standstill. There are only 2 countries, and because of USA market, all markets were demolished except 2 countries. One was China, because they never lend based on what US does. Second one was India. In India, we don't even give loan properly for people who have assets, correct? If you want an education loan, now it is little easy. So difficult it is to get an education loan. They will ask you 10,000 questions. Even if you have the money, it is so difficult to get a loan. Do you think Indians will give loan to homeless people? No way. So the beauty is, the entire world shifted to other countries than USA. So 2008, it was a huge opportunity for us to invite outsiders to invest in India, not in USA. Hence, what happened? This section was born. They said, you come and invest in India through an Indian entity, but you can't do it on your own. Join hands with Indian entity and you do it. Everybody started coming, including, you hear your big 4 consulting, they also started coming. KPMG, PwC, Ernst & Young, all are foreign, abroad. They all came to India, started tying up with Indian firms, and they started doing business. Because in India, business started booming. Now, if you're investing in India, I should give you benefit. That benefit only is this. From 2008, they kept on adding to this list. Correct. Sometime in 2008 only, there was a movie that came, Slumdog Millionaire. Have you heard? Have you heard the song Jai Ho, which won an Oscar? Slumdog Millionaire, this particular movie. In 2008, you see, 2008. It became very famous. It won an Oscar. It was in India, that movie was shot. In that movie, one of the most horrible movies I've ever watched, which won Oscar, so many Oscars, because they have shown India in very bad light. They have shown India as a slum country. And believe it or not, after this movie came, what increased in India? Tourism. What tourism? Slum tourism. I'm not even joking. People from abroad came to India to see our slums. They didn't want to see Khajuraho, they didn't want to see Rameshwaram temple, they didn't want to see Hampi, Halebeedu, Taj Mahal, nothing. They wanted to see what? Slums. They came to Mumbai, first thing they went is Dharavi slum. Slum tourism. Morning you go into the slum, have breakfast with the slum fellows. Really, not joking. Cycling through the slums. Correct? People were paying lakhs of rupees for slum tourism. Crazy, no? True story. So these fellows wanted to do something. If you remember, who is the most famous Bollywood actor abroad? Means in India, Indian Bollywood actor, very famous across the world. I also thought Shah Rukh Khan. I also genuinely thought Shah Rukh Khan. But whenever I've traveled almost 30 countries, 30. Wherever I go, no, they always say Amir Khan. I'm also shocked. Amir Khan is more famous than Shah Rukh Khan, to be honest, abroad. In Vietnam, when I had gone, they had dubbed all Amir Khan movies in Vietnamese and they were watching. They asked me names of 2-3 Amir Khan movies that I only didn't know. So everywhere, Amir Khan actually is slightly more famous than Shah Rukh Khan, contrary to popular belief. So India launched a campaign called Incredible India with Amir Khan. Because slum tourism was increasing, no? Amir Khan came everywhere and they told, come, foreigners come to India. He showed people spitting on the road and said to Indians, don't spit, foreigners are coming. Atiti Devo Bhava. He started campaign actually. This was the year 2008. If you just search 2008 Atiti Devo Bhava campaign Amir Khan, it will come. Video only will come. So it's all linked to law actually. If you observe and understand, you'll know why it came. Otherwise, blindly you will be seeing things in isolation. So anyway, guys, what did they do? They wanted to develop more and more. Tsunami came, tsunami destroyed so many homes. They wanted to ask Indians and outsiders to invest in the housing in India so that more and more poor people will get their homes. So you see, like that, so many things came, one by one. First what came? You see, cold chain facility. What is cold chain? Storage. India is one of the largest exporters of meat, dairy products, dairy, etc. So you need to store it. You can't keep it outside. You keep it in a frozen environment. So they said there are agricultural also who do all these things, poultry, animal husbandry, everything. But what about storage? Like a warehouse. Warehouse for frozen goods. So what came? Cold storage facility. They said, you please come and set up a cold storage facility in India. Whatever capital expenditure you spend, fully debited to P&L account, deadly. Then I told what? Warehouse. Warehouse of agricultural produce. Wheat, rice, jowar, ragi, millets, everything you need storage. Farmers are already there. What about storage? Yes. Does it include other things also? You see, agriculture includes everything, guys. Agriculture will include what? Meat, poultry, dairy products, everything. Then, what about sugar cane, guys? Is sugar cane agricultural produce? Sugar cane is agriculture. What about sugar? From sugar cane you can do sugar and jaggery. Is it a byproduct or agricultural produce? Byproduct. People who are having warehouse facility for sugar cane started using this section, telling it is agricultural produce. Government said no, sugar cane is agricultural produce. Sugar is not storage of sugar. They produced sugar and then they wanted to store it. So they hired a warehouse. They started building a warehouse for storing sugar. And they started building warehouse for storing sugar. Nirmala madam said this expense is not allowed. Why? Because it's not a agricultural produce. Sugar fellows went and fought with Nirmala madam. It may be a byproduct of sugar cane, but it's actually agriculture. Nirmala madam said no, it's not agriculture. So these business people said, so are you saying that I will not be getting any deduction if I open a warehouse for sugar? They said no. Started fighting. India is for businessmen or for middle class employees? 100% businessmen. If you become a businessman after becoming a CA, you will save tax. Otherwise, you will die. Correct? One of my clients is 1.8 crore is earning salary. Tax is paying 40 lakhs. Crazy. If the same person is getting business income of 1.8 crores, he will pay tax of just 3 lakh rupees. That's the difference. 27 lakhs he can save if you are into business. So business people went and told cheating. Either change the definition of agriculture or you give me a separate line item here for sugar. See, they've added. See here. These are all practical cases. Sugar was part of agricultural produce by mistake. It is wrong. Sugar is only a byproduct. Got it? So one is what? All related to warehouse, cold chain. Then what? Warehouse for agricultural produce. Third one, sugar. Third one is what? Warehousing facility for sugar. Then guys, I needed hospitals and homes during tsunami and all that. And afterwards also. So you see, housing project under affordable housing scheme. Hospital with at least 100 beds for patients. If you are opening a hospital with 100 beds, that entire expense will be debited to P&L account. If you are developing a housing project under affordable housing scheme, there also you will get benefit. Again, see, housing project for slum redevelopment. This happened in 2008, it came. After which movie? Slumdog Millionaire. Any housing project you open for slum redevelopment, it will come under which section? This section. Then the northeast of our country, other parts of our country had to be developed properly. Hence they said, you please open a 2-star hotel or above category, full exemption I will give you. I opened a 2-star hotel in Meghalaya. I spent 1 crore in opening that hotel. Full can be taken as debit to P&L account, deadly. Development of tourism. So you invest in India, same thing. India has lot of natural gas, crude oil, etc. So if you are operating a cross-country natural gas, crude, petroleum pipeline network, please come and do it. Take full deduction, 100%. Similarly, for beekeeping and honey and bee wax. Beekeeping is what? Honey is part of agricultural produce, but then beekeeping is the art of making honey. Honey can be gone and from the forest only you can steal and you can bring, or you can, just like agriculture of fish, it's called poultry and apiculture. Apiculture is bee. Bee is called apiculture. Right? Fisheries. Fisheries, poultry is for chicken, fisheries is for fish. Just like that, you can breed bees And you can actually produce honey in a natural environment, but in an artificial way. It is not exactly natural. It's not in the jungle that you are bringing. That is called apiculture. And that entire business is called beekeeping. India is again one of the largest exporters of honey bee wax, honeys, honey and everything. Bee wax candle also is there. From that bee wax they make candles. That candles will grow 5 times more than, will glow and be used 5 or 10 times more than a normal candle. Honey and bee wax. Then for iron ore, when you manufacture, you need a conveyor belt to bring it to the factory. That it's called a slurry pipeline, that also. See, you don't have to mug up everything. You just need to know what all is there. That's why I'm giving you examples. They'll only give in the exam 35 AD, don't worry. Otherwise, they'll give you these things. Natural gas, hotel, housing project, warehouse. Automatically, you should realize, this is a 35 AD case. No need to mug up, don't worry. Right? In your calculator, the most important item is one small unit, chip. On the side it is there now, you see. That you see the calculator side mein one small square will be there now. Everyone is seeing? Small square in the calculator. Did you get it? No? Show me. That only. That small one, yes. Everywhere it will be there. Some will be hidden, some will be there. Mostly it will be there. One small, what do you say, black color thing with 1 or 2 lines. Most of the calculator will have, or it can be inside also. That is called as a wafer fabrication. It's a semiconductor. Correct? Wafer fabrication unit. So that manufacture also happens in India. You see, setting up and operating a wafer fabrication. All these things were there, which was fine. Fertilizer also was there. But guys, Ambani and Adani went and told, I am into lot of infrastructure projects like roads, ships, bridges, etc. You give for me also. So very, very recently in 2017 or 18, this also was added. See, anybody who is into infrastructure facility, they also can take deduction under 35 AD. So very, very interesting section 35 AD. So infrastructure project will include what? Toll road, bridge, rail system, highway project, water supply project, water treatment, irrigation project, inland water, navigational channel, all these things. And guys, 2-star hotel, I manufacture it today and I do it, but then I cannot run it. Can I sell it off to somebody? Yes. Will that somebody else also get the deduction? Yes. Here, an SSE who builds a hotel of 2-star or above category and subsequently transfers the operation to another person shall be deemed to be carrying on the specified business and therefore would qualify for deduction. So these are all the points under, basic points under which one? 35 AD. So after I will take a short 10-minute break. After that last session, that's all. What is that session about? We will be talking about how will we assess this 35 AD, what all you should take. And for example, guys, if I buy a 35 AD asset, let's say warehousing facility for agricultural produce, can I sell that warehouse in 2 years? I bought a warehouse, constructed a warehouse, 1 crore. I debited that full 1 crore to my account. In 2 years, I sold it off. So, if at all I had taken it as an asset, how many years would I have kept it for depreciation? Instead of debiting to P&L account, mind you, 35 AD only talks about capital expenditure. There's no revenue expenditure. Revenue expenditure is already covered under 32-37. It only covers capital expenditure. Building, land is not covered, building, machinery, etc. Let's say if I take machinery, if I buy a machinery worth 2 crore rupees for slurry pipeline, iron ore, 2 crore I have spent. Full 2 crore can be debited to what? P&L account. I can fully debit it to P&L account, no problem. My question to you is, if I purchase it for 2 crore, in 2 years I sell it off, is there a point? No. If I had used it as an asset, tell me, how many years would you have given depreciation? What's the rate of depreciation for machinery? 15%. 15%, if it had to fully become 100%, it will take around 8 years. Means 15, 15, 15 every year WDV basis, around 8 years I can claim full 100% almost deduction. So you know what the lawmaker said? Any asset you buy under specified business, you should keep it for minimum 8 years. If you sell it off within 8 years, whatever deduction you have already got will be taxable. Simple. I bought an asset worth 2 crore. I kept it for just 1 year. I would have taken deduction for that 1 year. Next year only I sold it off. The deduction will be reversed. You should keep it for how long? 8 years. If you keep it for 8 years, it means that first year only you took debit of 2 crores. Even if you had kept it for 8 years, via depreciation, you would have spread that over 8 years. Instead of spreading for 8 years, I am giving you deduction today only. That's the only difference. So, for scientific research asset, there is no such condition. But for specified business asset, how many years should you keep for? 8 years. So, like that, there are so many other conditions which we will see after the break. Right? This is a very, 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 very important section. 100% they will ask in the exam. Either as an adjustment or as a 2-mark question or as a 4-mark question, or it will be part of your PGBP questions as an adjustment for sure. Very, very interesting and very important question. So basically here, whatever list I showed you, nothing of that is important for you to mug up. But you should know what all is there. What will be there? Cold chain is there, warehouse agricultural produce is there, fertilizer, oil, slurry pipeline, hotel. Little bit if you remember, agricultural produce, sugar, right, slum redevelopment, housing, then you have, hotel, that's all, BWAX, some little bit if you know, and then there's also this inland container depot, container freight station. Basically, if you want to deposit the goods, like a warehouse, this is also warehouse only. This is warehouse in the land, this is warehouse by the sea. Warehouse in the port, when the ship comes and stops. What is the warehouse called? Container freight station or inland container depot. Point number 9, right? So basically, if you remember this overall, that is enough. No need to study each and everything in depth. That's about it. Got it, guys? Simple. So after the, let's take a break. 15 minutes you take a break, no problem. After the break, we will finish off this section. And that's it. After 35, we did 35, 35AD, 35D, 35DDA. That's it. After that, your other section start. What is that? 36. Then 37, 40, 40A. So all that will take time. Slowly we are doing. Right? Are you understanding us, all of you? Yes or easy or difficult? Easy. Come on, take a break and come back. 15 minutes. All right. So guys, if you see what all is covered. As discussed, land, goodwill, financial instrument is not covered. Apart from that, everything else is covered. That's okay. And if some points, I'll explain first, then you can copy down. Quickly, I'll explain all the important points in this particular section. First one, it should be a new business under 35 AD. It cannot be old business, brand new business. It cannot be because of any split up or reconstruction. Means some old business is demerged into new business. I told you that example, Geo split into some Geo Fiber. Geo Fiber cannot say I am doing new business. No, it should be a brand new business. No splitting up, no reconstruction. Second one, it should be a new asset. Cannot be an asset which is transferred from non-specified business to specified business. Asset must be brand new. But there are exceptions. What do you mean by exceptions? Even old asset can be called as new asset. Guys, if you remember in depreciation, additional depreciation, imported asset used in Dubai but imported into India, used for the first time in India, is it old or new? Old. Can you claim additional depreciation? No. But here there is a change. If you are using it in Dubai for 2-3 years, suddenly you are bringing it to India for the very first time, Can you claim it as new 35AD? Yes. Again, benefit is given to foreigners. They are telling, please invest in India. Even if it's an old asset, you please bring it into India as a new asset. No problem. Are you understanding? There's a two difference between additional depreciation and this. Okay, you see here. Cannot be an asset which is transferred from non-specified business to specified business. Asset must be new. But exceptions means even old asset is equal to new asset. Exception number 1, should not have been used in India previously. Second, it should be imported from abroad. SSC should not have used, should not have used this. And it's imported from where? Abroad. Depreciation under, it's imported, should not have used in India before, that's fine. And depreciation under Income Tax Act should never have been allowed. Means in India, Indian Income Tax Act, if you have not claimed depreciation ever, then you can, old asset is deemed to be new asset. This portion, if it is additional depreciation, covered or not covered? Not covered. Can you import an old asset and make it a new asset in India? No. Additional depreciation not covered, but this one covered or not? Yes. Got it? Exception number 2. Old asset, if it is transferred from non-specified business to specified business, it is deemed to be a new asset if value of the plant and machinery is less than or equal to 20% of the plant and machinery of the block of specified asset. Means what? Already 100 crore is the plant and machinery. New 20 crore I am bringing. I am bringing new 20 crore into the business. So 20 crore by 120 crore is how much? 1/6. 1/6 will be 16.67%. Is it less than 20%? Yes. So is it, even if it's an old asset, is it deemed to be new asset? Yes. So as I told you, old asset already there was 100 crore. New, that is the, I am bringing in an old asset worth 20 crore here. Overall 20 divided by 120 is 1/6. Is it less than 20%? Yes. So can I deem this old to be new is the question. Can I deem this old to be new? Yes, I can deem this old to be new. Got it? So if you see, same thing is given here, guys. So if you see here, should not have been used in India previously, imported from abroad, depreciation and income tax act should never have been allowed. Exception number 2, old asset is transferred from non-specified business to specified business. It is deemed to be a new asset if value of the plant and machinery must be less than or equal to 20% of the P&M of the entire block of specified business. Okay, understood, guys? So general rule, new asset or old asset? New asset. But even if it's old asset, it is deemed to be new. Two exceptions. Exception number 1, should have been, never have been used in India. It may have been imported from abroad, and income tax, Indian income tax depreciation should never have been claimed. Second one, even an old asset is brought into India, or rather not in India, when an old asset is used among the new assets, overall percentage must be less than 20. Next, cash more than 10,000 to a person per day, again disallowed in 35 AD. I bought an asset worth 5 lakh. In that 1 lakh I paid in cash. How much you will debit? 4 lakh or 5 lakh? 4 lakh. 5 lakh is the asset. In that 1 lakh is cash. 4 lakh I paid by bank. How much will you debit to P&L account? 4 lakh only. That 1 lakh will be disallowed. Then there is no depreciation for 35 AD asset. Expenses before commencement of business is allowed in the year of commencement. All the expenses you do before year of commencement, yes. Sale of asset after claiming 35 AD deduction, same as scientific research. What will happen? If you sell it off, it will be credited to P&L account. If you sell it more than the cost, extra amount will be capital gain. Same, no change. No change. And petroleum, gas pipeline, infrastructure, etc. should be owned by an Indian company or a group of Indian companies. Group of Indian companies will be called as consortium. Consortium of Indian companies. And guys, if 35 AD, is it mandatory or optional? Optional or mandatory? say if I am a new business and I am telling, sir, I don't want to debit it to P&L account, sir, I want to show it as asset only. I want to do it, no problem. I don't want to do it 35 AD. Is it possible? Yes. Because the law says if he opts. So 35 AD is optional or discretionary. And guys, if you have already claimed 35 AD deduction, there is no further deduction under 10 AA or Chapter 6A. Already you have claimed full 100%. Will you get extra? No. And if hotel is transferred, I already told you, no new owner will get the benefit. Specified asset should be used for how many years? 8 years. If it is sold after 8 years, actual cost will be nil. Why? Because it's already fully debited, used for 8 years, actual cost will be nil. But if it is discarded before 8 years, then basically if it is transferred to non-specified business, then deduction allowed earlier after adjusting depreciation will be my PGBP. Correct? So what did I tell you? Let us say I have used the asset. I have how much? 100 lakh. I have debited to P&L account. Right? I have used it only for 5 years. Let's say depreciation is 10%. Building. I have used it for 5 years. Suddenly, I have converted it to non-specified business. From warehouse for agriculture, I am now using warehousing for normal goods. I have made it Blinkit and Swiggy. I have made it a warehouse for Blinkit, Swiggy, Zomato, etc. I am converting what? Specified business to non-specified business. Allowed or not? Allowed. Whatever you have claimed deduction. How much you have claimed deduction? 100 lakh. 100 lakh will be credited. But guys, will 100 lakh be credited? No, I'll have to give you depreciation also, because it's as if the asset was never debited. If I would not have debited, I would have showed it as an asset 5 years ago. Should I give depreciation for 5 years? Yes. I should give depreciation for 5 years at what rate? 10%. And final WDV after 5 years, whatever amount comes after 5 years, that amount will be taken into account. That's what it says. It says what? Deduction allowed earlier 100 minus depreciation, that entire amount will be now called PGBP, because I am transferring it to non-specified business. 100 I would have debited. Let's say after 5 years WDV would have been 50. So 100 minus 50. 50 will be the, basically 100 minus depreciation 50. Balance 50 will be the PGBP, WDV. And then the moment I create it to P&L account, automatically I will show it into the asset. And from now I can claim depreciation on that asset. Understood, guys? It is reverse gear. You should use it for 8 years. I did not use it for 8 years. Reverse gear. What is reverse gear? As if the asset was never used for specified business. So I will claim depreciation. And 100 minus depreciation, that balance amount, basically the WDV, will be credited to my P&L account. It's like telling 100 you credit, depreciation for 5 years you debit. So 100 minus this will be obviously credited. That's what they're trying to tell. Reverse case, 100, reverse gear, sorry. 100 you are already debited. You should keep it for how many years? 8 years. You sold it off for 5 years. What will you do? Reverse. 100 debited, 100 credited. But now you should give depreciation benefit, because you are not claiming full debit. So what you will do? 5 years you give depreciation. So 100 minus depreciation will be the amount credited here. Isn't it logical? Very, very logical. These are the points. Then the set of point we will see later, guys. So please copy these 14 points. Anybody, any doubt or understood? Yes or no? Understood all of you guys? Yes? Yeah? Cool. Write down. Coolly write down. Take your time, no problem. I'll give you time. But my intention is to explain everything so that you can copy down by applying the same concept. Come on, guys. Copy. Can I scroll down, guys? Second point you have written till where? Point number 2 you have written till where? Exception. Exceptions 1 and 2 not written, no? Okay, write down. Two exceptions are there. Can I go the 2 and 3 done now? Okay, 1 second. 4 done, all of you? 4? Point number 4, okay. 5? 5 also done. 5 doing? Okay, right, no problem. Write a bit fast, guys. 5 onwards I put. Oops, what happened? Sorry. 1 second. If discarded before 8 years, transfer to non-specified business, deduction allowed earlier after adjusting depreciation. Deduction allowed earlier after adjusting depreciation will be the PGBP. Deduction allowed earlier after adjusting depreciation will be PGBP. If discarded before 8 years, transfer to non-specified business, then what is it? Deduction allowed earlier after adjusting depreciation will be PGBP. See these points now, it will really help you one day before the exam because you're just spreading it across. So what will happen? Reverse gear. 100 lakh if you have debited, 100 lakh will be credited. But what will be also debited? Depreciation for 5 years. So that credited minus depreciation will be actual income. And then immediately that WDV will be taken as an asset and you will get the depreciation going on forward. Now, there may be one doubt. You may be having multiple businesses, right? You may be having multiple businesses. You may have a specified business, you may have non-specified business altogether. What if you have a hotel business specified? And similarly, you will also be having teaching business, for example, this one. Now, loss from hotel, there is a loss. Teaching, there is a profit. Can you set off? Ulta, hotel, there is a profit. Teaching, there is a loss. Can you set off? So what should be set off? What is not allowed to be set off? There is one dialogue here. Here you see. Losses of specified business can be set off only against profit of specified business. Any remaining loss can be carried forward indefinitely. Where did you see these words indefinitely? Unabsorbed depreciation, then capital expenditure of unabsorbed capital expenditure in which section? 35, scientific research. Yes or no? Scientific research also, it is carried forward indefinitely. Unabsorbed capital expenditure, scientific research is carried forward indefinitely. Then, where else? Unabsorbed depreciation under section 32, carried forward indefinitely. Similarly here also, any 35 AD business loss can be carried forward indefinitely. But main dialogue, loss of specified business can be set off only against profit of specified business. Correct? Loss of specified business can be set off only against profit of specified business. So, 4 examples I'll give you. Check it out, guys, here. Specified business, non-specified business. Specified business, PJ Hotels, loss 8 crore. Non-specified business, PJ Classes, profit 6 crore. Can it be set off? No. Why? Loss of specified business can only be set off against profit of specified business. Second example, PJ Hotels, profit 5 crore. Specified business. PJ Beekeeping, loss of 3 crore, specified business. Can you set off 3 crore against 5 crore? Yes. Loss of specified business can be set off against profit of specified business. Everybody understanding? Third example you see, PJ Hotels, profit of 4 crore, PJ Classes, loss of 2 crore. Set off possible or not? So guys, what is the dialogue? Loss of specified business can be set off against profit of specified business. Have they told profit of specified business cannot be set off against loss of non-specified business? Have they told like that? No. What have they told? Loss of specified business can be set off only against profit of specified business. Have they told loss of or rather profit from specified business cannot be set off against loss of non-specified business? Nowhere. So third one is very, very important. If there is a profit from specified business, can you use it to set off loss of specified business? Yes. Can you use it to set off loss of non-specified business? Yes. What is the dialogue given by law? Loss of specified business can only be set off against profit of specified business. Nowhere they have told profit of specified business cannot be set off against loss of non-specified business. Nowhere they have told. If the law does not prohibit you, if law does not prohibit you, is it allowed? Yes. If law does not prohibit you, is it allowed? Yes. If I say you should come sharp 8 a.m., you should bring the Bear Act, you should bring a handwritten book for the thing, and you should come with breakfast, I will tell some 10 conditions. I will not tell what you can wear. Can you come in casual clothes? Yes. Can you come in formal clothes? Yes. If a law does not prohibit, is it allowed? Yes. It is always allowed until and unless it is prohibited. So if I tell you have to come at 8 a.m., can you come at 8:30? No. If I say I have to come at 8 a.m. with the book, can you not bring the book? No. But I will not tell what to wear. So can you come wearing whatever clothes you want, your wish? Yes. Similarly here, what are they telling? The profit of loss from specified business can be set off only from profit of specified business. Nowhere do they say the profit of specified business cannot be set off against loss from non-specified business. Nowhere they have told. So the third one, loss of specified business can be set off only against profit of specified business. And also you see PJ Hotels, yeah, that you leave. Fourth one you leave. These 3 things copy, guys. So most important, copy. Third example especially is very important, asked in the exam. The dialogue is only loss of specified business can be set off only against profit. Nowhere it tells profit of specified business cannot be set off against loss of non-specified business. So SB means specified business, NSB non-specified business. And last point you can say, loss under 35 AD can be carried forward indefinitely. Loss under section 35 AD can be carried forward indefinitely. Same thing is given here. Question number 25, guys. Specified business question. Concept capsule 5. Deduction for specified business. Question 25. Mr. Dhanpal commenced operations of business of setting up warehousing facility for storage of food grain and sugar. So both are separate, no? Food grains also separate, sugar. Agricultural produce, sugar, both. He incurred capital expenditure of 10 lakhs and 60 lakh respectively on purchase of land and building. Land is covered or not? No. So I should subtract land. The cost of land included in the above figure is how much? 50 and 40. So from 80, 50 should be subtracted. From 60, 40 should be subtracted. Why? Land will not be covered as a capital asset. It cannot be debited to the P&L account. Further, during the previous year 24-25, it incurred capital expenditure of 25 lakhs. Includes payment 5 lakh by way of cash. Covered or not? No. 25 minus 5 only is allowed. And 17 lakhs includes payment of 2 lakhs by cash. So 17 minus 2, 15 lakh. Respectively for extension or reconstruction of the building. Compute the total income under the head so and so. Fulfilled all the conditions of 35 AD and he has not claimed any deduction under 6A. The profits from the business of setting up warehousing facility before claiming any deduction is 31 lakh and 14 lakh respectively. So what is the profit from the business? 31 and 14 before charging the deduction. So 31 and 14 should be subtracted by other things, whatever we discussed now. And suppose Mr. Dhanpal has another business of warehouse to store chemicals, non-specified business. And income for such business is 40 lakh. Calculate the loss to be carried forward. Right? So it is simple. 31 minus 14, 31 and 14, and that you should subtract all the other items. And then you will get the loss from specified business. Can loss from specified business be set off against profit of non-specified business? No. But either way, they are asking, calculate the loss to be carried forward. So what would be the structure? I will tell you the structure you see. First of all, computation of income or loss from business of Mr. Dhanpal. This should be the structure. Particulars, food grains and sugar, rupees in lakhs. profit from specified business given in the question 31 and 14, but I need to use the deduction. So I will say deductions under 35 AD, working note number 1. So in working note number 1, what all should I do, guys? Total expenditure is 80 and 60. But in that, what is covered? Land. I should remove land. So less expenditure on land, 50, 40. So overall, capital expenditure prior to commencement of business, 30 and 20. Capital expenditure incurred during the previous year, 24, 25. During the previous year, 24, 25. How much? 25 and 17 overall, which includes cash. So capital expenditure during 24, 25, 20 and 15. So I should add both. Total capital expenditure, how much, guys? 30 plus 20, 20 plus 15, 50 and 35. This 50 and 35, will it be fully allowed? Yes. So if you see here, deductions under 35 AD, working note number 1, 50 and 35. Loss from specified business, 19 and 21. How much? 40 lakh is the loss. This 40 lakh loss, can I set off against this 40 lakh income? No. Students will get confused and say 40, 40, cancel, 0. Marks also 0. Right? Yes. Marks will not be 0. You will get for all the steps. Don't worry. So for profit is 40. This loss is 40 overall. This loss is carried for how many years? Indefinitely. Not 8 years, indefinitely. So 8 years is only normal business loss. Section 35 capital expenditure loss, indefinitely. Unabsorbed depreciation, indefinitely. 35 AD capital expenditure loss, indefinitely. This is the structure. I know you know how to solve the problem, but I am here to explain the structure. Did you understand the structure? First one will be profit before charging 35 AD less 35 AD. But 35 AD you have to make the working note. 35 AD will be capital expenditure prior to commencement of business, then during commencement of business. Overall 50 and 35. Done? Yes, copy down, and after that one more point is there and there ends the matter. We will stop for the day. Enough. We have done good stuff today. I am not going to overshoot. Tomorrow we will start with section 36. No problem. Last part over. Guys, everyone understand the structure, how to write? Yes? Yeah, come on. My job is to tell you how to think and the structure. Most important, presentation. This is not an MCQ exam, it is a presentation based exam. So you need to present it neatly. Computation of income or loss from the business of Mr. Dhanpal. Particulars, food grain, sugar, rupees in lakhs. Scroll down. This deduction, this figure you should write only in the end after doing the sum. Is it done? Have you written down? Okay. Next down, this one, guys. This is the entire calculation. Done, guys? Right, no problem. Done. Last part in this 35AD only, amendment. Write down amendment in section 35AD. Link to which one, guys? Obviously, new regime. So, yes. Amendment because of 115 BAC. If you opt for 115 BAC, deduction under 35 AD cannot be claimed. So guys, if you are opting for 115 BAC, can you claim deduction under 35 AD? No. Because in the exam, if others are given, 35 AD can be claimed because 115 BAC will not come for them. But if individual HF is given, 115 BAC will come. So 35 AD will not be claimed. Understood? Understood, guys? So if you are following 115 BAC, the default regime, you cannot claim deduction under 35 AD. If you want on the old regime, then you can claim. Copy, and then there ends the matter. You can leave. Today, till here you should study. I'll show you 1 second. Sorry, I'll show you that note. Don't worry. Till this page, till page 7.31, you should finish. Because tomorrow we are going to start off with other deductions, section 36. How is PGBP? Easy. We have solved each and every concept, one question we have solved. Then overall, we'll solve that question. In 2 days, you will get the book. It has gone for printing today, 10 a.m. I have approved it. It is going for printing, here only printing, it will come soon. Okay, 2 to 3 days, you'll get the material. There you can go home and solve. I'll tell you what to solve. I'll give you homework. We'll discuss the next day. We'll solve few questions. Okay, with answers it is given. So it will be easier for you. Presentation also is shown there. Okay, yes. Okay, guys, copy this and then see you tomorrow. That's it. Okay, thank you. Okay, guys, good morning. Sorry, we had to shift here and there. So we didn't know where the class was, so it got late. Cool, guys. So let's quickly revise yesterday's session and we will go to a brand new area of section 36 today. So yesterday, where did we start, guys? Which sale of asset, section 50. So in section 50, what will happen? What will happen in section 50? Basically, when you sell the assets, 2 conditions are most important. Yes, there should be some value and then there should be at least 1 asset, right? Only then it will go ahead. So we saw, only then you can charge depreciation, otherwise there will be no depreciation. Then we saw scientific, that's all. Section 50 was that only there should be some value and there should be 1 asset. Okay, next, scientific research. We saw scientific research. 3 things were there in that: in-house research, specified company, and contribution to others. 3 things were there. So in-house research, 100% is allowed. Land is not covered. All SSEs are covered. So pre-commencement expenses are allowed there. Yes, apart from that, next is specified company, 100%. Land and building not covered. Only company is covered and no other SSE. Manufacturing and biotech. Here land and building is not covered. In this case only land is not covered. And all revenue expenditure, all capital expenditure, everything is covered. Yes. On the other hand, if I contribute to others, 100% will be allowed, but this 100% is not allowed if you are in the new regime. In the new regime, this 100% will not be allowed. Only in the old regime it is allowed. And then any unabsorbed capital expenditure. What do you think? Any unabsorbed capital expenditure carried forward indefinitely. Carry forward indefinitely. So scientific research, what is the scene? Scientific research would be carried forward, this entire portion will be carried forward indefinitely. That is the main point. And what is this? Unabsorbed capex only, guys. Unabsorbed capex only. Scientific research, motor vehicle, used it for business later, non-scientific reason, and sold directly without any business. That is the other part. Yeah. Used it for business later, non-scientific thing. What will happen, guys? Immediately, if I sell it off to a non-scientific research or bring it into business, WDV will obviously be nil. Why? Because I've already taken the full amount. And if I sell the asset, no, then again, if it is at least one asset in the block or value is existing in the block, then there is no capital gain. Otherwise, the capital gain will come. But if the assets are sold directly, sold everything along with the scientific research asset also, then capital gain will come. That is what we have seen. Apart from that, if it is sold directly without using in any business, means I had bought a scientific research asset worth 15 lakhs, I had debited full 15 lakhs, now I am selling up to 15 lakhs PGBP. The moment it goes beyond 15 lakhs, the extra amount will be capital gain, yes. And then we saw 35D, preliminary expenses. So its eligibility is for the new business and for existing business and before commencement and all those things. And yeah, what is the limit here? For others, it is preliminary expenses or 5% of project. For Indian company, it is preliminary, it is the lesser or higher, I mean, basically lesser of the two. Preliminary expenses are point number 2. In point number 2, internally, there is 1 or 2, whichever is higher. What is that? 5% of capital employed or 5% of project. What is project? Total fixed assets as on the last date of the previous year. And what is capital employed? Shares, debentures and long-term loans. 1/5 is the amortized value. 1/5 should be deducted, amortized. Then we saw 35DDA, voluntary retirement scheme, employee and company. For employee, it is 1010C, 89(1), later we'll see. But when the company is paying out from their pocket when it is going, it is PGBP 35DDA. It is amortized over 5 years. That is what we have seen. And then we saw a question. This question also we understood the concept capsule. Next we saw 35AD. 35AD. Right? So if you see specified business, incentive linked investment, profit linked incentive. So incentive, that is investment based incentive, sorry. When you invest the money, 35AD you will get, right? So 35AD, capital expenditure, revenue expenditure. So capital expenditure, specified business 35AD, land is not covered, goodwill is not covered, financial instrument is not covered. Whereas revenue expenditure 35AD will not come, 30 to 37 will come. So what are specified in the new business? All that we have seen, guys. That is cold chain facility, warehousing of agricultural produce, warehousing of sugar. Then we saw iron ore, then this semiconductor chip, honey, bee wax, all those things. Little bit if you know, then it's fine. Then it should be new business or old business? New business. It cannot be formed by splitting up or reconstruction. Cannot be an asset which is transferred from non-specified business to specified business. Asset must be new. But unlike additional depreciation, in additional depreciation, if it's a second-hand machinery, there is no additional depreciation. Here there is additional depreciation, sorry, not additional depreciation. What I mean to say is you can take it under 35AD even if it's a second hand machinery, just that it should not have been used in India previously, should not have taken income tax depreciation previously, and it should be imported from abroad. That is the thing. An exception to old asset transferred from non-specified business, specified business deemed to be a new asset. So cash more than 10,000 to a person per day disallowed. No depreciation for 35AD asset. Expenses before commencement of business allowed in the year of commencement. Sale of asset after claiming 35AD is same benefit as section 35, no change. Petroleum, gas, pipeline, all these things should be owned by an Indian company or a consortium of Indian companies. Why? Because if I allow foreigners, no, they will come and rule over petroleum. Guys, petroleum is the most important natural resource. UAE and the entire Gulf region, they are thriving because of petroleum, right? So now if we allow foreigners to come and give deduction also, no, right? That's why it should be only through an Indian company. Foreigners, let them come. I can use their, what do you say, scientific research, and I can use their technology. But ultimately it should be done by whom? Indian company. That's the reason actually. That's the reason why only Indian companies are allowed. Everything has a reason, guys. Now 35 AD, is it optional or discretionary? Optional. Because earlier, no, 35 AD it said it didn't say mandatory, it said you can follow this. People were not following this. So some assessing officer said, no, you have to follow this. Because if you don't, see, here you will not get what? 10 AA and Chapter 6A deductions. Some SSCs did not want to take 35 AD, they directly wanted to take 10 AA and Chapter 6A. But assessing officers, what they were saying? No, 35 AD is mandatory. You have to take 35 AD, which means you will never get 10 AA, Chapter 6A. They were telling, sir, we don't want to take. It was confusion. So lawmaker changed the wordings to what? If he opts for. Everything has a reason, guys. Every word has a reason, right? If I want to take inter, I can take for 300 hours also, explaining each and every word. But there is no point. Actually, there is no point because you don't have to know everything. You just have to clear the exam. So, but we are doing slightly more only because you can easily understand what is there. Next, if hotel is transferred, then new owner will get the benefit. Specified business asset must be used for how many years? 8 years. The asset is transferred after 8 years, actual cost will be nil. If it is discarded before 8 years, then it is transferred to non-specified business, that's it. And then what will happen? Whatever depreciation was to be allowed from that particular year, I have to adjust the depreciation, and that will be my PGBP. So one dialogue is there: losses of specified business can be set off only against profit of specified business. Losses of specified business can be set off only against profit of specified business. That is what it is. Losses are set off only against the profit. So if that is the logic, what it means? It means no set off is possible if there is both are. Basically, if the non-specified business has a profit and a specified business has a loss, then you cannot set off. Only profit of specified business can be set off against loss of specified business. But nowhere it says profit of specified business cannot be set off against loss of non-specified business. Can that be set off? Yes. We saw an example. Fourth one, PJ Hotels, profit of 4 crore. Can it be set off against PJ classes loss of 2 crore? Yes, it can be. Then we saw sum of 35 AD. That's it. We saw so many things yesterday. Today there was a room problem. Everywhere it was full. That's why we had to take at 10:30. But then because still room was occupied and you guys were sitting here, they said class was there. I was waiting there. Then it came here. Anyway, I hate starting late. It should be on time always. 2-3 minutes okay, 5 minutes okay, but 20 minutes I also don't like. I don't mind me because I will be doing something. I don't want to waste your time. Because guys, time is money. Once you become a chartered accountant, it will be based on your time. You will get hourly rate, whether it is in teaching or whether it is in consulting also. When you go to a client, they will ask how much you will charge sir per hour. So it will start off with only 800, 1000, 1500, 2000 like that. Then you can charge 3000, 5000, 10,000 per hour. So in a day, 3-4 hours you do work, 40,000 rupees you can make. Once you reach that stage, once you know people can respect you, you can get that, right? So it will take some time. So that's why for me, time is always money. For you also it should be. Now time is valuable for you to get the knowledge which will give you money. Whether you like it or not, money is needed. Don't be sadhu, oh I don't want money. I will go off to the Himalayas and meditate. No, correct? So money taking less is better, but not taking money is stupidity. So you should do nothing for free. Keep that in mind. Nothing should be done for free. Unless that other person has given you something, then it's fine. It's a mutual exchange, okay. But otherwise, Nothing should be done for free, especially with friends, relatives and all that. They'll keep asking free advice. Don't give. Right? Yes. One of my friends has messaged me. See, a search has happened yesterday in his premises. They have seized many things. He messaged me. He is not like that. He doesn't want bitty advice, but I have to now engage that. So search, not yesterday, sorry, search has happened 3 years ago in somebody else's place. Okay. In somebody else's place, search has happened. In that one register they have found. In the register they have told, I have given this fellow 10 lakh rupees, like that, cash. And that fellow has given me cash of 2 crore. All that in the entry it has been recorded. So he has got a notice yesterday saying that in that fellow's register your name was there. Come and explain why I should not feel that you have evaded tax. You should reply within 8th of this month, 8th I have to reply. Otherwise they will start the proceedings under 147, income escaping assessment. So when you have these friends, these Golmaal friends will be there, no? They will come to you only. If any problem happens, they will come to you. So that time you can charge less. No, for your friendship, charge less, but never do anything for free. Time is money, guys. Yeah. Cool. So, section 36. Other deductions. So all the other sections are easy. This also is very easy. Did you study till here, guys, all of you? How many of you didn't study? Be honest with me. With me, all full honesty. How many of you didn't study? Everyone studied? You didn't study? Why? Why? Yesterday you were distracted. All okay? Don't be distracted. Concentrate. Nobody matters. Boyfriend, girlfriend, other friend, nobody matters. This only matters. This is your boyfriend, girlfriend, best friend, whoever it is. I'm just saying. I can make out, guys. I've been in this for 15 years. I know exactly what you're going through. Why didn't you study? That stupid college I told you to leave. This is the problem that will gonna happen if you join that college. You will be dying there. There also won't happen. Here also won't happen. Think about it carefully. Leave that stupid college. It's not gonna give you any return. Yes. Others all read? Okay. I'm not gonna blast you saying why you didn't read. I'm just asking. But please, guys, please concentrate. It's your future only. Please study. Right? I am nobody to tell why you didn't read. Stand up on the bench. All that I'm not gonna tell. You are already old enough to understand what should be done, what should not. But I am not a person who is strict and all. I will not blast you. I am not strict at all. I will come do my duty. If you just follow me, you will 100% pass. If you don't follow me, then it's your loss. It's not my loss. I am already a CA, right? So it's up to you. I really want you to be a CA. You can bring the horse only till the pond. The dialogue is there, no? You can bring the horse only till the water and say, please drink. If the horse doesn't want to drink, we cannot force. So I am a very professional that way. I don't want to be a teacher. Hey, do this, do that. I don't want imposing. You want to do, you do. 2 times I'll tell you. Otherwise not. You guys, you study. I know you guys are all awesome. All of you are really good. I know it. You will study. One day here and there, if you can't study, it's okay, but make up for it. Okay? Don't worry. No problem. You also study today. Others all studied? Yeah. It's okay. You should be honest with me. I will never blast you. I will never taunt you. I will never put you down. I swear. Because I know how it feels. I am a person who will never ever put anybody down. You will have your own reasons, but excuses are not allowed. So you need to, this is your duty. You have to study every day, whatever it is, right? That is your duty. Right. Now today I have one stupid meeting, that's why all this get up. But I came and I cancelled that meeting and said, no, I have to take class. I cannot, I'll at least take 2-3 hours at least and I'll come. So in this stupidity, when you're meeting professionals, you have to show that you're a professional. I can't go like a chaprasi. Otherwise I'll go in sheddy and go, shorts I'll go. Shorts and banyan I'll go, summer. But when you're meeting some professional, you have to go like a professional. That is the rule of law, nothing can be done. Given a choice, I'll go in shorts. But I have no choice because we are meeting professionals, no, that's why. Anyway, so, yes guys. This is done. Moving on, right, section 36, write down, other deductions. Section 36, other deductions. One by one, we'll write down, no problem. Section 36, other deductions. Yeah. So guys, first of all guys, I have made charts, it will be easy for you, write down. First one, insurance premium. Insurance premium. Guys, I will take insurance for what all things? I will take insurance for stock. Means if my closing stock gets destroyed by fire, what to do? So I will take that insurance, fire insurance maybe. Then I will take key man insurance. What is key man insurance? I told you that day, that main top people will be there, no? MD, old-time director, CEO, CFO. Those fellows, if they die or if they commit fraud, against them, I will take insurance. Third one is, I can take insurance for the health of the employees also. So 3 types of insurance are covered. Stock insurance is covered in 36. Keyman insurance is covered in 37. It's not in 36, it's in 37. 37 is like a general expense. Whatever is not covered under 32, 36 will be covered under 37. Health of the employees. Health of the employees. Approved insurer. Health, I can take insurance for the health of the employees also, guys, but from an approved employer only. Health of the employees, approved insurer, no cash payment. So guys, interesting to know here, they have clearly given if it is health of the employees and all, you cannot give cash payment. If you give cash, no, disallowed. If you give cash, disallowed. Example, insurance premium paid 7,000 rupees in cash I am paying. 7,000 in cash I am paying. If I am paying for stock, it is allowed. If I am paying for health insurance, not allowed. Understand? Insurance premium 7,000 in cash, stock I am paying, allowed. Health insurance I am paying, not allowed. So in the MCQ they will ask you, 7,000 rupees was paid in cash towards the health of the employees. Allowed, disallowed. Answer, disallowed. What about if I pay 11,000 rupees in cash for stock insurance? In cash, 11,000 in cash, not allowed. Any expense more than 10,000 is never allowed. See, they'll confuse you with these MCQs. They'll say 11,000 paid in cash for stock insurance. You will say allowed and come, or you will know that 48.3 is easy, disallowed. But up to 10K also, even less than 10K for health insurance of the employee, not allowed. Very important MCQ question. MCQ questions will be tricky. I have all the good MCQ questions in that book which is coming soon, 2 days. It's already gone for printing yesterday. Huh. Good question. Is it like a basic exemption limit of 10,000 or full 11,000 is allowed? Full 11,000 is allowed, or up to 10,000 allowed, 1,000 is allowed? Up to 10,000, we will see that in 40A3. We will see examples and we will check in 40A3. Now, today only we will finish. 36 we are there, 40 will come today only. So 40 capital A3, I'll give you examples and explain. Is it like a basic exemption limit or is it like overall? We'll see that. Today only we'll see. Good question. So stock, keyman insurance and health of employees, approved insurer, no cash payment. So only for that, no cash payment. So example I have given you. So in 36, no, some 3-4 points are there. That's all. After that, the most important section is 37. What is 37? Wherever 30 to 36 will not come, 37 will come. It's a very residuary open section. Everything is covered under 37. Next, write down, guys. Bonus and commission paid to employees. I'm dictating, you can write down. Bonus and commission paid to employees. Bonus and commission paid to employees is allowed. Bonus and commission paid to employees allowed. So guys, people know what they were doing, very scam fellows. Bonus and commission paid to employees is allowed. So companies, what they are doing, they are passing this entry. Bonus expenditure account 1 lakh to bonus payable account 1 lakh. And then P&L account 1 lakh to bonus expenditure account 1 lakh. That's it. They were parking it as a liability and claiming the full expense of 1 lakh. Tomorrow, when the time came for payment, were they making payment to the employees? No. So imagine I am just passing a payable entry worth 1 lakh and claiming tax deduction of 1 lakh. Am I making any payment to employees? No. Cheating. So these employees went and told, sir, they are taking a tax deduction on 1 lakh, because 1 lakh, if you debit the P&L account, you will save tax of 30% on 1 lakh. 30,000 you are saving. Employees went and told, we didn't get anything. We have just been promised bonus, but you have not got bonus at all. It's like RCB fans. You have been promised the cup since 17, 18 years. Did we get the cup? No. Only in payable, receivable entry we have kept and kept. That's all. Cup receivable. Right, here also bonus payable. That's it. It's now we have not received anything. So then Nirmala madam said this is cheating. Then she inserted that section which you already know, 43 capital B. In 43 capital B, what is it? You remember taxes, municipal taxes. It will be only paid before the due date. If it is paid before the due date, only then I will allow as an expense. So for previous year 24-25, you should pay it within 31st July if you are an individual, or 31st October if you are a company. So beautifully in section 43B she told, if you make a bonus payable entry, you should actually pay to the employees before your due date of filing the return. Only when you pay, you can claim that in your return. If you don't pay, cannot claim it in your return. So write down this entry and say 43B allowed only if actually paid before the due date of filing the return. This entry, bonus expense to bonus payable, P&L account to bonus expenses, it should actually be bonus payable to cash. That entry should happen on or before the due date. Got it? So it will be allowed only if it is actually paid. So second point is bonus and commission allowed based on payable basis. Third one, guys, third, write down employer's contribution. I'll explain this, then you copy. Employer's contribution. Employer's contribution. I'll explain, then you can copy. Don't worry. Employer's contribution. So guys, if you are working in a company, no, when they tell CTC, that is called cost to company. CTC, what is your salary? If they say, they'll say CTC 24 lakh. Means 2 lakh rupees per month. Do you really get 2 lakh rupees per month in your hand? No. There's a difference between CTC and cash in hand. What all they will deduct? They will deduct so many things. Employer has to deduct Provident Fund. Provident Fund is a fund which you will get money at the time of retirement or at the time of leaving the company after 5 years. Then you have Gratuity Fund. Gratuity Fund is also at the time after some 10 years of service when you are leaving the company, they will give you that money. Next you have Superannuation Fund. Superannuation Fund also is similar to retirement only. And then any other recognized fund, Gratuity Fund, all those things. So the thing is, they will deduct from your salary, and as per law, you have payment of Bonus Act, payment of Gratuity Act, Employee Provident Fund Act. So many laws are there. As per those laws, employer also has to put from his pocket equal amount whatever he is asking from you. So all that will be part of your CTC. CTC is cost to company. So if they say 24 lakh package, it is not 24 lakh package. You will get very, very less, because they will subtract all these things. They will subtract their contribution, they will subtract your contribution, they will subtract gratuity fund contribution. So every month it's like a forced saving. You have to keep saving every month to the fund, so that once you retire, you will get some considerable amount. Now the question is, employee, if he is only contributing, guys, then there is nothing, no expense for the company, right? Company, if they are paying you 24,000 salary, in that you are only deducting 2,000 rupees and paying to the government. For me, expense is 24,000 only. That is full debited. But here the question is employer's contribution. I have to put from my pocket, no? If 24,000 I am giving you and you are paying 2,000 to the fund, I also have to pay 2,000 to the fund from my pocket. Is that amount also allowed to be debited to the P&L account? Which means salary 24,000 and contribution to PF 10,000, contribution to gratuity fund 10,000. Like that, can I debit is the question. Salary anyway I will debit. Should I also debit the extra amount of me paying from my pocket to whom? To, on behalf of the employer, to whom? To these funds. Gratuity fund, superannuation fund, provident fund, etc. What do you think? Do they come under balance sheet or expense? Balance sheet, how will it come? Gratuity fund is the fund that you are adding, but what is the expense you will write? But a liability, how is it created? No expenses booked. Here also it's a liability, no? Here you see bonus to bonus payable, it's a liability. But you are booking an expense, no? Bonus expense. Here also P&L to bonus expense. So what will that entry be? Gratuity expense to gratuity payable, liability. Then gratuity payable to bank once it is paid to the government. So is it an expense or income? Expense. The expense only creates a liability, right? So here definitely, guys, it is allowed, but it should be a recognized fund, not an unrecognized fund. This is SPF means statutory provident fund. RPF means recognized provident fund. AGF means approved gratuity fund. Approved gratuity fund. Approved girlfriend and all don't write. Correct? Approved gratuity fund. The only GF I know as CA student is not girlfriend. It's gratuity fund. Right? Approved gratuity fund. Then approved superannuation fund. That is also a fund like retirement fund only. Superannuation. Any other approved fund is allowed subject to 43B. 43B means what? It has to be paid before the due date. Other people were cheating again. They were simply saying gratuity fund expense to gratuity fund payable. Payable to bank never happened. So they created section 43B for these things only. And unapproved URPF means unrecognized provident fund, unrecognized gratuity fund, unrecognized superannuation fund, disallowed. Payment to statutory provident fund, recognized provident fund, approved gratuity fund, approved superannuation fund, any other fund allowed. Got it? Yes. Copy. Allowed subject to 43B. Allowed subject to 43B. RPF is provident fund. AGF is approved gratuity fund. Gratuity means like gratitude. GRATUITY. Did you understand anything you want? Understood? Statutory provident fund, recognized provident fund, approved gratuity fund, approved superannuation fund, and any other approved fund. Allowed subject to 43B. Unrecognized provident fund, unrecognized gratuity fund, unrecognized superannuation fund, disallowed. URPF, URGF, URGF and URSF. It is disallowed. Other things are these. Simple. Done. The third one is this. So first one we saw insurance, second one bonus and commission, third one employer's contribution. Fourth one, employer's contribution with respect to pension scheme, guys. Write down employer's contribution with respect to pension scheme. 80CCD, that's the section of pension scheme. Pension scheme. New pension scheme, national pension scheme, central government pension scheme. So here also, what is allowed? Actual contribution or 14% of salary. Guys, 14% is an amendment. Actual contribution or 14% of salary, whichever is less. Actual contribution or 14% of salary, whichever is less. It is 10, change it to 14. I think it would have, I would have given it, check. One second. Now I'm seeing below. If it's not there, change it, guys. Where is it? Please change it, guys. It is 14% now. It is from assessment year 14-25, which means previous year 24-25. Because in salary chapter they have changed it. This year also it will change automatically. Actual contribution or 14% of salary, whichever is less. So actual contribution means what? Employer is contributing some money from his pocket to a pension scheme so that when you retire he will give you that money. Actual contribution, whatever amount, or 14% of salary, whichever is less, is only allowed. What do you mean by salary? Two things: basic plus DA. Basic salary, DA. DA is dearness allowance. DA is dearness allowance. Why do people give you dearness allowance? If because of inflation rate. When inflation rate it is increasing, it is called prices are becoming dearer. So if anybody's cost is high, it is called dear. Now you know. Right? Yes. You will call somebody high dear, no? Which means what? You are very costly. I cannot afford you. Right? You are expensive for me. Yes. So 14% of salary. Basic plus DA. Basic and dearness allowance. So employer's contribution, pension scheme 80CCD, new pension scheme, national pension scheme, CG pension scheme, actual contribution of 14% of salary, whichever is less. Basic plus DA, dearness allowance, subject to 43B. So 43B, again guys, people were simply saying pension expense to pension payable, that's it. Pension payable to bank, they were never doing. Hence they said nothing doing, it should be 43. So 43 is a protection mechanism. Bonus, commission, employer's contribution to approved funds, employer's contribution to pension scheme. It is purely a mechanism to save taxes, or basically mechanism against companies who were saving taxes by only putting a payable entry. They said no, you have to actually pay. So if you see, the ZCB will come on it, come to it soon. Guys, I told you about animals, livestock. Are animals part of the cost? No. I told you that day, when will animals be debited then? You say, we decided it's not a plant, it's not an asset. What is it then? Expense. If I buy an elephant today for 1 lakh, should I debit it today or when it dies? So this went to court, and court said very simple, when you buy any animal, you cannot show it as an asset. You cannot show it as an expense also. I should wait for the animal to die or become permanently incapable or incapacitated. Then when I sell off the animal's bones, skin, etc., the cost of the animal, 1 lakh, minus whatever I recover from the sales. Only the difference must be debited to P&L account in the year of death, not in the year of purchase. This is the treatment as per law. You may disagree. You may say, no sir, I bought the asset today. I should be asset. Income tax department says no. You may say, okay sir, if not asset, I bought it today with my money. It should be expense today only. Income tax department says no. It says it will be, you should wait till it dies. This is actually to discourage people from buying animals, because you will not get any tax benefit. Are you understanding the intention? No tax benefit. You cannot show it as an asset, you cannot show it as an expense. Means if you want to do this livestock, etc., do it only if you have to. As income tax law will not give you any benefit. When? Never. Will you get any benefit? No. It is an indirect way of protecting animals. So if you see here, so write down guys, animals used in business other than stock in trade. Animals used in business other than stock in trade. Guys, stock in trade, if I am using it as stock in trade, I will buy this thing, Ramzan happened, Bakras, all lot of goats and all, sheep and all was sold. Is it stock in trade? Yes, that is allowed. But other than stock in trade, like for example, temple elephant, or elephants used in timber by timber merchants, elephants used in circus. Anyway, that's all banned now, but I'm just saying. Animals used in business other than stock in trade. Deduction allowed. Deduction allowed. In the year in which animal dies. In the year in which animal dies or becomes permanently useless. In the year in which animal dies or becomes permanently useless. Right, so deduction is equal to cost of the animal minus scrap value. Scrap value means carcass. Carcass means dead body. Bones, skin, etc. Cost of the animal minus scrap value. Carcass, bone, skin, etc. Cost of the animal minus scrap value. So guys, when will you get it in the end? Crazy. So animals used in business other than stock in trade. Got it? So we did so many things. Seventh one, most important, bad debts. Most important, bad debts. If I make sales, for example, let's take my and your example only. You have paid the fee. Let's say I have not paid the full fee. Let's say there's some installment system. That's an example. Now your second installment you don't pay. Correct? And when we try calling, you are not coming to class also. Then we are asking where you are not picking calls. When we call from some other number, you will say hello, 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 hello and cut the call. Then from some other number we call. You will say Naleba. You know that story of that, ghost. Come tomorrow. Correct? You will tell Naleba. That's it. Gone. Now the thing is, we have already recorded your income as a, sale, right? Because what is the entry when you are actually, paying for this case? Say what will be the income? What will be the income? What is the entry? Cash is not coming, debtor still. Debtor, let's say 70,000. To, what do you say? Fees. Fees received. And then that debtor account will be reversed as in when you pay the fee. So bank account 40 to debtor 40. Still 30,000 is pending. Now the question is, I have already recognized the income, all those things. But now it is going to be bad debt. So now I have to say bad debts to debtors. That debtor I have already debited by 70,000. Now I have credited by 40,000. 30,000 is still as receivable. Now I should pass an entry, bad debts account to debtor. I have to reverse it, no choice. Now this bad debt will go to my P&L account, obviously. P&L account to bad debts. Now my question is this allowed in income tax? In accounts, 100% allowed. I am talking about income tax. Will Nirmala madam allow? Is provision allowed? See, if you say provision for bad debts is allowed, I will, whatever comes to my mind, I will put as a provision. And I will reduce my tax. So there are rules regarding this. This is sales. What if KSA gives you a loan, then you don't repay that loan? Are we in the business of giving loan? No. But you ask for a loan, we'll give you, assume, then you don't pay. Is that debited? Not, that's also bad debt, gone. That's also bad debt. So there, did we record it as an income? No. We just said advance given to so and so to bank, direct. Now that become a bad debt. I'm not going to get that money for sure. So in income tax, what's the treatment? So guys, bad debts. If it is provision for bad debt, it is not at all allowed. Why? Because blindly I will put whatever provision I want and claim extra. Since last year the bad debt was 10 lakh. This year I will make provision for bad debts 40 lakh. How? Whatever I feel like can I do? No. And here you see, actual bad debt is allowed. Actual bad debt for sales is allowed. Actual bad debt against loan not allowed in PGBP. Except where business of SSC only is lending. If I am in lending business, will I get? Yes. Am I in lending business? No. So guys, two conditions must be satisfied. I'll tell and then you can copy. Condition number 1, bad debt should be written off as irrecoverable. Bad debt should be written off as irrecoverable. You should say that I am never going to recover this bad debt. I should write it off. Then only it is allowed. And second, there is no need to prove that the debt is bad. Means should I sit and prove to the income tax department that it's a bad debt? No. That an account auditor will anyway check. No. Why should I prove it to Nirmala madam? Auditor will anyway check everything. You would have done. No need to again prove. Very easy. Bad debt should be written off completely in the books as irrecoverable. Bad debt should be written off as irrecoverable. And there is no need to prove that the debt is bad. Then these two conditions, if they are fulfilled, can I take bad debt deduction? Yes. So this is bad debts for sales, not bad debts for loans. So if I give you a loan, advance paid to student to bank account, and then you don't pay me back, then it will become bad debt. In Income Tax Act, it is not allowed. Am I in the business of lending? No. It's not allowed in PGBP. Maybe it's allowed in IFRS. We'll see that later. But if I make a sales now, like student account to fees, and then bank to student, as in when you pay money. But last installment you will not pay. Then it will become bad debt to student. That bad debt, is it allowed? Yes. First of all, the bad debt should be written off in the books. I should actually pass that entry P&L to bad debt and write it off. And it should be bad debt to student. Student should be wiped off from the books. I should have written it as irrecoverable. And secondly, I don't have to prove it. I should have tried my best. Why will I put all these things? I know you will not pay me anyway. So two conditions are satisfied. Then This is the thing. Now one more interesting question. Have I written off the bad debts already? Yes. 2 years later you come and you will pay the money. You will say, sir, sorry, I was doing my CA, many personal issues happened, sir. I did not contact you. Today I am standing as a chartered accountant. I know I had to pay you 30,000, please take it. When you are giving it to me, Nirmala aunty will be standing next to me. She'll be like, that day I gave you 30,000 debit to P&L account. You took tax benefit. Today money is coming in, so pay tax. It's fair. That day 30,000 debit I gave, no? You took tax benefit 30% on that. 9,000 rupees you actually saved. Today that money is coming in, please offer it to tax. That is the next section, bad debt recovery. Did you understand the concept? Very easy. Copy. Very easy, guys. Tax is very logical. It's the most logical subject ever. No need to mug up anything. If you mug up, you'll forget. Don't mug up. Understand the logic. Very simple. Very easy. We are going step by step, section by section, clause by clause in a simplified manner. So it will be very easy for you. You can write pointers from these handwritten book only in your own simple language. No need to use hi-fi language. Isn't this simple language? Yes, this only you copy paste in the exam as notes. Anyway, most of it will be sums only, and you just have to apply the sum and write the notes in the exam. Copy. No, nothing. Never. They will never expect it. Done, guys? Bad debts, actual bad debts, provision for bad debts. Now, I told you, 2 years later you will get a change of heart and you will come and give me money. That is bad debts recovery. Now, there are some variants here. We will answer everything. Variant number 1. You are coming back to KS Academy and you are giving KS Advait and you are giving the money back. You are not giving to me because you didn't take from me actually, you took from KS Advait. You are giving back to KS Advait. KS Advait is not there. It has changed its name. It has merged into some, it has been taken over by some other company, whatever it is, assume. Now the question is that new fellow, should he offer it to tax? KSA Advait gave money to you. I mean, you had taken service from KSA Advait. You did not pay KSA Advait. It was bad debt written off by KSA Advait. After 2 years, when you come to repay, KSA Advait is not there. Some other entity it is there. New entity. Even maybe the people may be the same. Entity is brand new. You should see the people or entity. Entity. The question, who is the SSE? Entity only, no? Now the question is, you are coming back and giving that entity, saying that 2 years ago, the old company which you took over had taken, given me services, bad debts was there, I am giving you back. Nirmala madam is waiting there. But the new entity fellow director says, Nirmala madam, you have told that I took, generally why are you charging this for tax? Because I took the benefit 2 years ago. I was not there 2 years ago. I'm a new company, so why should I tax this? What do you think? If I only take 100%, if you took from KSA, giving back to KSA, KSA has to pay tax. In my question, who has taken it over? Who had written it off? KSA Advait. Who are you giving it to? Some other person. What do you think? No, it's a different SSC. No, SSC is closed. That SSC is taken over. Why not? It's the same academy, no? In the sense, people are the same. They've changed the name. Like now today, KSA and Advait, let's say we are taken over by some other company. Then SSC is different, no? But the people are the same. So it's like all the entire team, everything same, everything absolutely same. Name is not there. KSA Advait completely disbanded. It shut shop. It has completely been amalgamated or merged to a new company. So you are coming to the same people. See, ultimately people and company are the same for you, but entity is different, no? You should see from who is the SSC here? The entity. You did not take from me, you took from the company. Now also, your contract is not with me, it is with the company. Yeah, but we are the face of the company. So obviously you trust us only and come. So 2 years later you come to us only. We will be in the same building, everything same, but company will be different. So when you are paying money to that company, SSC will be different. So that director of that company will say, Nirmala madam, 2 years later that service was given by a different company. And now we have taken over that company is closed, this is a new company. So why should I pay tax when what they have done? That is the question. Correct. When you take over the company, assets and liabilities will be taken over, correct. Yes, bad debts also, won't I take it into account? Only then I'll make the valuation, etc. This went to Supreme Court, this issue. Same case. That fellow had written off, new company recovered the money. And they said it's a capital receipt, not taxable. But Nirmala madam said it is taxable because when you're taking over the company, you've taken all the benefits. You would have paid money based on the figures, that is your P&L and balance sheet. In P&L, the bad debts was written off. If receivable was still there, probably you would have paid more money, but it was written off. Which means she's telling you have paid less money for this company. And now the money is coming back. Now you pay tax. What do you think? Who's right? It went to court. We will see that. We will see that. Everything is covered here. So write down, guys. These are the golden rules as per Supreme Court judgments. Question number 1. It is taxed in the year of receipt. It's taxed in the year of receipt. Second one. This is the deadliest point. SSE must be the same. Supreme Court it went, guys. SSE must be the same. If SSE is different, it is a capital receipt, not taxable. Deadly. Nirmala madam lost the case. For a change. Yeah. Taxed in the year of receipt. This went to Supreme Court actually. This is a Supreme Court decision. Owner will not be paying tax, old owner only will pay tax. But here old owner is not there only. Here old owner also will not pay tax. New owner, if he receives money, he can have fun with that money, no tension, fully tax free. So SSE must be the same. If SSE is different, capital receipt not taxable, deadly. Supreme Court decision, guys, it is. You and I can sit and argue, but who's the main court? Supreme Court. But SSE is the same only, but business is discontinued. You come back 2 years later, KS Advait is still there. But let's say we are not doing any CA classes, we are doing other classes. You will come and pay payment for CA classes. Is the business continued or discontinued? Discontinued. But is it still taxable? Yes, because SSE is the same. Got it? These are the hidden points. Third point, if SSE is the same, even if the business is discontinued, if SSE is the same, even if the business is discontinued, then it is taxable. Got it? FSC is even if business is discontinued, then it is taxable. So 41.4 bad debts recovery. Next, guys, interest on loan. Tell me, interest on loan, I have taken loan for my business, I am paying interest. Allowed or disallowed? Allowed. But one more thing, allowed means debited to P&L account. Is it debited to P&L account or is it added to the asset if I am buying an asset? There are two things. One, I have taken a loan to buy asset. Second one, I have taken a loan for business, working capital. Working capital loan, debited to P&L account. This thing, buy an asset, I have taken a loan to buy an asset. We saw actual cost. Until it is put to use, added to the cost of the asset. After it is put to use, debited to P&L account. We saw that, no? Same. You already know it. Just the revision. So guys, interest on loan, interesting point. I'll explain, then you copy. I'll give you time, don't worry. Interest on loan. If I take for personal use and all, allowed or not? No. I'll take loan on a company and then I'll use that money for personal use. Interest is not allowed. Business, interesting. If I take from scheduled bank, cooperative society, public financial institution, state financial corporation, Small Industries Development Bank of India, SIDB, NBFC, non-banking finance company, all these things, it is allowed only on paid basis, not payable basis. People, what they were doing, interest expense to interest payable and never used to pay to the banks. So many NPAs are there in banks, non-performing asset. Double benefit. First of all, I am not paying my interest. Second, I am debiting the P&L to P&L account and actually I am, what am I doing? I am debiting to P&L account and actually doing what? Reducing the profit, reducing the tax. So in 43B, they inserted this point, interest on loan taken from scheduled bank, cooperative society, PFI, SFC, SIDB, NBFC is allowed on paid basis. Loan from others. It is allowed, guys, if I take loan from my friend, if I take loan from money lender, Nirmala madam says there is no need for me to tell you have to pay it, because if you don't pay, that fellow will come and take away your property. He will come and throw you from your house. My friend whose search has happened now, I told you, his father is a money lender. Correct? Individual money lender. First thing, that monthly rent, what do you say, interest only is crazy. Monthly interest will be almost 2 to 3%. Means per annum it is 24 to 30%. It's all short-term loans he gives. That's why it works out. He'll give a 3-month loan, 4-month loan, but interest you have to pay how much? 2 to 3% per month. If you don't pay, both of them are bodybuilders. My friend and his brother. I'm not even joking. Full six-pack, full body. Like this he was. He was my CA friend during, in 2010. Like one kaddi fellow. And then suddenly, next 2 years later, I saw him, full bodybuilder he has become. In this line of business, it's needed. If you don't pay, no, he and his brother will go, hey. That's all. Go inside, throw everything outside. Correct? Nothing. So if you see, yes. So Nirmala madam will say, I will not put payable, paid, you do whatever you want. You show it as payable also, because if you don't pay, bodybuilders will come. So I don't have to push you to pay. But banks and all, they will pay like fools. Bank will give you a loan, you will not pay back the loan. Bankers will not do anything. So that's why for bankers they are saying, bankers also nowadays have recovery agents. Nowadays. Earlier bankers used to say, simply ask, when will you pay, when will you pay. These fellows used to say, naleba, that's all. Correct? But now, at least they have recovery agents and all those things to help them receive the money. Anyway, so this is an interesting point. So you should see in the exam who is giving loan. If loan is given by scheduled bank, cooperative society, PFI, SFC. PFI means Public Financial Institution. SFC, State Financial Corporation. SIDB, Small Industries Development Bank of India. NBFC, Non-Banking Finance Companies. Is it allowed on payable or paid basis? Payable basis. So assessment previous year, payable, no, paid basis. Paid before the due date of filing the return. So previous year 24-25, you should pay by 31st October 25. If you pay on 1st December 25, deduction will not be allowed for 24-25. Deduction will be allowed for 25-26. Understood? Yes. Copy. 1 second. Take your time. What happened? 1 second. You have to do 40A3 and all those things. We'll see. Yeah, copy, guys. Interest on loan. Okay, I'll give you the example later. At least copy this. Interest on loan. Interest on loan. Personal use, other use. Yeah. Whenever you pay. 25-26, if you pay that year only, it will be taken. Yeah, no problem. Because ultimately it's on payment basis. Whenever you pay, you will get deduction. You will not pay, you will not get deduction. No. It is last year you didn't get the benefit, this year you take benefit of last year also, this year also, if you are paying on time. Huh? Huh. Correct. Perfect. It's paid. Whose birthday? No one's birthday. Done. Guys, below this, copy. This one also a copy. Allowed. Paid or payable, subject to 43B. Previous year 24-25, you should pay by 31st October 25. If you pay on 1st December 25, then deduction is allowed in 25-26. Yes. Sorry, come again? Huh. Huh, everyone. Family, friends, girlfriend, ex-girlfriend, everyone. Yeah, that auditor will check. Auditor will check all those things. And companies will not take interest from family, friends like that. They'll take from relatives of the directors, but they will not have that personal interest. Generally, individuals who are doing business will do all these things. But for that, you have auditors to check anyway. You can claim, that's the benefit. You can claim interest, no problem. Even if you don't pay, you can just put payable and you can claim. No problem. But that's what, if you are in a tax audit scenario, there he will check why it has not been paid. Similarly, in audit, you will learn that auditor should check why it is not paid. It's a fraud because you are actually, there is no interest payable only. He should check the loan agreement and all. That is the auditor's job. Statutory auditor's job. That is your job only. You will either be a tax consultant or you will be a statutory auditor. So you need to check each and every loan agreement, what is the interest rate, whether you are actually paying it, and which fool will only put a payable entry and not pay, and who will be ready to accept these terms. All it is your job. Correct? It is not, Nirmala madam's job. Nirmala madam's job is to collect tax. But here, when the tax is not correct, you should raise the query in the audit report. That's why Narendra Modi always tells, the chartered accountant is the financial doctor looking at the health of the entire economy. That is so true. We have two types of doctors. One is the medical doctor who will look after our health, but financial health is looked after by chartered accountants. That is why you have joined this course. It is not about the money, it is about the respect. So the respect that you earn is immense because we have only 3 lakh CAs in India, 3.5 lakh CAs. In that 1 lakh CAs already gone. Oh, up. They'll be auditing God. She's innocently asking where they have gone. They are gone. They are auditing God now, right? Almost 1 lakh have died, guys, easily. Out of 3.5 lakhs, I can safely say 1 lakh. All those 1949 fellows and all won't be there now, no. 1949, 50, those people will not. Chartered Accountant Act is 1949 Act. From 1949, many people will be doing CA. So those who are born in 1930s, their first ever CAs, that entire old Tata fellows should have gone now. Correct? That's fine. And then new guys are also dying, no? CAs. Correct? So death is natural, nothing can be done. That is the only constant. So out of 3.5 lakh people, 1 lakh are definitely not there. So just 2.5 to 3 lakh maximum living chartered accountants in the country. That's it. Correct? Yes. So ultimately we have to work. So what they're trying to tell is all these things you'll have to see. So that's why the demand for CS as of now is almost around 10 lakh CS. Do we need 10 lakh CS? Yes. But how many CS are there? 3-4 lakhs. Huge crunch is there. But still, do you think institute will increase the pass percentage? Never. They want to maintain the quality. Only the cream they want. Nobody else. Right? So if you fail, it doesn't mean you are not bad. You are not that good enough. Little bit extra effort is needed. And this is a course where you don't need intelligence, to be honest. You need a lot of hard work. Intelligence will come, average intelligence is enough. Lot of hard work is needed. right? So that is what it is. And nothing should be a barrier, whether it is your language, whether it is your writing skills, nothing should be a barrier. That is what it is. Everyone can become CS, guys, just need to work hard. 3-4 years, you should work so hard that others will all be enjoying, you will be working. Just 3-4 years of effort, after that, be chill. So I did not go to my cousin sister's wedding only. Till today, she is pissed off with me. I did not go to her wedding. She's so upset with me even till today. Whenever I meet, she'll tell, everything is okay, but I still remember you didn't come for my wedding. So, I mean, it's sad now, because cousin sister, they'll be waiting for the young brother to come run around. I didn't go because I had class. I was on mental fellow. I'll not come. She's like, 2 days class you cannot miss. No, I'll not miss. That was just 3 hours class. I could have actually missed. But that time, no, there was no concept of video class, video backup, nothing. In 2010, nobody was doing any video class. In South India, we all woke up only in 2018-19. Video class was only there in North India. So, even if it was there, I wouldn't have gone. I would wanted face to face only. I would have traveled and sat there. No chance I would have missed class. Never have I missed class. So, the thing is, so she can't believe that only. For a 3-hour class, you missed my full wedding. I said, yeah. That's why I must see it today. Correct? Simple. So, that sincerity, not seriousness, sincerity. Sincerely, if you attend, see, you foundation fellows, sincerely you attended, you did everything, you did the exams, you passed. It's your hard work, you know already. And yeah, your direct entry people also, yes, whatever. You are BCom graduates now. Whoever you passed, you are BCom graduates. So fine, you have already worked hard. But here you will require other level of working. So you should work hard, guys. Got it? So very simple. So what is it? This is done. Interest on loan is done. Next you write down zero coupon bonds, ZCB. Zero coupon bonds, ZCB. Coupon means interest, guys. Coupon means interest. Zero coupon bonds, ZCB. Coupon means interest. So these are the bonds where the interest is zero. These are the bonds where the interest is zero. It's called zero coupon bonds. Interest will be zero. Example, issue price 70. They will issue it at 70. You will redeem it at 100. You will issue it at 70 but redeem it at 100. You can write down, no problem. You will issue it at 70, redeem it at 100. What is the difference between the two? 30 rupees. That is not called as interest, it is called as a discount. I will issue at 70 rupees. You will pay me how much? 70. When I am paying you back after 2 years, I will give you 100. So what is the amount that you have earned? 30. Is the 30 actually interest? Actually it is, because you are giving me 70 today, I am repaying it at 100. But it is not called as interest, it is called as discount. That is the beauty of zero coupon bonds, popularly called as ZCB. So this 30 rupees, no? Will it be allowed as an expense? Yes. Across how many years? 2 years. 2 years is the period of the bond in my example. So in my example, what is the period of the bond? 2 years. So I will take money from you 70 rupees today. After 2 years, I will be giving back to you 100 rupees. What is the income you are getting? 30. What is the expense for me? 30. That 30 will be spread across how many years? 2 years. 2 years. The duration of the bond, 2 years. Every year, how much will I take? Debit to P&L account every year, 15 rupees. Proportionate, that is called pro rata. Parota and all don't write. Okay, it is pro rata. Parota basis, right? It is pro rata basis. So that 30 rupees is spread across 2 years in a pro rata basis. Simple. Pro rata. Yes, I'll leave. Today is a shorter class. Right. She always makes everything fall. Yes. Oh, this is you this time. Okay. What? Pro rata basis. Issue price 70, redemption 100. 30 rupees is the discount, right? And that will spread across how many years? The duration of the bond, 2 years. Pro rata basis. One example, I think, one bit. No, it depends. Some will be more, some will be less. It depends. No problem. See this example. See this example, you see page 7.32, you will understand in a better way. A Limited issues 10,000 ZCBs at 200 rupees per bond on 14th August 2022. Amount paid on redemption is 300 rupees. So 200 rupees bond, they are redeeming at 300. So what is the discount? 100 rupees per bond. ZCBs are redeemed after 1 year. In this example, it's 1 year. In this case, discount on ZCB is equal to redemption value minus issue price. 300 minus 200, 100. Even though it is 1 year, no, very interesting point here. So first, it should be prorated to the year, no. One is 14th August 22 to 31st March 23. And the other one will be from 1st August 23 to 14th August 23, because year is coming in the between. Even though it is 1 year, it should be prorated based on the number of months in the financial year. So that entire 100 rupees per bond will be spread across these many months and these many months. Now next question is, it is 14th August. Should I take it as 1 month or should I ignore that August? Or should I take half? That was the question. So you can take half also, or should I ignore that August and take from September and add that month here actually. One extra, here 1 month I miss, here 1 month I add. So that for that there is a rule. So if you see August, September, October, November, December, Jan, Feb, March, 8 months. Should I take 8 months or 7 months? If I ignore August, it will be September onwards. So the rule is, if it is 15 days or more, it will be increased to 1 month. If it is less than 15 days, you should take the August one, is what they are saying. You should take the August part, because it is less than 15, right? So you should take the August month also. Going forward, you see, 14th August 23 is the redemption date. Right? So basically you can say, see, 14th August to 31st August, is it more than 15 days? Yes. So should you count that August month? Yes. Second, here 14th August 23 is redeeming. Is it more than 15 or less than 15? Less than 15. So should you take or ignore? Ignore. So this August 22 you take, then that other August 23 you ignore. So it will be what? August, September, October, November, December, Jan, Feb, March, 8 months. And here it will be April, May, June, July, no August, July, because it's only 14 days. So it is 4 months. So that 100 rupees into, what is the number of ZCB? 100 rupees into 10,000 ZCBs, correct, no? 100 rupees into 10,000 ZCBs will be done what? 10,000 ZCBs into 100 will be done what? It will be prorated into 8 months and 4 months. It will be prorated between 8 months and 4 months. Got it? So 8 months. Number of calendar months over which discount on ZCB is divided, 12 months. That is 14th August to this one, 8 months.
Discount per month will be what, guys? 1 lakh. Entire ZCB 10,000 into 100 rupees. 1 lakh divided by 12. 8,333 per month. So for 22-23 I will give 8 months, and for the next year I will give 4 months. 8,333 into 8 months, 66,667. Got it? So very simple. From 14th August to 31st August, it is more than 15 days. So should I count that month? Yes. Then till the day of redemption, it is how much? Which one? Yeah, correct. You're right. This is wrong. 10 lakh divided by 12, 83,333. This will be 6 lakh 66,667. You're correct. So 83,333, typo. So it is what? 10 lakh divided by 12, guys. How much will it be? 83,333. And that will be taken for 8 months. 6 lakh 66,667. Got it, guys? 6,66,667. That is regarding ZCB. So there is one more thing here, that is interest on loan also done, insurance done, bonus done, all this done, ZCB done, employee welfare fund, bad debts done, recovery of bad debts also done. Yes, a couple of livestock animals also done. 2 more points, guys. Write down. STT, CTT, security transaction tax, commodity transaction tax. Security transaction tax, commodity transaction tax. STT, CTT. Allowed if SSC is engaged in the share trading or commodity trading business. Security transaction tax, commodity transaction tax, CTT, STT. Allowed if the SSC is engaged in share trading or commodity trading. So guys, if I am into share trading now, then this section will, what it is allowed in the year where I am engaged in the share trading or commodity trading. What is this tax? Whenever I am trading shares in the market, in the securities market or the commodity market, I'll have to pay tax to the government there also. It's called STT. Now STT is an expense for me. Will it be allowed? If I'm a simple businessman who's also doing some share trading as a time pass, then STT is not allowed. But if my business only is share trading, then STT and CTT is allowed. That's all. Last one, family planning expenditure. Useless it is, but it is still there. In India, family planning and all, if I tell, people will laugh. Number 1 country in the world, population, right? But anyway, this was inserted in 1975. Nobody follows this section, but it's still there in syllabus, so you have to follow. Any family planning expenditure which the company does, if it's revenue expenditure, 100% deduction. If it is capital expenditure, 5 equal installments deduction will be given. So if the company has some counseling sessions of family planning, then revenue expenditure, they are paying the counselor some amount, 100% deduction they can take. Or if they have a setup where is actually why it came as in 1975, I mean I'll tell you the history also quickly. There was a period of emergency declared by Indira Gandhi madam. She was one more mental female, correct? She was a very fierce lioness though, brilliant, a very, very aggressive prime minister. People used to shiver, but she was one mental female, almost dictatorial mindset. So when she knew that she was losing power, What she did was she declared emergency in India. So if tell my grandmother, no, I was just talking to her day before yesterday when I went and visited her. We were talking about COVID. She's like, what COVID? Nothing it was. You should have seen the emergency period. My grandmom was born in 1932, 1933, so she was almost around 40 years when emergency came. She said that was horrible. You could not step out. You will be jailed. If you tell anything against Congress, you will be jailed. If you just do anything which she told not to do, you will be jailed. She was there one day in jail also. She is actually hardcore BJP, my grandmom. Full proper BJP she is. So she went and said, Indira Gandhi, down, Indira Gandhi. One day in jail she was. So she's like, yeah, that was the real dictatorship. What is COVID? You didn't have to get out of the house, so that is because of some disease. But here, you are not able to open your mouth also. Crazy. So that time, no, Indira Gandhi's son was there, Sanjay Gandhi, even one more mental fellow. But his intentions were pure. He said population is increasing, in 1975 only he realized it. Population is increasing crazily, so we need to have family planning. You should have either no kids or just one kid maximum. So he, created many things where, he created that every male should have an operation called vasectomy. It's a true story. Vasectomy whereby they will not bear any children. You will not have any children. That is an operation you have to get done. But the problem is he made it compulsory. And that too of government doctors who didn't know how to do operation. That was the main problem. It's like doing operation by a veterinary doctor. It doesn't know. Crazy. True story I am telling. That is why this section came. This section was inserted in 1975. He said all males in India mandatory vasectomy. Who is the doctor? They show that fellow didn't know how to hold scissors also. Correct? Crazy. So even though it was an amazing idea, to be honest, personally I believe in it. Amazing idea, but badly implemented. So to give the company's benefit, he said, this section I have inserted. You spend on your employees' family planning, take deduction. Most useless section today, nobody follows. Nobody follows this, but it's there in the syllabus. Institute only should give, let's give a question on family planning expenditure. Revenue expenditure, 100% deduction. Capital expenditure, 5 equal installments. So basically the BJP, Congress, all are crooks only. But those fellows, whenever they want to change the law, they'll change the law. Foreigner, can you buy land in India? No. If you say yes, then it will become British Empire reloaded. Outsiders will come and start buying land in India. Foreigners are not allowed to buy land in India as per FEMA regulations. So Indira Gandhi madam changed that law also, not Indira Gandhi, Sonia Gandhi changed. Sonia Gandhi is Indian or foreigner? Foreigner. She wanted to buy land in India. As per Indian law, person of Indian origin was either you should be a resident Indian or you should have been a citizen of India or your parents should have been a citizen in India and all those things. Sonia Gandhi was born in Italy. She had no Indian lineage, nothing. Only connection to India was she was married to Rajiv Gandhi. Will she become a person of Indian origin according to you? Never. She changed the law. Person of Indian origin definition, she added one dialogue. Spouse of an Indian citizen. True story. If you are a spouse of Indian citizen, you are a person of Indian origin, it seems. Imagine. So if you go marry a foreigner, if you are an Indian, that fellow also will become person of Indian origin. How? Most stupidest, definition ever. So the lawmaker will change whenever the government wants to change. I'm just giving you examples, that's all. Right? Sania Mirza also was married to whom? Shoaib Malik, from Pakistan. Sania Mirza is a tennis player married to Shoaib Malik. Shoaib Malik came running to India. Am I a person of Indian origin? Sonia Gandhi said, no, this section does not apply to Bangladeshis and Pakistanis. Papa fellows, right? Yes. So this section only applies to other than Bangladeshis and Pakistanis. That's what it is. So if you marry a spouse, if you marry an Indian citizen, that fellow or that Feli, whoever, will automatically become a person of Indian origin. How, guys? It's absurd. Correct? Satya Nadella, is he a person of Indian origin? Yes. Rishi Sunak, is he a person of Indian origin? Yes. That makes sense. Your parents, grandparents and all should have been Indians, and you may be a US citizen, okay, but you had a lineage. You may be a UK citizen. Rishi Sunak is UK Prime Minister, he was. So yeah, no problem. You are a UK citizen, born and brought up in UK, but your parents are from India only, no? Yes. So you are a person of Indian origin. That makes sense. Sonia Gandhi has no relationship to India at all. Only relationship is spouse of, Rajiv Gandhi. That's it. She will now become a person of Indian origin. Crazy. Right? She was about to become the Prime Minister. Then there was a guy called Subramanya Swamy. He went to, Supreme Court and said, how is it possible for a person to be an Prime Minister of the country, he or she must be an Indian. Person of Indian origin or all not counted. He must be an Indian, first of all. So he went and fought, otherwise he would have become. That's the truth. So I am not for BJP, for both are crooks. All are crooks, all politicians except here and there. And there are exceptions everywhere. Manmohan Singh was a brilliant, brilliant man. Right? P.V. Narasimha Rao, brilliant man. Correct? Here also in BJP, many people, good people are there. So it's not about, you should not think of one party, oh, I will follow this party only. You should think of the good of everything and see which is better, which is not better and all those things. Anyway, this is just what it is. Cool, guys. So take a break. We'll take a break and then 15 minutes and we'll continue. Then one more, it won't be a long thing today because you can close the door. Okay, guys, let's begin. Thank you. So 36 was done, family planning expenditure, all that, yes. Now we will see some other sections, 40A2, 40A3 and all those things, and then directly dive into 37. This is the 40 capital A series, is also very interesting. And then we can go to the other areas. Cool. So write down now 40 capital A 2. 40 capital A 2. Very easy section. 40 capital A 2. What is this? I am a BCom graduate from Bangalore University. I have not done CA. Okay. So my salary in the market is 15,000 rupees. But let us say my father is a chartered accountant and he is working in a very big company. He brings me on board to his company, and a person who is getting 15,000 rupees per month, my father pays me 1 lakh rupees per month from that company. So the company, how much are they debiting? 1 lakh. Instead of debiting actually 15,000. 85,000 rupees they are debiting extra. Thereby reducing tax or increasing tax? Reducing tax. Increasing expense, reducing tax. Assessing officer caught hold of this. They said, you are a normal BCom graduate, how come you are getting 1 lakh rupees? You may be a normal BCom graduate, but do you have the caliber? If you have the caliber, take 1 lakh, but you don't have the last salary was 15,000. How can you get from 15,000 to 1 lakh is the question. So 40 capital A2, 40A2 is excessive payments to relatives actually. Excessive payments to relatives. Assessing officer will say 1 lakh debit is not allowed. I will only allow 15,000. 85,000 I will disallow. I will disallow what? 85,000. This is the section 40A2. Excessive payments to relatives. Next question is, who is a relative? Correct. Who is a relative? Grandparents are the relative. So guys, in Companies Act, no, it is only this. This also is important in Companies Act point of view. In Companies Act, you will learn the definition of relative. Brother, sister, father, mother, son and son's wife, daughter and daughter's husband, spouse. That's all is the relationship. Correct? So parents, children and their spouses, brother, sister. Spouse is covered. Father-in-law, mother-in-law, not covered. Lawmaker is like, putting spouse only is a big thing. I will not add their relatives and all that. Stepfather covered, stepmother covered, stepbrother covered, stepsister covered, stepson covered, stepdaughter is not covered. It's an error of omission. By mistake they have excluded stepdaughter. That is as per Companies Act. So in Companies Act, no, your grandfather is not your relative. But in Income Tax Act, guys, Nirmala madam says, let's keep it simple. Lineal ascendant, lineal descendant means what? Whoever is on top of you, whoever is below you, everybody will be relative. Who will be your side also? Siblings, everybody relative, and their spouses, everyone. It's a wide definition. So if you are an individual, your relative will be covered. If you are a Hindu undivided family, their members or their relatives, if they are getting any money extra from the HUF. If you are a partnership firm or SSC, this is SSC. So if an SSC is paying to his relative more than what he deserves, that extra amount will be disallowed. If a HUF is paying to its members or their relatives, disallowed. Partnership firm or LLP is paying to partner or their relative extra money, disallowed. AOPBOI is paying to member or the relative, disallowed. Company is paying to directors' relatives. I told you, my father is a CA, he is giving me 1 lakh rupees. Extra portion will be disallowed. So 48, what is the key word? Specified person, that is relative. One more specified person is what? Anyone who has substantial interest, that is more than or equal to 20% of the voting power of the company. For example, I have, so what is this? Anyone who has substantial interest in the company, he will be a specified. Who is a specified person? Relative. Payment to specified persons. Let us say I am not taking anything from KSA Advait. Do I have 20% stake in KSA Advait? Yes. I have 50% because Advait is mine. So 50%, right? So now 50% I have substantial. Am I a specified person for KSA Advait? Yes, because I have 50% stake. Now if KSA Advait is paying me exorbitant amount, which is not what I actually earn, will that, so just to save tax, will that excess portion be taxable or not taxable? Excess portion be allowed or not allowed? Not allowed. So that portion will obviously be taxable because it is disallowed. Correct? So that is, if any person has in the entity how much? 20% voting power, and payment is made to that person in excess of what is required, then that excess portion alone is, what do you say, disallowed. In the exam, they will only give you that he is a relative, and they will only give you his outside he was earning 10,000, but here they are paying 30,000. So how much you will disallow? Outside he was earning 10,000, here they are giving 30,000. How much will disallow? 20,000. Will disallow. Excess payment. As you and I cannot decide, assessing officer will decide. Is this clear, guys? So it's a very easy section. It is given here, you see. 37 we'll see later, guys. 37 we'll see later. I am doing the 40 small a also we'll see later very shortly. I am doing 40 capital A, this one, A2. All this is not needed for you to remember. Whatever I am making you write, that's all. Any excessive payment, guys, any excessive payment, you see, if SSC incurs any expenditure towards goods supplied, services rendered, facility provided by specified persons, can disallow such expenditure to which is excessive or unreasonable. Any excessive payment or unreasonable payment, allowed, disallowed? Disallowed, right? Now you can copy. Easy to remember. If a relative asks you, what are you doing? You will tell CA. They'll ask which year? Every year. Which college? They'll ask. So instead of telling something, tomorrow you slap them. In Kannada, A2 is slap. Yes or no? Yeah. Those who know Kannada, A2 means what? Slap. So 40 A2 is what? To the payment to the slap to the relatives only, because this section talks about relatives, right? So 40 A2 is what? Relatives. So now copy, guys. Companies Act first you copy, and then Income Tax Act I'll show you. Whatever I'm writing, that much only you study and go. No, nothing else I will ask you, trust me. So what is 48.0? Excessive payments to relatives will be disallowed. Tomorrow if they ask questions, still 48.2, your name only section is there, right? Just write the Companies Act and right side also a copy, then I can scroll down. Income Tax Act is very simple. Lineal ascendant, lineal descendant. Full generation up, full generation down. Everybody is covered. Companies Act definition also you should remember. They will ask in company law. Company law paper. Person and their spouse. Guys, father-in-law, mother-in-law, relative or not? No. You go to your grandfather today and say you are not my relative, as per 277 of Companies Act. Then he will give you A2. Yeah, 48.2. Yes. So that is what it is. So your relatives, your father, mother, brother, sister, none of them. Spouse's side, none of them will be relatives. Guys, stepfather, stepmother, stepbrother, stepsister, stepson, stepdaughter not covered. Don't write stepspouse and all. Some of our ministers will have stepney. Don't write stepney. Right? Stepspouse. North Bangalore one spouse, South Bangalore one spouse. Right? Ministers have no. Some ministers have. I don't want to name. You only know. 2 they are maintaining. One Chennai minister, Karnataka minister. If you see his face, you will vomit. But he has 2 people. Power of money. So in that exam, Josh, don't write stepspouse. It is only spouse. And they'll give you 2 marks in 2 to 3 marks in company law. Very favorite question: define relative. So our students, no, they are very smart. They will say father, mother, brother 1, brother 2, brother 3, brother 4. Yeah. Thank God they will not write father 1, father 2, father. Then it's dangerous. Correct? Father, mother is okay. I had seen one paper that fell out of full on because it's a 4-mark question. No, in institute it is more quality, less quantity. He had written BCom and Com. 4 marks means in BCom standard in Bangalore University 2 pages you have to fill. So he had written person, brother 1, brother 2, brother 3. Then father, mother he wrote. Then father's wife it seems. Father's wife, mother's husband. Right? All those things don't write. Spouse. Next spouse died. One more spouse came. Right? Yes, all those things we cannot write. Son and son's wife. It is just whatever is given, that alone if you write 2 to 3 marks you'll get. In law and audit and law and taxation, not it's pure quality, not quantity. If you ask Chinmaya sir, I don't think so has ever taken any additional sheet in any of the CA papers. He's finished off in that booklet only. I think he was one of those guys. They never take any additional sheet. They'll finish it off in that only. It's people like us, just pass fellows will take additional sheet just to fill the pages. So you should not do it. That doesn't mean you don't take additional sheet. If you want to take, you take. Don't follow all these rank holder fellows for everything that they tell. But there are some important things that they will share. Right. Anyway, I think Chinmay sir also will be handling classes for you. So you can speak to him about all this. He's from Kannada medium to English medium. So it is all the more awesome. He translated Kannada to English and studied. So you have no excuse. You cannot say, this is difficult for me. Kannada medium fellow became a rank holder. Right? So you can extract a lot. He never speaks so much. You can talk to him after class and extract all the words of wisdom from him. He will definitely help you. Correct? He is coming here purely out of passion. is handling 2,500 crore worth money of their clients. He doesn't have any time. But when I ask him, students are waiting for you, can you please come? He'll always say yes, because he really loves teaching. That is in his blood. He really wants to teach. Right? Yes. So, got it, guys? Now, this side, income tax side, you wrote these fellows, guys. Lineal ascendant, descendant. For SSE, if an individual, then is relative. If SSE is a HUF, then the members of the HUF and relatives. Like members of HUF will be immediate family, no? Yeah. Relatives is their relatives. Then partnership from LLP means all the partners along with their relatives. AOP BOI, members and their relatives. Company, director and their relatives. Now, you see, then coming back here, guys. Sorry. One second. Yeah. Here. Keyword. What is the keyword, guys? Specified. Keeps going. Sorry. Keyword is specified person. Write down. Keyword is specified person. Means relative or anyone who has substantial interest. What is substantial interest? Greater than or equal to 20% of the voting power. So when you study these sections at home today, you can just go through whatever you have written down. That is only important, because there they have given full in-depth definition. They will not ask in the exam. Don't waste your time. This much is more than enough. Relative or anyone who has substantial interest. According to assessing officer, any excessive or unreasonable payment would be disallowed. Thank you. I'll leave. Don't throw those pathrays at me. Right. Done? Next. This is 48, very easy. Next you write down, which you already know, guys, 40A3. See, this all this and all don't study. 110% they will not ask. They will directly give you relative like this. This is just for your knowledge, that's all. It's okay. See, we should do smart studying. Everything is there, we need not study. And also, guys, this also, one more relative you can write down. Relative also includes holding company and subsidiary company. And sister concern. Relative also includes, one more line you can say, relative also includes holding company and subsidiary company. Holding company and subsidiary company. So two subsidiary companies of the holding company are also relatives. Holding company is a relative to subsidiary company and vice versa. And two subsidiary companies of the holding company are also related. That is a sister concern. One company has two subsidiaries. One company has T1 and T2, two subsidiaries. T1 and T2 are also relatives to each other. They are called sister concerns. Next, write down 40A3, which you already have studied. 40A3. What is 40A3? Payment of cash to a person in a day more than 10,000 rupees, right? More than 10,000 rupees. So write down 40A3. But there are some other things in 40A3. So 40A3 is what? Payment in cash more than 10,000 rupees per day. Now comes to her question. She had asked one question. If I pay 11,000 rupees, will 10,000 be disallowed, or sorry, will 1,000 be disallowed or 11,000 be disallowed? 11,000 will be disallowed. I told you, no, gut feeling. Close your eyes, listen to your gut, reverse the gut. Right, what is the answer? 11,000 will be disallowed, guys. So guys, that's the thing. Now, what about this? Can I give 10,000 rupees every day for 30 days? 10,000 rupees per day to a person for 30 days. Yes, he will take 3 lakh and go. But Nirmala aunty had one very nice idea. For the payer, is there disallowance? Payer, I am paying you money, 10,000 rupees for 30 days. Is there any disallowance for me? No. Nirmala aunty said, payer no disallowance, but the receiver will be now paying penalty. How much penalty will be paying? Amount that is receiving, that much will be penalty. So you received how much? 10,000 into 30, 3 lakhs. How much you should give Nirmala aunty? 3 lakhs. She'll tell thank you. Correct? Beauty. So one more section that's not in your syllabus, but just for your knowledge I'm telling. You cannot say, sir, we'll do tax planning. We'll do 10,000 every day, 30 days. No. Why? 269 ST. It's not in your syllabus, just for your knowledge. 269 ST, like that one section is there. In that section, what does it say? 269 ST, what does it say? Yes, if receiver is receiving more than 2 lakh rupees, that full amount has to be paid as penalty, that's all. So 269 ST, same thing, 100% penalty. So for A there will be no disallowance, but for B, receiver, what is it? Not disallowance, what is the penalty? Full amount. Anything is receiving more than 2 lakh rupees for every transaction or a bunch of transactions together, he will have to pay the full amount as penalty. Right? So payment other than account pay check, account paid bank draft and ECS. And other, what is this point number 1 guys? Payment other than account pay check, account pay bank draft or ECS to a person single day more than 10,000 and refer the same chart of actual cost. In actual cost you wrote an example, no? Remember one example? 10 lakh, in that 1 lakh was cross check, same example. What do you mean by other? Others means NEFT, IMPS, RTGS, UPI, BEAM, all these things. So write this down. Guys, I hope you are able to understand. Yes or no, all of you? Yeah, it's very simple. If you have any problems, I am right here. Please ask me. Everything should be clear for you. Yes, thank you. Right, same bunch, same person. Right, thank God she's far away from me. Right, are we done? Yes. So next, what about this guys? If you see 15,000 cash and all, if I give to a person, then it is 48 disallowance. The second one you leave. In 2 lakh 10,000 you see. On 10th I paid 10,000, 11th I paid 10,000, 12th I paid 10,000. On 14th I paid 1 lakh 70,000. All the payments are disallowed or only 1 lakh 70? 1 lakh. So you should not think that in the entire transaction everything is disallowed. Only the day you cross 10,000, that is only disallowed. Okay. Second one, don't write that expenditure out of syllabus. You don't write. Just write these two. Company is making a payment. Company. It's not co-payment. Company is making payment. Company it should be company. Company is making payment. 15,000 cash to person. 48 disallowance. Full amount is disallowed. And second example you don't write, leave it. This example you see. How much is disallowed? Only 1 lakh 70,000. Yes. More than 2 lakh rupees, yes, you're right. In this thing, for the same transaction, it's more than 2 lakh, no, yes. 2 lakh 10,000 rupees for the receiver will be penalty, not disallowed, you should say penalty. Because allowed is an expense, disallowed means added back. Now you're receiving, so you should say that amount will be a penalty. So it will come to its account, next time, next day debit to Nirmala aunty. 2 lakh 10 received, 2 lakh 10 to Nirmala madam, no choice. Full 2 lakh 10, not even tax on that, think about it. If I tell madam I'll pay tax on this 30%, 70% I'll keep, she said no, it's a penalty. Why did you take in cash? 100% penalty, deadly. That is not in your syllabus, but for your knowledge, which section is called 269 ST. 269 ST. Here you can write down, if you are receiving more than 2 lakh rupees, no, under 269 ST, receiver has to pay 100% penalty. It is 100% out of syllabus question. But you should know as a CA student, out of syllabus, little bit you should know. I am not going to tell everything. Here and there I will tell, that's all. I will see the batch and tell. You guys are, you guys really are genuinely interested in learning. That is what I can sense. That's why here and there extra masala I will give. I will not tell a lot. In final, you have no choice. Whether you are interested or not, you have to listen. In final, full in-depth it is. This is all chiller. Final, very, very in-depth. One word we will analyze. It's different. This is all some time pass we are doing. Right? This is just starter. Right? Main course is in CA final. So, but yeah, this much knowledge is very good for you to easily maneuver your inter and do other things also. I am taking you actually higher than your syllabus, whatever is there, because yes, it is needed when you come to final. I am actually preparing you for final, not for inter, because inter anyway you will clear, don't worry. So yeah, that is what it is. Example also we have done. Now people were very smart, guys. What did it say? You should pay cash for an expense. What I used to do? Expense account 20,000 to payable account 20,000. 1 year, that is previous year 23-24. In 24-25 what I used to do? Expense payable account to cash. Last year what did I do? Expense account debit to expense payable account. In 23-24. Where did I book the expense? Which year? Last year. This year what did I do? Expense payable account to cash. Then Nirmala aunty said 15,000 you are paid in cash, disallowed. I said, where disallowed? What will you disallow? You will disallow the expense. Expense only is not there this year, no? Is there any expense this year? No. What have I done? I have made payable entry to paid, that's all. Have I made an expense entry? No. How will you disallow? Last year expense was booked. This year expense is paid. I paid in cash. You will disallow an expense. To disallow an expense, I should allow it this year. Have I allowed it this year? No. I have debited it last year. What will you do? Nirmala madam said, very smart. So, for 40A3, she inserted one more proviso. What did she say? Can I disallow, guys? Tell me one thing. What did I debit? You see the entry? Expenses account debtor 20,000 to expenses payable account 20,000. For Finance Act 22-23. When was it allowed? 22-23. 23-24, expense payable account 20,000 to cash 20,000. If Nirmala madam says it is disallowed, can you disallow something which is not put as an expense only? No. How can you disallow 20,000 in 23-24? You can't. For disallowance, something should have been allowed. In 23-24, is anything allowed? No. It's a liability. Liability to bank I'm doing. So you are Nirmala madam. What will you do? You can't say disallowed. Why? Because it is not allowed. First of all, expense is not taken only. You cannot use the word disallow. But you should still make it, charge it to tax. What will you do? Penalty or... Are you understanding, guys? What is disallowance? If you debit to your P&L account that year, if it is added back in the same year, it is called disallowance. Here it was debited to P&L account last year. This year I am just making a payable entry from the payable account. What do you think? Expenses account 20,000 to expense payable 20,000, expense payable 20 to cash account 20. This year I am reversing it. So what will I do? Finance Act 2023 allowed in 2023, then next year 23-24 it is done. So what will I do? I have to tax it for sure. You can't use the word disallow. What will you do? It is called deemed income. That's all. Income also is taxable. Disallowance also is taxable. Yes or no? So what did Nirmala madam say? Okay, don't call it disallowed. I will call it deemed income. She inserted one more section. 40A anyway was there. 3A. 40A, 3A. That 20,000 is deemed to be income. If I disallow an expense, it is same as treating that as income. Last year you allowed it. This year I am treating it as an income. Treatment is the same, no? Yes. Understood? Everyone? Yeah, copy. Deemed income. Yes, correct. Yes. Huh. 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 Okay. Why? You already claimed it last year, no? This year, are you debiting anything to penal account? No. Previous year, correct. No, only debit will be only once, no? Expense account to payable account, then payable account to bank is the next year. Why are you recording twice? No, you do the journal entry, only one journal entry will come. Expense account to expense payable account. This year expense payable to bank. There ends the matter. You will never record it twice. The previous year's only one entry, one entire sequence. This time new interest expense will be one more debit. It will only be once. No, payable will go to bank account, payable to bank. That payable, the interest expense to payable, that will go to P&L. Oh, that's what you meant. Or you asked the other way. Correct. Interest expense to interest payable account, that interest expense account will go to P&L. Next year, payable entry will go to bank. Now, people were very smart. Nirmala auntie has caught me here also. So, what I do? I will make advance to cash. Advance to cash. Instead of expense booking, what I will do? Advance to cash. And tomorrow I will make an entry expense to advance. Advance to cash 20,000, 20,000. Have I made an expense? No, it's an advance. Next time I will reverse the advance entry, expense to advance. Now, is it allowed or disallowed? Because have I actually made any expense entry? I mean expense to, yeah, if you see the overall, ultimately advance to cash, expense to advance. Advance gets cancelled. Ultimately what's the entry? Expense to cash only, no? Allowed, disallowed? Disallowed. So you cannot show it as an advance also. You cannot show it as payable also. Whatever you do, if you pay cash more than 10,000, disallowed. Got it? So next entry, you see. 40A3 is disallowed even if payment was done before booking expense also. Deadly. Done? Yes. So guys, now next is exceptions. Exceptions. Exceptions are different. What are these exceptions? Even if it is more than 10,000 rupees, it is allowed. Those are the exceptions. So write down next one, exceptions. What do you mean by exceptions? Even if it is more than 10,000, it will be allowed. Exceptions. Next will be exceptions. Means no 40A3. No 40A3. First one, guys. Goods carriage agency. Payment to goods carriage agency. Write down payments to goods carriage agency. Payments to goods carriage agency. Person who is running goods carriage, lorry, etc. For them I can pay. How much? 35,000 per person per day I can pay. No problem. Cash payment 35,000 per person per day. Second example, write down. I'll dictate. These are only for my reference. I've written down, but I'll dictate. First one, what, guys? Payments to goods carriage, how much? 35,000. Why? Because goods carriage that time, this exception came before UPI and all that. That time, if I had to make a payment to lorry fellow, no, I have to go to the bank. Sometimes they will deliver goods where bank only is not there. That time they said, okay, cash payment you can pay up to 35,000. In this day and age, it is irrelevant. Everybody will have UPI, but this was during that time. It is still there, so we'll maintain that. Second one, write down, guys. A enters into a contract with B. A enters into a contract with B. A enters into a contract with B. As per the payment terms. As per the payment terms. $40,000 has to be paid in cash only. As per the payment terms, 40,000 should have been paid in cash only. However, A paid to Mr. B via bank account. However, A paid to Mr. B via bank account. Hence, B sued A. B sued A. B sued A as cash was not paid. Yes, then you can write down. 40A4 says, even though if it is violation of the contract, B cannot sue A. 40A4 overrides Indian Contract Act. So see, guys, as per Income Tax Act, you cannot pay cash. But as per Contract Act, you can pay cash also. Should I follow Income Tax Act or Contract Act? Income Tax Act. Write down. Guys, next one. Rule 6DD, that is 40A3, is not applicable to, I'll explain this for, then you can copy. Payment made to government, RBI, SBI, LIC, Agricultural Society, any bank. So if I make a payment to government more than 20,000, 10,000 rupees, it's okay. If I make a payment to RBI more than 10,000 in cash, no problem. If I make a payment to Life Insurance Corporation more than 10,000, no problem. If I pay to any bank more than 10,000, no problem. If I make a payment via letter of credit, bill of exchange, any book entry, any book adjustment, if I make a payment to any employee or a legal heir with respect to gratuity or retrenchment. I told you, no, gratuity payment. Retrenchment is also like resignation. Retrenchment is also like resignation. So when you resign and when you retire, basically, if I am giving you 50,000 rupees in cash, allowed or disallowed? Allowed. Gratuity I can pay. This is an MCQ question. A company paid gratuity 40,000 rupees in cash. Allowed or disallowed? Allowed. Like that, they'll play around only in MCQs. Copy these 4 points first. Any doubt? Letter of credit, bill of exchange, basically any payment to bank. Or if you make any book adjustment without actual payment of cash, like depreciation is a book adjustment, more than 10,000, no problem. Like somebody has to pay, somebody has to receive, you will make an adjustment and pay some cash, all that is allowed. Write those 4 points. Done. Next, guys, What about in a particular, they asked one question in the exam. Mr. A paid 20,000 rupees to Mr. B on a day which was a bank holiday. He paid 15,000 in cash. Allowed or disallowed? Disallowed or allowed? Bank holiday. 100% disallowed, guys. Guys, bank holiday means who cares? You can pay UPI, no? Correct? Earlier, no, that was a exception. If banking holiday was there that day, you could have paid in cash. But that got deleted after the introduction of UPI. Right? They have still asked that in the exam, but Mr. A paid to Mr. B 15,000 because that day bank was holiday, he could not go give a check, nothing doing. You can pay UPI. So after introduction of UPI, that point was deleted. So now allowed or disallowed? Disallowed. But what if in that particular village or town, bank only is not available? There are so many villages in India where banks are still not there. There can I pay cash? Yes. So guys, next point, next 3-4 points I will tell you, then you can copy. First, where banking facility only is not available, not holiday, banking facility is not available. Next, employee of a ship posted in a place other than usual, plus no bank account in that ship. Basically, you are an employee of a ship. You have posted in a place other than usual. And no bank account also in that ship. You are staying for more than 15 days in that ship. TDS has to be deducted. Cash payment can be made. So if you are an employee of a ship, let's say Cordelia Cruises, your actual ship leaves from Kochi, but now they have told you should go to another ship which leaves from Chennai. So you're in that ship. In that ship, bank account also is not there. And you're staying for 20 days in that ship because you're working for, because somebody else left, you're just filling him, that's all. Your actual ship is something else. So in that case, if they deduct TDS, they can give you cash. And if I make a payment to the agent, can I give cash? Yes. And also, you can payment made by authorized money changer. For example, on this road only many people are there, Western Union money transfer. Let's say I have gone abroad and I have brought back with me $500. Today I want to exchange that $500. I'll go to this Malaysia Center and some Western Union money transfer, give him $500. 500 into 80, 40,000 rupees. Can you give me in cash? Yes. Payment made by authorized money changer. Can I be pay in cash? Yes. Can I pay in cash? No. Like if I want from my dollars, can I pay 20,000? No. Can he pay me cash? Yes. That's why payment made to, no. Payment made by authorized money changer. In the exam, they'll ask you ulta. Payment made to authorized money changer more than 10,000. You are mucked up and gone what? Authorized money changers. You will write allowed and come. Results disallowed. Correct? Your CA results, what will happen? Disallowed. It is not payments made to. It is payments made by. Understood? All of you? Copy. So point number 5, 6, 7, 8. Copy. 5, 6, 7, 8. That's okay. Agent makes payment to us, it's fine. But I am making payment to the agent, then it is, I can make. If agent is making payment to us, for him it will be disallowed. Yeah. Got it. So banking company, banking facility done. Next, guys. Next, what about cottage industry? Cottage industry is an industry like, for example, your bamboo ladder, making bamboo ladder, bamboo weaving. Do they use power or it's handcrafted? Handcrafted. So there, if I make payment to them in cottage industry more than 10,000, it is allowed. Then what about in these by the sea in Chennai, Mangalore and all this coastal area? You can go directly buy from the fisherman. Direct, no need of any middleman. Fisherman will be there, go directly buy fish from him. I'm a hotel, ITC. I'll go to this fisherman and buy fish worth 30,000 rupees. Can I pay him in cash? Yes. 1 lakh rupees. Can I pay him in cash? Yes. Then one more doubt comes. Fisherman will not be alone. Fisherman will be in a group and there will be a head fisherman, main guy. All of them will give fish to the head fisherman, and head fisherman will act as an intermediary between ITC and all the fishermen. Now if you pay to the head fisherman who is the intermediary, will this exemption apply or no exemption? Ideally no exemption, but Nirmala madam said no problem, we will relax that. Even if you pay to the head fisherman, exemption is allowed. Ideally it is not, you are 100% correct. But Nirmala madam said no fisherman will directly sell like that. It is always through a union, head fisherman. So if you make a payment to head fisherman, it is deemed that it is made to the fisherman. This was only fish. Other people came and cried. What about crab? Correct. Then prawn. Those, how many of you eat meat? I mean, I eat egg, so I can't call myself pure vegetarian. But yeah, I eat egg. So you eat meat. Have you had prawn and all that? Prawn, those small fish, prawn, and you have your starfish. They are not fish species, right? They are crab. Crab is not fish. So those fellows also came and told, what about us? We are into crab farming. We are only selling prawns. What about us? We are only telling fish. What about us? So Nirmala aunty said, fish means crab. She changed the definition of fish only. Fish includes everything. Crab, then prawn, then scuttlefish, starfish, anything you take. Correct? Your other things. Crocodile and all will not come. Correct? Crocodile biryani. Right? No, that will not come. It is only those items. Snakes and all will not come. Yes. So guys, see next one. Cottage industry where there is no power. Then payment to a producer. Producer means what? Agricultural produce, forest, horticulture, poultry, fish or fish products. And fish products will be what? Oyster, squid, octopus, prawn, scuttlefish, crab. Have you had all these things? No, should try. Those, if you are eating non-veg, you should try all these things. No, it will be nice. How many of you have had oyster and all? Oyster, octopus? Octopus you have not had. Okay. So, oyster? You had oyster? Yes. Then prawn and all I am sure you would have had. Prawn, crab and all is normal, but oyster will be something different, I guess. Right? And octopus also you should try. In China they eat octopus live. Live octopus. It will be moving, they will add some masala to it and swallow the octopus. Inside it, octopus will start dancing. Right? Yes. No, but actually they will put some liquid, so once it goes inside your body, it will die. Octopus. Many people try. If you are having non-veg, you should try all this. Experience everything, guys. In Vietnam, no, they, on the road when I was going, they were selling grasshopper masala. Like we have chips, no, here on the roadside, chips. Like chips, they are selling grasshopper, worms, all those things. So if you are actually a non-vegetarian, you should try all that. Just for trying. You should have experiences. What is there in that? If I was a non-vegetarian, I would have definitely tried. But I genuinely don't like it. I've tried also. I genuinely don't like it. It has got nothing to do with religion or anything like that. But if you are, my friends, some of my friends are pure non-vegetarians. 100% veg, they will not even see that side. Correct? Those fellows built everything. They have tried everything. Crocodile, snake, everything they have tried. Yes. So cottage industry where there is no power. Payment to producer. Now they are discussing. Let's have bobo biryani. Right? Yes. Got it, guys? So that is all relating to 40A3. That's about it. So tomorrow we will solve questions on it, don't worry, and we will continue. Okay, guys, yes, good morning. Okay, there is some problem there, we'll just ask them to, that there has to just change the focus there, they'll come and do it. Okay, so in the previous session, let's quickly revise whatever we did, and today we have to finish the other areas. So yesterday, guys, we started off with section 36. So first part of section 36 was what? We spoke about interest. Where were you? 3 days, not acceptable, cannot bunk like that. You will miss out a lot. Please come to class regularly. Right, so 36, other deductions. Then you will say, I'll not understand. That is the problem, because you don't come to class. Please don't miss classes, guys. I told you yesterday only. Yesterday I was not there, sir, so I don't know, she'll tell. Right, so section 36, insurance premium. Yes, insurance on stock is covered. Keyman insurance is covered under 37, and health insurance of employees from an approved insurer is covered, provided no cash payment. It should only be through bank. So if 7,000 rupees is paid, stock insurance covered, health insurance not covered. Bonus and commission to employees allowed, but allowed only on payment basis, because it should be paid before the due date of filing the return. Next we saw employer's contribution. Employer's contribution is what? Recognized fund, recognized provident fund, statutory provident fund, then approved gratuity fund, approved superannuation fund, any other approved fund. Everything is allowed subject to section 43B, whereas unrecognized fund, it is disallowed. Next we saw employer's contribution of pension scheme, ATCCD, new pension scheme, national pension scheme, CG pension scheme, actual contribution or 14% of salary, and salary is what? Basic plus DA, basic plus DA. Yes, the subject to 43B. DA is dearness allowance. In the exam only they will ask you in the question. So animals used
in business other than stock in trade, deduction is allowed in the year in which the animal dies or it becomes permanently useless. The reduction is what? Cost of the animal minus scrap value. Scrap value will be carcass, bone and skin, etc. Then we saw bad debts, actual bad debts and provision for bad debts. Provision for bad debts is not allowed. Actual bad debts is allowed on loan. It is not allowed in PGBP, but on sales it is allowed. But the bad debt should be written off as irrecoverable and there is no need to prove that the debt has gone bad. On the other hand, 2 years later, 3 years later, whenever it is, if the money is recovered, then it is taxable only if the SSE is the same. If SSE changes, then it is a capital receipt, not taxable. And if SSE is the same, even if the business is discontinued, then it is taxable. Interest on loan, personal use not allowed. Business use, if it is a loan from other people, like other like friends, money lender, etc., then it is based on payable basis also. However, if it is a loan from scheduled bank, cooperative society, PFI, SFC, SIDB, etc., then it is allowed on what? Paid basis, not on payment basis, again subject to 43B. Yeah, so basically for previous year 24-25, if you pay by 31st October 25, if yes, you should pay. I mean, if it is paid before that, it is allowed in 24-25. If it is paid after that, it is allowed which year? 25-26. 25-26. Then we also saw the concept of ZCB, zero coupon bonds. So if the issue price is 70, whereas the redemption is 100, 30 rupees will be called as the discount. Not interest, it's called as a discount. It will be allowed across the next 2 years on a pro rata basis. Then STT, CTT allowed if he is engaged in the share trading or commodity trading. Family planning expenditure we saw, it's useless, but still it's allowed in 5 equal installments. Then we saw 40A2, that is excessive payments made to relatives. So relative I should see as per Income Tax Act, lineal ascendant, lineal descendant. Then holding subsidiary relationship is also called relative. Keyword is a specified person and anyone who has substantial interest. So if the substantial interest is greater than or equal to 20% of voting power, then yes, according to AO, excessive or unreasonable payment is disallowed. Yeah, next is 40A3. 40A3 is what you have to pay 10,000 rupees per. If you pay expenses of more than 10,000 rupees, then the entire amount will be disallowed. Permanent disallowance it is. It's not that later it is allowed. No, permanent disallowance. On the other hand, I told you receiver also what will happen? Receiver also it is, yeah, 100%. This is come off on top. You have to, from there you have to do. Here it's not working. I tried. I don't know if I have to do something else. Maybe there you have to zoom out. Oh, super. What did you do? Show me on aspect ratio. Thank you. Then can you just put it behind and later I will use it. Thank you. So yes, so 40A3, 269 ST. So there if you receive also guys, then more than 2 lakhs, the entire amount is penalty. Payment other than, basically the entire 40A3 is what? Payment. Payment other than account pay, check, account pay, bank draft, ECS, all those things. So other than those things, if you keep in mind, then this section also will come. That is, other than that will be what? Basically account pay check, account pay bank draft, ECS. ECS will be, and other payment will be NEFT, IMPS, RTGS, UPI, BEAM, all those things. But if it is other than this, means cash or bearer check or cross check, then yes, a person single day more than 10,000 rupees, this is what will come into the picture. So with the same chart of actual cost will come into play. Next, if the company makes payment of 15,000 cash to a person, 48 disallowance, and in 2,10,000, whatever is exceeding 10,000, that only will be disallowed. Then if you make a payable entry and pay it next year, ultimate entry will be expense to cash, hence it is disallowed, right? But you cannot disallow the expense because that year it was not allowed. So that will be called as deemed income. So that year you allow, next year you have made a payable to cash entry, it will be deemed to be the income. Treatment is the same. On the other hand, even if the expense has not been incurred, but you have paid advance in cash, that also will be what? 40A3 disallowed even if the payment was done before booking the expense. So even if it is done before booking the expense, this will come into play. Exceptions. No 40A3 for goods carriage, 35,000 per person per day, and other things. In the contract, if it is mentioned that you have to pay through bank, yet you pay through cash, no problem. And rule 60D, payment is made to government, payment is made to letter of credit, payment is made via book entry, and payment is made to by gratuity or retrenchment compensation amount up to 50,000, and payment to a place where banking facility not available, payment made to an employee of a ship who is not working in that particular ship but somewhere else and no bank account in that ship and is staying in that ship for 15 days, then you can deduct TDS and pay him cash. Payment made to agent, payment made by authorized money changer, cottage industry where there is no power, then fish, primary producer, agricultural produce, forest, horticulture, poultry, and all these things we saw. All these things we saw. Apart from that, 40A7 also we saw. That is, what are the cases where it is, 40A7 we didn't see, sorry. This is till here we had seen. So, let's see a couple of questions so that you'll understand. Just a concept capsule. Yeah, 35 AD we already saw. Preliminary all this we saw. Now 40 capital A. Check guys. Question 31. And one more thing guys. If I make any payment to, here you see, in 40A3. All these things is there. We have already seen. Reserve Bank of India, payment made by government, all these things. Absolutely no problem. Question 31. Check it out. Zen Private Limited provides the following information for the assessment year 25-26. Payment in cash for a bill amounting to rupees 1 lakh on a day. Answer. Disallowed. Payment in cash on 1/4/24 9,000 and 1/1/25 81,000 towards single bill. 9,000 no problem. 81,000 disallowed. Payment in cash on 1/10/24 sum of 1 lakh for different bills each of 7,500 to a single creditor. Payment made to a person in a single day. So disallowed. They never said for a transaction and all those things. Payment of 32,500 made in cash to Mira Transport Agency towards goods carriage. Allowed. Up to 35,000 it is allowed. Amount of 35,000 stood as audit fee payable claimed on accrual basis was paid through cross check. Disallowed. But guys, last year ka payment, but this year, current previous year they have paid. So this will be my payable is paid through cash. So this will be like a deemed income. So instead of saying disallowed, you should say deemed income, right? So this will be deemed income. Deemed income, right? Next. Purchase of scrap amounting to 60,000 on 26/11/2024 and the payment was made by cross check 20,000 and 25,000 by electronic clearing system. What do you think? 20,000 disallowed, 25,000 allowed. That's all. And the balance 15,000 on cash, that also disallowed. See guys, so easy it is. These all will be adjustments. In the like this standalone question will not come. In a big question, one small adjustment will be there. Half mark, 1 mark, like that. So questions will come like this only. Very easy it will be. So when you get that material, Q&A material which has the previous year's questions, then you will see. So most of the sums we cannot solve now until we finish the full chapter. Why? It's like a combination of all adjustments. That's why I'm giving you that. Concept capsule in class will solve like this. So that each concept one question, few questions. But overall questions will solve after the chapter gets over. Like for example in house property we solved one overall question if you remember. So like that, from that we can pick and choose. Remaining problems you can solve. So both of us, if we work hard together, 100% you can score 70 plus, 60 plus to easily in taxation. It's a very, very high scoring subject, but people often are very scared about this subject. There is nothing to be scared. Very simple. Right. So that is regarding 31. Then, once again. You see, 32. 3 lakh towards freight to railways. Guys, anything paid to government and all, no tension. 2 lakh towards purchase of agricultural produce. Yes, I am directly paying to whom? To the farmer. So, I can pay cash. 50,000 incurred towards purchase of raw material from Mr. Nahata. Separate payments 9,000, 22,000, 19,000 were made in cash single day. 9,000, no problem. 22,000 and 19,000, problem, right? Yes. Payment made for purchase of stationery by way of crossed account pay check. Guys, crossed account pay check. It's account pay check only. Account pay check also is crossed. Guys, crossing means what? Two parallel transverse lines. And then you have written account pay check. Instead of writing account pay check, they are simply telling crossed account pay check. Don't get confused. Correct or not? Yes. Allowed or disallowed? Allowed. Simple cross check will not have the dialogue account pay. Others will have the dialogue account pay. Okay? Yes. Arrears of salary amounting to 80,000 paid in cash to an employee was temporarily posted in a ship for 10 days continuously. Disallowed. Why? 15 days. See the condition. Read. Guys, condition is what? See, like that they'll ask. What you will see? Ship. Then you will jump. Other place. No problem. You did not see 15 days. More than 15 days. No, this fellow 10 days. So, disallowed. See, this is the interesting question. Correct? You should be alert while solving. 15 days is the answer. Everyone understood that? It's 15 days. That's why we wrote everything. See, with our running notes only, you are able to solve all questions. And you would have seen the notes also. Same only is there. Say in elongated form it is there in my notes. Here we are giving short form when we are writing the notes. That's why I also write every time. Before the start of every batch, sometimes before the start of every class, every chapter, I write on my own. Because things keep changing. So I write on my own what can be made better, then I'll make you write in class. Because when you are copying down, you will be revising. So one time studying is with me, then revision also with me, then at home also one revision. What more? Three times revision if you do, 100% you will pass. So you are actually studying income tax 2 to 3 times in the class itself per day. But you need to go home and study every single day, guys. Otherwise, gone. It requires dedicated effort to clear CA. So payment of 1,40,000 made in a village which is not served by any bank. Allowed. It's not that they're telling bank is closed and all. They're told bank only is not there. So allowed or disallowed? Allowed. Payment of premium of employees in cash like to LIC, but yes, any payment to LIC allowed. But if it's for somebody else, not allowed. Purchase of stock amounting to 60,000 due for payment on the day of Bharat Bandh. Guys, this is a day when banks are not working. What do you think? Allowed, disallowed? Disallowed. I told you these questions also they'll ask. Disallowed or allowed? Disallowed. I don't care if there's Bharat Bandh, you can do UPI. Payment made to a son of a deceased employee on account of gratuity. Allowed, you will shout. See the amount. Yes, less than 50,000. See, 95,000 disallowed. Full amount disallowed. You can't say up to 50,000 allowed, 45, no, full amount disallowed. Got it? So in this, I would say E and I were confusing. Others and all are easy. Maybe H also, EHI. They are interesting concepts. That's it. All this we have done, VRS we have done, preliminary expenses we have done. Each one we have understood the concept. Concept capsule, good enough to do. Now, other things guys. 40A7, this is what? Provision for gratuity. 40A9, that is contribution to unapproved funds. We will see. Guys, we have already discussed any contribution to unapproved funds will obviously be disallowed. It is not at all deductible. But if it is provision for gratuity also, it is disallowed. Any provision is disallowed. It should be an actual expense. Provision for bad debts disallowed. Provision for gratuity disallowed. It should be an expense. Mere provision will be disallowed. But if it is allowed only and only if the gratuity is payable during the year, or payment made to approved gratuity fund will be allowed. That we have seen already. Payment made to approved gratuity fund will be allowed. Normal gratuity fund and all, it will not be allowed because it's simply a book entry. And if the gratuity is payable during the year to somebody, then definitely it will be allowed, but everything is subject to 43B. Payment should be made before the due date of filing return of income. Payment to be made before due date of filing return of income. Unapproved gratuity fund disallowed. Right? Unapproved gratuity fund disallowed. Normal gratuity fund disallowed. What is allowed? Approved gratuity fund. Plus, in some cases where the payment is made during that year only, then also it is be allowed. 43B. Payment to be made before the return of income due date. Correct? Any contribution to unapproved funds will be disallowed and not deductible. This is 40A7 and 40A9. Any doubts? Copy. Copy down guys. Very simple. So now you revise and copy down. It will be easier. Before return of income due date. Due date, no? That is 31st October 2025. Due date. Done? Okay, guys. Next, write down section 37. This is what general section. So we have done everything, you see, all the other sections and all we have done. 47, all that. 43B is still pending, but now we have to go to 37 here. 30 to 36 we had done, no. Now 37 you have to finish, and then we have to do this 40 small a, all those things. So general deductions, section 37. Whatever is not possible under 32, 36 will now come under which section? 37. It will come under 37. Thank you, Didi. Thank you so much. Thank you. Thanks. Right? It will come under whatever was not possible under 32, 36 will now come under 37. Okay? Yes. Now, you tell me, in 32, 37, 32, 36 is not covered. In 37, can it be a capital expenditure or revenue expenditure? Revenue expenditure. Can it be personal or for business? Business. Should it be part of 32, 36 or other than 32, 36? That's all. So anything which is revenue expenditure, anything which is not capital, anything which is not personal, and anything which is not covered under 32, 36 will come under 37. It's a very general section. There is no heading there. 37 has no examples also in the law, but we have to create our own examples. Understood? So write down, guys, these 4 items. 30 to 36 should not be covered. Capital expenses should not be there. It should not be capital expenses. It should not be personal expenses. It should be wholly and exclusively allowed for profession or business, and it is not to be illegal. It is not illegal. Are you guys comfortable with tax now? Honestly, all of you? Yes or no? Yes, no, no, voice only. Yes or no, guys? Yeah? Any problem, come to me. I am right here for you. Anytime. 3 a.m. you message me, I'll reply. I don't sleep only. I'll be watching something, I'll be doing something. You message me anytime. If you call me, I'll not pick. If you call me during the day also, I won't pick. Message me. I'm always available on WhatsApp, right? Any doubt? If I don't reply, again remind me in a day or in some time you remind me, because so many messages will be coming. If you have a doubt, you can send me a voice clip. I will always respond. It may be delayed, but I'll always respond. Right? So you don't worry about income tax. You will 100% clear. Like that, all teachers are also like this only. We are a bunch of very passionate teachers. So we will do everything for you. You just need to study. That's all. So when you are copying down, you just assume what, I'll first explain and I'll show you like this. My job is to condense the entire my book only to 100 pages, so that one day before the exam, you will thank your book. You will not thank me. I don't care. You don't thank me. Thank the book. You will thank. My notes is a waste. My 200-page notes is a sheer waste one day before the exam, because you have too much to study. What will help you? Your handwritten book. You trust me, one day after the exam, you will text me and tell, sir, thank you for, we wrote all that, we were thinking of what all those things. It will really help us. Because CPT foundation fellows will know. Suddenly one day before the exam, where all to study? Accounts, where did you study? Difficult it is. Maths, what to study? What to do? We don't know. But now in GST one book, DT one book, just flip. Solve some important questions. Important adjustments you would have done. That's it, over. Go and write in full confidence. That is the idea. We are doing a smart way of studying. Right? Yes. Law also, I will give you, though I may not be taking law, somebody else is taking. There also, Prachi ma'am is excellent, you know it. But I will also give you my last minute revision book. Hard copy I will give you. That is the same as this only. You don't have to write. I have only made it for you. You just use it for revision. Okay? I will give it to you. Don't worry. Okay? So you can easily clear. So we are doing everything from our side. We just need equal amount of effort from your side. So all these people, each and every one of you should clear. That day study, you have to finish that day only. Not to be illegal, they added later. What used to happen was, this happened because of Tata. Can you believe Ratan Tata did anything illegal? Can you believe it if I tell? No. But he didn't do anything illegal, but he did something which was fair. He had these estates in northeast of the country, tea estates. There is this another form of terrorist called Maoist, Naxalite. Have you heard? These Maoists used to come and destroy all the tea bushes. And they used to demand from Tata company money, bribe. So Ratan Tata had no choice to protect his business. He had to give this bribe to him. And in the balance P&L account, what did he write? Bribe given to Maoist directly. That honest he was. And why did I give? He gave explanation also. We had to give bribe because otherwise they were destroying the entire tea bushes. My business was getting destroyed. If you write like that, do you think Nirmala aunty will allow? Nirmala aunty didn't know what to say. He's writing bribe paid to Maoist, debit to P&L account, allowed. Why? Is it 30 to 36? No. Is it capital expenditure? No. Is it personal? No. Is it exclusively used for business? Yes. Tata I can allow. What about Ambani and all? That's all then, over. For everything they will write whatever they feel like. So they inserted this point. That expense should not be illegal. Before this dialogue, no, in one case, one director was kidnapped in Bihar. They had to pay ransom, 5 lakh rupees to let the director leave. That was claimed as a business expenditure, believe it or not. And income tax, the court allowed it. Court allowed it. Why? This dialogue was not there. That's why they woke up and inserted the dialogue. What dialogue? It should not be illegal. Should not be illegal. So there was this guy called Dr. T.A. Qureshi. He was a chemist by day and a druggist by night. By night he was selling all powder, hashish, marijuana, weed, all those things he was selling. During the day, paracetamol, crocin. During night, drugs. Which business is booming? Drug business. There was a raid in his pharmacy and they caught hold of 1 crore worth of drugs. When he was doing his business income from business, that is your regular business, 1.5 crore. Loss from drug business, 1 crore, he put the loss like that and claimed. Allowed or not? Then he also said, income from drug business, 2 crore. Expenses, cut paid to middleman, 50 lakhs. Allowed or not? Guys, expenses from illegal business not allowed. But what about loss of illegal business? Government took away 1 crore of his mal. 1 crore they took away. Allowed or disallowed? Guys, loss is allowed. This section only talks about expense. Cut paid to middleman, allowed or not? No. But business loss because of, his logic is simple. When Nirmala aunty is taxing the illegal income, you should allow me illegal loss also, which is correct. Illegal loss allowed or not? Illegal loss, yes. Illegal expense? No. So guys, definitely it is allowed. I want you to read one case to understand that.
Page number 7.36, point number 1, please read. See, did you read? What is that? Loss is allowed, guys. Loss is allowed. But expenses is not allowed. Now they'll ask you guys, now this when they get one property, no, when you're going on the road, let's say you're going on the road without helmet. In Bangalore, it is very strict. Mama will catch you. Mama will be hiding behind tree. You will not know. Will be going nicely without helmet. So suddenly you will see Mama's stomach. Only that will be visible from the tree. Tree will be full covering his body. Only stomach, a nice brown color stomach will be outside in this khaki dress. Then he'll jump. Then you are like, oh no. Then you'll reverse the gadi. Behind one more Mama is coming. So you are sandwiched between two Mamas. So then he will come and take your key. Have you seen that scene happening? Taking your key. Now, is it seizure or confiscation? Has Mama seized your key or Mama confiscated your key? What do you think? Seize or confiscate? What do you think? Confiscate. Take a deep breath in, breathe out, gut feeling, reverse. Answer. Seize. Guys, seize means taking possession. Confiscate means taking ownership. You'll give the bike ownership to Mama? No. What have you given? Just the key, property you have given. Just the, not the property, possession actually. Possession. Right? You have just given the possession. Understood? Yes. So, ultimately, that's what it is. Capital expenditure. So, basically, that's a difference for your knowledge. Confiscation means what? Taking the ownership. So, when you get the drugs, government will seize or confiscate? Now, ulta. When you get drugs, no, government will seize first and then they will confiscate. The drugs will become government's property. Correct? Do you think politicians will put one line and do snorting? No, not that. The ownership will be transferred to them. Right? All the ministers on one line they are putting and snorting. Right? No. It's not that. Correct? It is what? It is ultimately, what do you say? Confiscate. So, when they will not see, they will first seize, you're right. But then eventually ownership, they will never give back the ownership. Oh, okay, I'll use the cash. In this, pay 70% income tax, take 30% drugs, keep it. No. Those are banned substances. Narcotic and Psychotropic Substances Act, NDPS. Deadly law it is. Got it? That's a difference between these things. So, one by one you write down, guys. One by one you write down. Point number 1. Illegal expenses not allowed. Illegal expenses not allowed. Next point, loss is allowed. In the same point only, next after one hyphen you write or a semicolon, after semicolon you can say loss is allowed. You just read now, Dr. T.A. Qureshi. Illegal expense not allowed. Bribe to Maoist not allowed. Loss allowed. T.A. Qureshi, where it's, will T.A. Qureshi ever get that drugs back? No. Isn't it a full business loss for him? Yes. Can that be claimed? Yes. When illegal income you are taxing, illegal loss also you should allow. Second one, guys. In explanation 1 you say, you can write on expenses incurred towards an income, expenses incurred towards an income which is an offense, slash prohibited by law, which is an offense slash prohibited by law, is not allowed. So guys, example, Indian law, foreign law, both are covered. And guys, I'll explain, then you can copy this. And guys, have you seen this? There was actually, during COVID, second wave, we all ate one medicine like chocolate every day. Which one? Dolo. See, you also know. You remember. Morning, get up, Dolo. Afternoon, after breakfast, Dolo. Every doctor used to tell Dolo, Dolo. You know why? Later they came to know. There is a 1,000 crore scam behind Dolo. Why? Doctors were prescribed Dolo. Dolo company went and told, you please prescribe my tablet. I will give you, after COVID is over, a trip to South Africa free. I will give you trip to wherever you want to go. Maldives free. If you want with your family, you go. Other people's family, you go. No problem. Correct? I will give you. Correct? Full, that money amounted to 1,000 crore. You can check on Google. The Dolo scam, it will come 1,000 plus crore scam of giving freebies. Freebies means free things. Every doctor used to prescribe Dolo. It's just that you will go to the doctor, pharmacy, to the doctor and say, sir, this is my product Dolo. You please prescribe this to all your patients. What will I get in return? Sir, you tell what you want, sir. I'll give you. Now tell me. For this pharma company, they have actually spent 1,000 crore like business promotion expense by giving freebie. But they are getting so much money because of the business that the doctors are giving. This 1,000 crore is allowed or not? 1,000 crore, isn't it business promotion expense? Yes. Telling the doctor, please do it. But is it allowed or not? It is illegal in nature. No, it is against medical council guidelines. You can't do all these things. Can a chartered accountant in practice advertise his business and get business by going on the TV and advertising about himself? No. A CA is not supposed to demand work. A CA should get work on its own. They should come to you because of the name. You joined our academy because it had a name. You came here, saw the infrastructure, you saw who the faculty are, you know, okay, you trusted and you joined because of the name. But we as CA academies can advertise, no problem. We are allowed. Even though we are CAs, we are not doing practice. Practicing CAs, can they advertise their business? No. Can they advertise their practice? No, because they are not doing a business, they are doing practice. Similarly, doctors also cannot take money like this and then prescribe one certain kind of medication. So they, in 2022, after the Dolo scam only, government inserted a point,
It is prohibited to give benefit or perquisite against any guideline. So what guideline was there? Indian Council of Medical Research, ICMR guideline clearly told you should not give any freebie to doctor. So example, freebies given to doctors, Dolo scam, allowed or disallowed for Dolo company? Disallowed. Full 1000 crore will be disallowed. And any offense which is compoundable will be disallowed. Compoundable means what, guys? Very simple. If any offense, it says no, fine or imprisonment or both. Fine or imprisonment or both. Can you escape imprisonment by paying fine? Yes, because it uses the word or. Only if it is very severe, both will come. Otherwise, can you go to the court, pay one fine of let's say 1 lakh rupees and escape imprisonment? Yes. These are called as compoundable offense. What is non-compoundable offense? In law only they put a dialogue, fine and imprisonment. Both are there. So you cannot escape any imprisonment. Fine and imprisonment. Understood? So fine or imprisonment or both is one thing. Then fine and imprisonment is one more thing. So tell me, if it is compounding offense, whether in India or outside India, allowed or disallowed, lawmaker says any compoundable offense if you have paid 1 lakh rupees. For compoundable offense if you have paid 1 lakh rupees, allowed or disallowed? Disallowed. Because you are escaping imprisonment, I will not give you any tax benefit on it. Allowed or disallowed? Disallowed. Did you understand this, all of you? All of you did you understand? First one is what? Illegal expenses, not allowed. Illegal loss, loss, allowed. Then a second one is expenses. Expenses, offense prohibited by law. Indian law, foreign law, disallowed. Prohibited to give benefit or perquisite under any, against any guideline. That is freebie given to doctors. Third one, compounding offense. India or outside India. Whatever it, allowed or disallowed? Disallowed. Okay. What is compoundable offense? Fine or imprisonment or both is called compoundable offense. You will escape imprisonment by paying fine. What is non-compoundable offense? Fine and imprisonment. Can you escape imprisonment? No. Got it, guys? So if you are paying any fine for a compoundable offense, allowed or disallowed? Disallowed. Copy. Everyone understood? Yes or no? Yes. Copy, guys. Copy down. you don't understand my amazing handwriting, please let me know. I will tell which part you didn't understand. By the time classes get over, you will all need glasses. Those of you who already glasses, power will increase. Seeing my handwriting. Done? Yes. So this is regarding expenses, only those two. Other things are there. Let's continue. This is regarding all this. Now guys, other parts quickly. C. Nothing is given. I'll first explain, then you can copy. Nothing is given about salary from 32, 36, right? So the most important expense for any business is what? Salary. Where will it come? 37. Imagine. You would think there's a separate section for salary. No. So in 37, what all can come? No personal expense, no capital expense, wholly and exclusively for business, and it should not be under 32, 36. From 32, 36 we saw, did you see anywhere salary? No. Salary will come under 37. So salary for employees, salary for working partner, salary for sleeping partner is not covered, because Income Tax Act says sleeping partner will not get salary. So IPA means Indian Partnership Act. Indian Partnership Act may allow salary to sleeping partner via partnership deed. But in Income Tax Act, it is not allowed. You would have, if you remember, CA Foundation Partnership Act. What did it say in that? Salary is disallowed. Salary is allowed for sleeping partner if the partnership deeds agrees. Partnership Act. But in Income Tax Act, it is not allowed. Fourth one, directors. Directors, whether it is contract of service, contract for service, contract of service is employee, contract for service, consultancy. Whatever amount you pay is covered under 37. Leave salary also means if you are not bunking office only, all the leaves will get accumulated and they'll give you some leave compensation. That also is part of 37, but it is subject to 43B. You cannot keep it as payable. You should actually pay it. When should you pay it? Before the due date of filing the return. Then advertisement expenses. Advertisement in book, booklet, tract, pamphlet, etc. is not allowed if it is for a political party. Guys, that will become like a political donation. That is why if Reliance advertises in, BJP book, BJP on pamphlet is there, below Reliance, Anant Ambani's photo is there, like this. Correct? Now, that is allowed or disallowed? Disallowed. Correct? Those things will be disallowed. Got it? So, basically, if you cannot do anything for
You cannot say BJP Premier League sponsored by Reliance. No, all this you cannot do. You should not support any political party openly and pay money to them. It will be disallowed. If you want to do it, but you will not get any tax exemption. Right? Yes, these two things you copy, other things you will continue. These two also you can write down actually, I'll show you. Guys, penalty for breach of contract is allowed. Now you and I have a contract, I commit a breach. Breach means violation, I don't follow the law. You will sue me. I won't follow the contract. You will sue me for 10,000 rupees. I have to pay from my pocket 10,000 rupees. Isn't it an expense? Yes. Penalty for breach of contract, that will be allowed. But penalty for breach of law, that will become illegal. It is allowed or not allowed? That is not allowed. Anything illegal or anything which you broke the law, why will I give you a tax benefit for breaking the law? So that is not allowed. But if I break the contract, it is well within the law, but terms and conditions I did not follow. So rental agreement, they say 2 months you should give us notice. If you don't give notice for 2 months, then there will be a penalty of 1 month rent. Means tomorrow only if I have to leave the building, okay, I will take 3 months rent penalty. Is it illegal? No, it's agreed in the contract. So if I am paying 3 months rent, should I take it in my debit to my P&L account? Yes, I can. But in this room, I am doing illegal activities, drug business I am doing. Then legal or illegal? Illegal. That obviously will not be allowed. Rent paid for what? Drug business. Allowed or disallowed? Disallowed. So penalty for breach of contract allowed. Breach of law not allowed. Copy. I'll show you from here. Copy down. So these things if you have no guys becomes very easy. No tension only. 37 very easy section. Which one? Tract. T-R-A-C-T. Tract or pamphlet. Everything is in another word for booklet is called tract. T-R-A-C-T. That small booklet. Outside it is there, no? Okay, it's a 3-4 pages booklet. That is called tract. T-R-A-C-T. Tract. Pamphlet. Etc.
Are we done? Okay. So this is regarding what, guys? Now tell me, income tax I am paying, will it be allowed as an expense? It's a weird question. I am paying income tax to government. Will that be allowed to be debited to P&L account? Guys, you will pay income tax on income, no? In computing that income, you will allow it to be debited. Think about it. You will pay income tax on the final income only, right? If you say you will allow it to be debited, then income will reduce. Then again you have to compute tax on reduced income. Again you will add that debit to P&L account. It will be never ending. Income tax is an appropriation of profit actually. Once you figure out the profit, then you will put the tax on that. So income tax will never be allowed. What type of tax will be allowed then? What about GST? GST, assuming you are taking it as an expense and not as a credit, I told you input credit, then yes, sales tax, all that can be taken. Income tax is a big no. So if you see, direct taxes, including surcharge and cess, income tax no, interest no, penalty is a no, nothing is allowed. But indirect taxes, yes, GST allowed, interest is allowed, penalty on GST not allowed because penalty is for breaking the law. But indirect taxes, it is what? Subject to 43B. Subject to what? 43B. 43B. Apart from that, guys, so guys, this, if I pay GST and interest on GST, if I pay to the government before the due date, then 43B, it is allowed. Otherwise, no. No payable entry and all. Diwali expenses, festival expenses, allowed. Diwali expense. During Diwali, I will give sweets and all those things. Allowed or not? Yes. Premium for keyman insurance policy, allowed. Because if something happens to that person, the company will get insurance money. Gift given to employees, allowed. Yes, I can give gift to employees also. Everything can be debited to P&L account, no problem. Other expenses, telephone, audit fee, printing, stationery, and everything is allowed, guys. These are all examples. Understood? Copy. Easy, no? It's all general examples only I am giving. That's all. So write down. So direct tax, my dear friends, not allowed. Indirect tax, allowed. But penalty, not allowed. Penalty is always for breaking the law. Copy down. Done? Yes. So this all done, guys. Then few more are there. Now after this, what happens is, now corporate social responsibility. There is something called CSR. You would have heard. What is CSR? Corporate social responsibility. Which means what? If you are a big company with net worth, let's say 500 crore or more, turnover 1000 crore or more, large companies, according to Companies Act, you have to donate 2% of your average net profit. Last 3 years net profit you calculate, 2% you have to mandatorily donate, because it is your duty to give back to society. The question that I want to ask is, when you are donating this 2%, will you allow that? Let's say 2% comes up to 100 crore. So in my P&L account, I am actually spending 100 crore to the betterment, for the betterment of society. Will income tax allow that 100 crore to be debited to P&L account? Think properly. In my company law books, I am debiting 100 crore. Towards what? Betterment of society. Income tax department, will it allow this 100 crore? First of all, is it revenue expenditure? Yeah. Is it personal? No. Is it for business though? May not be, but still I am doing it because of law, legal requirement. Is it illegal? Definitely not. What do you think? Guys, if I allow 100 crore to be debited, what is the tax saving on 100 crore? 30 crore. Nirmala aunty is telling, first of all, I have asked you to donate 2%, 100 crore. In that, you also want tax benefit. If I allow it to be debited, you want to get tax benefit. Yes, how much benefit you will get? 30 crore. Which means, actually, what is your contribution? Only 70 crore. So Nirmala aunty said, nothing doing. If you are donating 2%, then that full 2% money is disallowed under section 37. But if you are using it purely for your own business under 32-36, then I will allow, no problem. But then they said, ma'am, then what is the benefit? Something you should give me, no? Then they said, okay, no problem. Under chapter 6A deductions, there are some things called Prime Minister National Relief Fund. There and all, if you actually give, no problem, I'll allow you a deduction not under 36 but under section 80G. After you compute all the income, I will give you some more items to subtract. In those items to subtract, you can also add this expense. Got it? So the gist of the story, whatever I told you, see here, just to explain again, I'll neatly explain and then you can copy down. See guys, CSR is section 135 of Companies Act. 2% of average net profit is to be taken. Net worth of which companies, guys? Any company with net worth 500 crore or more, or turnover 1000 crore or more, or net profit 5 crore or more. In the preceding 3 years. Now, for example, in 100 crore is my 2%, right? So, 80 crore if it is spent, 20 crore it is not spent, then I should set aside, not set aside, all those things. That you leave. That is in company law thing, no need to write all that. Anyway, so in section 30, only this part, this example you don't write. Basically 2% of average net profit or the preceding 3 years. And which company? Net worth 500 crore, turnover 1000 crore, net profit 5 crore. Section 135 Companies Act, CSR. Section 37, what does it say? It is disallowed. It is disallowed. Right? Now, CSR, Income Tax Act, expenditure under section 37 will be disallowed. But if CSR comes under 30-36, as I told you, since it is used for business, then it will be allowed. Only under 37 it is disallowed. Only under 37 it is disallowed. And one more interesting part, I'll make you write everything, don't worry about any of those things, absolutely don't worry. So ultimately what I'm trying to tell, CSR expenditure, only if it comes under 30-36 it will be allowed. Any other thing, disallowed. Right? However, This last part I will explain later, don't worry. So just write this down, guys. CSR, no need of example because it is company law portion, not needed for us, leave it. Just write this part. CSR, 135 Companies Act, point number 1 and 2, and which company requires CSR? Net worth 100 crore, turnover, sorry, net worth 500 crore, turnover 1000 crore, net profit 5 crore. And then this section 37 disallowed, that one you write down. And then I will scroll down and show you the other thing. No need of example, leave it. Right, 135 of Companies Act. %2 of average net profit preceding 3 years, and section 37 is disallowed. And what is that net profit? I mean, what is the, which companies? Net worth more than or equal to 500 crore, or turnover more than or equal to 1000 crore, or net profit 1000 more than or equal to 5 CR. Done. But guys, you see here again, but if CSR expenditure comes under 3236, then it is allowed. CSR expenditure comes under 3236, then it is this line you write down. Sorry, this one. CSR under Income Tax Act expenditure under 37 disallowed, but if CSR expenditure comes under 3236, then it is allowed. CSR expenditure under 37 disallowed. But CSR comes under 3236 disallowed. Right. Now, I told you, no, it is also allowed under section 80G. What is 80G? Donation. If you donate something, final deduction you will get under 80G. 80G is after all the heads of income you will put in one place. Income from salary, income from house property, PGBP, all those things. In the end, you will take all the income and then give you deduction under 80G. So here now guys, there is one interesting part in 80G. So 4 funds are there. These 4 funds you have to remember. These 4 funds you have to remember, write down. First one, Prime Minister's National Relief Fund. Prime Minister's National Relief Fund. Prime Minister's National Relief Fund. Next one, PM Cares Fund. Yes, I'll explain. You write down these 4 funds. Prime Minister's National Relief Fund. Second one, PM Cares Fund. Yes, this comes under ATG, but I'll explain. Third one, Clean Ganga Fund. Clean Ganga Fund. Fourth one, Swachh Bharat Kosh. Swachh Bharat Kosh. Then below, write down 1 and 2. If the company donates under 1 and 2, if the company donates under 1 and 2, it will be part of CSR expenditure. If the company donates under 1 and 2, it will be part of CSR expenditure. It will be part of CSR expenditure and disallowed. We just discussed now, it is disallowed and disallowed. Disallowed under Income Tax Act. And disallowed under Income Tax Act. Disallowed under Income Tax Act. However, it is allowed as a deduction under section 80G. However, it is allowed as a deduction under section 80G. Next one. However, if company spends amounts under 3 and 4, or if company spends amounts under 3 and 4, then if the company takes it under CSR, if the company takes it under CSR, if the company takes it under CSR, as per the CSR policy, as per the CSR policy, as per the CSR policy, then it would obviously be disallowed under Income Tax Act. It would obviously be disallowed under Income Tax Act. It would obviously be disallowed under Income Tax Act. And even under ATG, it will not be allowed. This is the catch. Even under ATG, it will not be allowed. Even under ATG, it will not be allowed. Even under ATG, it will not be. This is an adjustment they'll ask you. However, if 3 and 4, if 3 and 4, that is which one? Clean Ganga Fund, Swachh Bharat Kosh. If under, but however, if 3 and 4, if 3 and 4 are not part of CSR expenditure, however, if 3 and 4 are not part of CSR expenditure, within bracket, that is not part of 2%. That is not part of 2%. But the company spends extra money. But the company spends extra money. Then ATG will apply. Then ATG will apply. Please go through this. If you understood, let me know. If you didn't understand also, let me know. This is a important adjustment here, because the law has been worded in such a way that for government's intention is Clean Ganga Fund and Swachh Bharat Kosh, try not to take it under CSR in that 2%. Please spend extra from your pocket. If you spend extra from your pocket, you will get ATG. Whereas Prime Minister's National Relief Fund and PM Cares Fund, if you take it as CSR, then it's part of that 2%. ATG will, ATG also will apply. No problem. I will give you ATG. But it is, in CSR, it will be disallowed. In CSR, it will be disallowed, but I will give you ATG. But Clean Ganga Fund and Swachh Bharat Kosh. What about this? This one, I'm very clear about it. Don't take it as CSR. Pay extra. Pay extra, take the benefit. But if you take it part of CSR, then you cannot take it under ATG. Understood? Yes or no? Read again. Read again. This is an interesting point. Read the explanation, guys. You'll get it. If you have any doubts, ask me. Which one? Huh? Huh? ATG also is IT Act only. CSR you mean? CSR it will be added back, but because you should not take it under CSR only. See, in CSR, the directors will make a policy. This year, this 100 crore I have to spend. No, I will spend this much in this much in this. In that, they are trying to tell, please don't include Clean Ganga Fund and Swachh Bharat Kosh. They are just saying, please spend extra. 100 crore you give it off other things, poverty, employment, all that you do. Extra you spend to clean the Ganga and also to the Swachh Bharat Kosh, both relate to environment. There, if you spend extra, you will get one more deduction, ATG. You can subtract that amount from your total income later. Yeah, it will be not taken only as CSR, so that benefit you will get. But if you take it as CSR, means in that 100 crore only you want to put 20 crore as Clean Ganga Fund and Swachh Bharat Kosh. Anyway, CSR it will be disallowed, and ATG also you will not come. Which means they are trying to tell, if you take it part of your CSR, you will not get any benefit. Instead, use that 100 crore for other things. Please give extra money here to Clean Ganga Fund and Swachh Bharat Kosh. Got it? But 1 and 2, no problem. You take it in CSR, anyway there it will be disallowed. But under ATG, I will allow. Got it? Is it clear? This is purely because of the wordings in the BEAR Act. If you go to ATG, for PM National Relief Fund and PM Cares Fund, nothing is given. But for Clean Ganga Fund and Swachh Bharat Kosh, they have clearly said that this will apply only if you don't take it under CSR there. That's the reason. The intention is very simple. Government wants you to spend extra money over and above the normal thing to which one? Clean Ganga Fund and Swachh Bharat Kosh. Got it? Yes, all of you? Last 2-3 points, then you can take a break. That's it, guys. Next. Dividend paid, obviously not allowed, guys. Dividend is an appropriation of profit. Dividend paid, not allowed. Company declares dividend, you pay from the pocket. Is it an appropriation of profit or is it expense? Appropriation. Embezzlement of cash. Embezzlement is cash stolen, theft. If it's a theft, is it an expense or a loss? Loss. So 37(1) it will not come, but it will be taken as a business loss. Loss will be allowed. Which one? I've already made you write, so don't write all those things. Only write this. Dividend paid. Dividend paid, not allowed. Embezzlement of cash, 37(1). Loss is allowed. Right? Next. Last point, guys. Embezzlement of cash, 37(1) not covered. Loss will be allowed. Last one is very interesting. This is feasibility study of an abandoned project. What is this? PVR has something called as director's cut in Bangalore. On weekends, if you go, tickets will be 2000 rupees. This is very high-end, luxurious cinema hall. They wanted to open the cinema hall across India. They went to Chennai and said, will you pay 1000 rupees? They say, Poda. In Chennai, if all the movie theaters are capped at 200 rupees. Bangalore also they introduced, nobody will follow it. So, it is capped at 200 rupees. Chennai, failure. All other cities, failure. Only in Mumbai, Delhi and Bangalore, this director's cut is there. So they did a feasibility study across various cities to introduce this, and they spent a lot of money. This was done by PVR Cinemas, Priya Village Roadshow. PVR full form is Priya Village Roadshow. So PVR did it, it failed. Then they spent almost, let's say, 1 crore rupees in this feasibility study, and they said it's not going to work out. They are debiting it to P&L account, allowed or not? Allowed. Feasibility study on abandoned project is a revenue expenditure, allowed under which section? 37. Allowed under 37. Write down. Allowed. Feasibility study on abandoned project. Feasibility study on abandoned project. Feasibility study on abandoned project. Allowed as a revenue expenditure. Allowed as a revenue expenditure under 37. That's about it.